We're going to be streaming stocks, options, futures, looking at technical analysis, watching SPY, BBBY, see these AI stocks, what they're doing, see if we get a sell in May, go away. I'm going to get a setup here. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at Happy Money YT, as well as Discord. Link for those will be in the description. Get stuff sorted here. Pretty big gap up on SPY there. Meta had good earnings, and yeah, eBay's was pretty good. A few things that caused some rally. Got BBY on the right hand side there, a little gap up, 20%. Now that it's this cheap is pretty much nothing. Intraday swings are getting pretty large, so I think it did see almost 20% this morning. Okay, I'm gonna tweet out the link for the streams, and I appreciate you guys. Let's share it as well, retweet it. Okay. Morning, Rally. Good morning, Isaac. Giving a Discord link here. I'll pin this in the chat. You're welcome to join. If you have joined and you're a member, DM me and I'll give you Happy Crew Roll. Morning, Buzzin'. pretty big candles there this morning on SPY. Not sure if we had some data that came out. I'm checking. Oh, jobless claims came out today. So continued jobless claims got 830. Forecast was 187.8. Actual was 185.8. So very close to forecast. I guess a little lower than forecast. No, I think bad news is bad news now. We'll see though. Recessionary fears might cause a sell-off in the market more than interest rates. We got GDP price index. Oh, GDP is higher than expected. Interesting. GDP sales were higher. Initial jobless claims was lower than forecast. PCE prices. What? 0.5 was forecast and it was 4.2? Not good. We get nat gas storage at 10:30. Bond auction. Pending home sales at 10. More bond auction stuff. Yeah, advanced Q1 GDP plus 1.1%. Consensus was plus 2%. Jobless claims was negative 16,000. So 230,000. Survey was 249. Oh, Ryan Cohen tweet again. Corporate America is a wolf in liberals' clothing. Huh. That is up 14. Wow. Wow. Probably had a push on the futures. He's ripping. Those futures I opened up last night, those longs I opened up here, I actually closed them out here. So took profits on it. Yeah, could have been green on yesterday if I held though. That's crazy. FRC is pretty much flat. Look at that. Morning, Ilowin. Hey Julian, first Head and Shoulders. Not seeing that yet. We have a head, we have a shoulder. Need to rally up here and build another shoulder. Or even a gap up, which we're getting. Not really today. Need a big gap up. Make an island bottom. See this island top and this Head and Shoulders? Yeah. Played out. Stupid I didn't listen to the TA. I was talking about this and I'm like, I don't think so. Given both of these gaps were from news. But OTC valuation? What do you mean? Valuation doesn't change. Just trading on a different exchange, more or less. Still tradable, just on a different market. Thanks, Hylowin. I appreciate it, man. There's no way to know that rally. It's not like it's not. There's no way to know that. I mean, you can look at other stocks that have gone to OTC and see what's happened with them. I mean, we might have a big sell-off into OTC. I really don't know. So you just have to look at kind of the market cap where it's at now, and if you think that's good value. And if it does get a buyer, depending on what happens with this restructuring, basically, will shareholders be made right? But even before that, I mean, you could, of course, have moves in OTC. As we're seeing here, I've got Revlon. It's on my watch list. It was up 55% yesterday. It's illiquid, and this is what OTC most likely look like. Fortunately, Fox D was up 48% yesterday, but you know, these are trading down at. These are way low. These are fractions of a penny. Revlon is what, 9 cents? Went from 5 cents, 5.65 to 9 cents yesterday. For me, my position, I was trying to just day trade. If it gets profitable, if we get some kind of move, I'll probably close it out for profit before OTC to not mess with it. But if not, I'm happy to hold through it and see if we make it out on the other side. Here, Winnipeg. Nice. Good morning, guys. Hope you're well rested, hydrated, fed, if that's what you do in the morning. Thank you for your thumbs up. Good pre-market thumbs up always gets the day going right. All 8 of those. Zip Trader has another stock coming this morning. So see if it comes to my email or my text faster. Last time it came and the stock, there's algos on it for sure at this point. The stock was up immediately. There's no chance. Let's see how his picks are faring. Wasn't it AEMD? The initial pop, yeah, wasn't much left on that one. Crazy, man. MasterCard says consumer spending remains resilient despite tough economy. Well, yeah, they're spending on credit cards that they're not paying. There are now 2 real estate agents for every home for sale. Yikes. Avenue Capital buys part of Caesars COVID-19 insurance claim at steep discount. The U.S. Secret Service revealed that the agency may be tracking websites like OnlyFans. Belgian Prime Minister jailed. Belgian aid worker Oliver Vanda Castile is taken hostage by Iran. U.S. calls on Iran government to immediately release oil tanker. Iran? Why am I saying it funny? Iran. Every week I send a letter to tens of thousands of investors. Everybody will support tries to stop money. Subscribe here. Yeah, the money supply thing is pretty crazy. And another country or two quit using the dollar for trade. Look at Ryan Cohen's tweet here. Getting more active. Maybe GME's getting to a bottom. He needs a gap fill and maybe a 15 or 16 retest. U.S. Treasury yield rises after U.S. data 10-year yield up 5.3 basis points. Nearly half of American states unlikely to buy an electric vehicle as their next car. Credit Suisse employee bonuses tied to AT1 bonds also wiped out. I shared some crazy trades on Wall Street Bets on Discord. Proper Wall Street Bets gambling that actually worked out, and then some big gains on FRC puts. U.S. Navy says Iran seizes Marshall Islands. What? This is why they're saying release it. Flagged oil tanker in Gulf of Oman amid tensions over Iran's nuclear program. Marshall Islands flagged. Okay, I thought they seized Marshall Islands. They seized a Marshall Islands flagged oil tanker. Italy's economy minister government cannot ignore the fact that banks are not increasing deposit rates while increasing lending rates. Rent in the U.S. fell last month for the first time since March 2020. Everything points to a relatively mild recession given the amount of stimulus that was paid to people and the money they have left over. I don't have any money left over. Oh, that gas long, maybe. This thing's just chopping around, man. Morning, Ace. Wonder what everyone's up to last night. SHIB? I looked at it before. Want that double bottom? Oh, this one right here. We'll see. I've had varying success TA on crypto. Seems it all gets wiped out in the middle of the night. Does something weird. Hype. Hey, Benjamin. Let's see what's going on here. On some levels. I'm gonna delete the BBBY ones too. A little fresh start. Ignore that wick. That was a weird level yesterday. Kind of why it shook me out. I think it was more of a diagonal level it was testing. We'll draw those in a second. Those are kind of the micro levels. I mean, really, we've broken through all those lows. You know, all of these supports. Bouncing back out of it. Looking for some kind of bounce to maybe grab a short. Maybe today, maybe tomorrow. Got this channel it kind of broke out of actually with today's open. Yeah, today's open. And maybe it'll come down and retest, I don't know. Longer term's definitely bearish on that daily. Let's see. Thanks, Eliwin. Morning, SHF. Thanks for your likes, too, guys. Got 11 before the bell. Well done. Get everyone in here before that ding ding. Let's see what's going on pre-market. Easy Ship enters into a multi-year agreement to support eBay international shipping. Owens Corning is maintained at sell by Goldman Sachs. Meta is top 10 on the pre-market gainers. That's crazy. Up 15%. Lots of return shares. Matty Gas getting a little move. Let's GameStop. Is that borrow fee still up? Borrow fee came down some. It's at 15% instead of 20. BBBY borrow fee is just continuing to slowly come down, which is attributable to that all the new shares, I would say. The lowest pay a worker would accept for taking a new job rose to $75,811 a year in March. Russian Foreign Ministry says U.S. request for consular visit to Wall Street Journal's reporter Gershkovich from May 11th was rejected. If ChatGPT technology replaces software engineers, India would be impacted the most. Good point. Even a mild recession could cause stocks to crater by 15% or more. Says JP Morgan's Milanovic. Mark Zuckerberg's Meta 2022 base salary remained at $1, the same as in 2021 and 2020. His total compensation for 2022 rose to $27 million from $26 million in 2021. Goldman Sachs says it raises its forecast for peak Bank of England rates to 5%. JP Morgan has said that while buying or selling zero-date options tended to be profitable in the first 10 minutes of trading, 2/3 of the gains came in the first minute. Wow. I might try and catch pretty soon I'll be chairman. I forgot what account to try and pick up this zip trader pick on. So slow. TD is so slow. E-Trade I've already used some day trades. I have one more. I just wait, maybe on my phone actually. So slow. I don't know if there's any way I'm gonna catch it. I'm gonna try though. BBY 11.5%. Some levels on here drawn as well. Pretty nice little support. Tested yesterday. Tested pre-market. Also tested back here. I think we might be building some kind of support. Maybe. And we'll do one at the all-time low. Crazy they sold it off right in the close. That was ugly. We're basically back where we were yesterday with a 15% gap up because of this just crazy sell-off into the close. Oh, nat gas is still going. BBBY dancing around. Jeez. Oil's sold off last week. Hey, John. Another 25K this morning? Wow. What's your plan with that? You should maybe change your name back to Meme Stonker or whatever it was. Sorry, I might get a little feedback. My phone's unlocked next to my mic. It starts acting up. Gap is laying off 1,800 corporate workers. MasterCard says company sees signs of inflation cooling. HLS, he's already done it? Alright, thanks. What the heck? HILS. Dude, I thought it was at market open. Can I get this thing to fill? Well, it won't fill me for some reason. Okay, well, there it is, HILS. TD won't fill me. Came in email first, that's interesting. I'm putting extended hours, but then on the order it's not showing extended hours. Well, here's the zip trader pick, HILS. I don't know, I didn't get filled. It's pretty illiquid, I think. He's just picking like sketch stuff now. Super low float, 4 million. Oh my gosh, man. Dude. I'm canceling this order. I don't know why it didn't fill me. Whatever. That's a zip trader pick. Yeah, I can't day trade on this brokerage. It's way too slow on it. And 11 cents, Kenny. Sell it on a run. 10K into OTC. Alright. Morning, Brandon. SPY's moving up here. Market's about to open. Uh-oh, BB show got you hyped. Oh, my SPY calls? I had futures. I had future contracts. So, no, I didn't though. I closed them out. I was up on it. And after the crappy day of trading yesterday, I needed a little gainer, so that helped. But yeah, I mean, after hours, like extended hours is the great way to make money on SPY. Most of the move is after hours, so we'll see. Maybe I'll set up one today to hold overnight. Alright, market is open. You didn't get a bell, isn't that nice? Here we go. I was trying to rally, I was trying to jump in that one, but never could get filled, so yep, left alone. HILS though. Those little birds sound about nice dogs. Little pajaritos. Pretty sure you can just pick any stock with a small enough float and it will be a nice stock pick. Market's waking up. Meta's gapped up 13%. Overstock. Is this a pre-earnings run up? What, do they have earnings? They had earnings, I think, this morning. Yep, they beat. Well done, Overstock. And it's ripping. BBBY is up 7%. Let's see. Stuff's still waking up. Might look for a little pullback on Overstock to get some calls. Yeah, earnings continuation. 381. Estimate was 361. 13% on it. 14.5%. 2092 of an area. Morning, CJ. Silvergate's up 4%. Overstock 15% now. RC up 2.5. This thing might have a nice move to the upside. Overstock 16% now. BBBY almost 10%. Looks like it just come down. Wait, what is it showing? No pullbacks yet on Overstock. Nvidia gap up 1%. Open door up 4. I'm still getting pre-market pre-market prices on stuff like Chipotle. A lot of these actually. Market's asleep still. Overstock 17.5% there. Did it just break through that resistance? Oh yeah. 18%. Yeah, calls right out of the gate would have worked. Yeah, these 20 calls went from 30 cents to $1. $1.90? Whoa. I guess 30 cents was yesterday. These opened at $1. Keep an eye on this contract. One further out of the money. Space is up 6%. Silvergate 5%. Eyes moving up here. Lily's up 5%. Tesla TA? That you never ask. The FRC back to red, wow. Let's see. Look for a bounce to short. Kind of like the market. It's in a downtrend, but Tesla doesn't like being this oversold. think that gap will definitely get filled. Not sure if it'll be this week or next week. Just look for a nice bounce to short on, which could be today and tomorrow. Let's say you've got some resistance right about there. If it gets to there, that might be a nice entry for the short, 167. Could play the upside of there, but there's no TA showing me upside other than just a bounce from a reaction to the downside. I guess you do have an RSI divergence on the hourly. So yeah, there's some stuff pointing to a bounce also. There's a gap there too, interesting. Yeah, shorter term, maybe bullish. Longer term, bearish. Sure. Sure thing. Thanks for your likes, guys. Much appreciated. 17 of them. Well done. SPY hitting the high from pre-market. SPY is actually up 0.73. Wow. It's up a lot already. Overstock coming down some. BBY is very, very flat. What's going on here? Really low volume too. I mean, compared to the last 2 days. Only 19 million in that first 5 minutes. Yesterday was 30 million in the first 5 minutes. The day before was 29 million. On before the rip. No, I'm just kidding. Oh yeah, they filed to they're gonna be late on their earnings. I didn't see a date on the filing though, just that they're gonna be late. Like, okay. So yeah, we might not get earnings this month, I guess. Would be, I guess, sometime next month. Sunrun up 7. Makes pretty large moves. Testing the high up here. Almost a new high on the day there. Yep, SPY just broke out. New high on the day. Next week, yeah. So it's going to OTC Wednesday. So Tuesday after hours will be final days on the NASDAQ. Strange, oddly low volume today on BBY so far. Run is running. But we're got wrecked, man. I wick down there. People lost interest. I don't know what people you're talking about, but I don't think we had much bearing on it. Individuals. BY's coming down here. 1120 is the low from yesterday and the all-time low. See if we test that. It's 1164 now. This was one of the levels from pre-market. Meta holding up still 14%. We're stock down a little bit. See what these overstock contracts have done. Oh, they're holding up. The 20 calls, the 20 weeklies. Haven't lost any value. Get out of here. I'll look at one's out of the money, maybe. Not 50% on Neo. Oh, that's right, went on a cruise, man. How was it? SPY's coming down. Let's see. Neo's not looking good. If it can get a little bounce and make a divergence here on the RSI, then you'd have an RSI divergence. But yeah, you're at what, all-time lows? No. Oh, never mind. Yeah, not looking too hot. I was trying to tell you had this head and shoulders. Shoulder, shoulder, head. But I think you were, someone was calling for like a cup and handle. I don't know. But yeah, you could be set up an RSI divergence. It's a little too early though. Silvergate up 6%. BBBY flushed through that low, hit 1140. 1120 is all-time low. Contract I'm looking at on Overstock is almost back to yesterday's price. I might pick one up. Only a daily though. Another 10,000 shares. You need to get your name back, Name Stonker. $1 grand. Kings suited on blackjack. Suited doesn't matter, but that's pretty cool. Picked up 1143. Nice, that's a good fill so far. Oh, there was a bonus betting on it for suited? Bonus? I don't know about those cheeky blackjack rules with bonuses. Getting paid more for suited. Oh, you had $1 on it? $1 on the bonus for suited? All those little side bets is how they make money, man. But it sounds like it turned out good for you. That should be hobby bets and blackjack. Sucker bets for sure. CXAI. Will it do it? Can it do it? Well, inverted head and shoulders on here. 4 hops. Yes, I like that. Even see it on the daily there. is now looking like a bull flag with an inverted head and shoulders. Can it get more bullish? We have options. Okay. I don't want to tap a lot of equity in shares right now. I'm okay if my calls are for next month. 18 calls on Neo? Dude, they're so far out of the money. No, you're not okay. Those are going to be worthless if they're not already. You got shares? CXAI? Yeah, the chart looks nice. I mean, saw what I just saw on it. It's pretty good. I'm gonna get a read on Silvergate. Hard with these ones that have sold off so much. You have to turn off your moving averages. All sorts of fancy stuff. Yeah, if today holds up on SI here, we've got a nice RSI divergence. I think. Oh, never mind. What was I seeing? Oh, from here? Oh. Don't. Oh, for the 18th? I don't know what your strike is, but it's yeah. I mean, today's probably not a good day to sell if it's down. I wouldn't sell it just to put it into something else. Cash is a good position to have. Gotta wait for the plays. Don't force the trade. GME is up 1.5%. What'd you get shares of, Ozimus? BBY is still at 4% even with the sell-off, just because it had that crazy sell-off into close. Hitting all-time lows. Wow, looks like it wants to move up here. Meta, 15%. The CXAI kind of still going. 11%, 12%. Buy breaking out. %14 on CXAI. Oh, and buy rejected. This lack of volume on Bed Bath this morning is kind of interesting. I think I put bear flag so far on the lows. Not ideal. FRC back up 6%. Think about selling some cash grid puts on this thing. Oh, it's halted? You think it's halted so fast? What in the world? Is that a stupid place? Cash grid puts on this? I didn't look at much, I just based on bank's not going bankrupt, I guess. Beyond meat. Getting close to that historical support level. I'm moving back up again. It's a bank. Whoa, SPY ripping. Yeah. Broke the level, broke pre-market high. 407.84 is yesterday's high. It's almost there. It's almost up 1%. Oh. Chat wasn't updating. What's up with Mullen? Do they go down 10% every day? I drink every day. Let me see. Yeah, they just kind of flush through that level too. I don't know. RSI's divergence is kind of dying now. Oh, CXAI? Nice. Yeah, my chat wasn't scrolling for some reason. Yeah, I would wait to buy more. It'll settle down and scale in. Neo still looks bullish to you? Alright. Oh, then hold. Do it. This just looked like BBBY. Gap downs, consolidating, gap down, consolidate, gap down, consolidate. I mean, this isn't usually when you want to sell a call after it's been selling off for like 6 days in a row, so could wait for some kind of relief rally or hope for it. Ace of base, nice. Ace of base is actually, what is that? No, never mind, that might not be. Neo's not looking like a bounce or a cup and handle. Maybe an inverted cup and handle. Yeah, I'm seeing an inverse cup and handle. Here's the cup, just looking to build the handle. That's that bounce you want to get out on. Right? CXAI, 15%. Nice. Rip rally. How's this not halted? And FRC barely moves and it's halted. This bank gonna make it? Back west? Chart looks kind of bullish. These yeah, gee. Snapchat. Lucid. The thing about long options is you have that much time, but it's decaying every day, and as it goes down, it's going to just hurt value more and more. So even if it comes all the way back up, doesn't mean you'll be profitable. Whoa! First Republic, 15% and halted. Woo. Might try and grab a little bit of this. I just don't like all the halting. Must be wrong. Big cash secured puts on this, you just close it out quick. 50%. Brown is up almost 10%. I wouldn't do options on here unless you're selling them. That IV is insane. Like buying options on BBY. But this probably could have stated like IV crush. BBY never, like, for some reason had IV crush. It just stayed expensive. I mean, you could if you did spreads or sold puts, but shares probably. CXAI 20%. Woo. Inverted head and shoulders is playing out quickly. To fill that gap to 12.12. Then you've got $13 is your resistance. 12.5 first. Inverted would be bullish. Normal head and shoulders is bearish. Just like an inverted cup and handle is bearish. Normal cup and handle is bullish. Surprised this isn't halted yet. Keep halting FRC. And a half. Oh my, yeah, you're looking at 12.5 for resistance. That area. Then 13 kind of for that final resistance. Probably settle and consolidate somewhere in there. Or below there. Consolidating up here at the highs. And up a bull flag. BBY's not doing anything this morning. BBY's gonna burn. It's gonna go up and down. It's had a pretty good sell-off the last, whatever, 10 trading days, so you can see it bounce. But none of my indicators are showing that it's necessarily gonna rally. Depends on today. I mean, you could start to build an RSI divergence here. So if today is somewhat green, yeah, if today's somewhat green, you do have a little bit of an RSI divergence here. This low to that low. But if this continues to go down, that RSI is going to keep coming down. So the divergence happens once you have a peak or trough. CXAI 25%. Nice consolidation up here. This bull flag. Where's FRC going to resume at? I see 648 and 656 on the order book. Actually, when it halts, I like to look at the L1. Oh, there it's resumed. 670, it's up 16%. %, 18%. 17. Fly's moving up too. $18, $19, $20. Get halted again. Oh, it's coming down. We got options? No. Buying options in the first hour is also usually a poor choice. And then you're talking about a stock that's been halted twice in the first hour, and a stock that already had 500% IV. It will become the rule, not the exception. The CXAI hit 1195. I think FRC is chilling out. Probably get halted to the downside now. Sunrun's still going 10.5. Over 8 now, 6. Natural gas is coming down. Getting some consolidating up here on FRC. Little bull flag being built. Yeah, I guess yesterday's trading range on it was quite large. 31% top to bottom. So still kind of trading that range. I guess we can expect it to kind of consolidate here before it makes any more moves. Secured puts. Oh, you're saying you should have got out of options. Should have got options? I don't know what you're saying. CXAI slowing down. Got VWAP at 1076. Overstock consolidating at the highs. BBBY, this is yeah, odd. It'll pull a mid to late day volume spike, GME style. Might grab a short actually right here on less buy. At the high from yesterday. There's your RSI divergence on the SPY, signifying this move to the upside. Just on the hourly though, but it's there. I'll be patient. This thing might break. Breaks yesterday's high. We've got good room to the upside. It did already break out of this channel. He's halted again. Halted down. Yeah. Volatile, dude. Yeah, maybe it's good. BBY's chilling out. I don't know. %, almost 1,000% IV. 720% IV. You guys are buying these too. Maybe not you guys. Some people are buying those options. Yeah, Nighthawk was buying options yesterday. That's crazy. BBY coming down a little bit. CXAI is still just grinding up. I know ABC has $500,000 in it. No, the dude has $500,000 in it. Yeah, I know. I feel so bad for that guy, and a lot of the PP viewers, honestly. It's like he's new to the market too. It's like, oh my gosh. I feel for him. I remember all that. BBY is coming down. About 6 figures on, John. Impressive. Yeah, same here, Ace. Yeah, that's the thing. He's like, he's got reeled in, man. I've been there, and it's awful. I'm like still there, kind of. I'm just trying to come out of there. I guess when RC pulled the rug. Yeah. CXAI holding a high level here. Meta also 15%. FRC still halted on the downside. There was some weed news last night or this morning, so those stocks are pumping some. Newegg. All-time lows on Newegg? $1? Yeah. Got this RSI divergence too. Buy moving up. Super stock mentality. I think Newegg might be a nice pickup. Might get some options on here actually. Spread's awful. So it's FRC, volume, traders. Yeah, but Newegg could be one of the ones on the list. Oh, BY, new lows. Oh, new all-time lows. Congratulations, you guys. 11.15. SPY moving up. BBBY officially broke all-time lows. 10 cents. 10 cents is coming, I think. There's a SPY breakout. Yeah, I wasn't saying necessarily be bad, but I was basically saying it might not be good. Like, quite possible he's not going to help shareholders. I mean, it depends on a lot of the, I guess, terms of the restructuring, the agreement, and the judge and everything, but he's not one that would like the deal as much if there was a payout to shareholders, I'm sure. Unless he saw some benefit. All right, there it's testing the high from pre-market or post-market, 425. So yeah, we might be in for a big move up. I mean, that's almost 1% on the SPY. Buying this bull flag would have made sense since it's a bull flag. SPY just ripping right now. BY bounced out of that 11.15. Wow, look at this thing. If it held my contracts, would have been up a couple grand. Wow, wow, wee, wow. $0.02 spread on BBY? Oh. RC consolidating up here above the WAP. I don't know. Could be, yeah. It's risky. I didn't look at the earnings or anything, so. But it seems like the reaction from earnings is potentially all over. We're getting the dip buyers now. So any kind of bullish news in this thing will go insane probably. Could be a long-term hold. You just don't know which one of these banks is gonna make it, I guess. BY made all-time lows again. Did wick down there. Not a whole lot to look at. I mean, momentum's still down, of course. I get some pops here and there. Not seeing anything like we saw back here yet. And time is running out for this tap before OTC. Linux has an update. Is he bullish on GME before it fills that gap? I don't know where this guy gets his data. I didn't really actually. I watched a couple minutes of it. But alright, I'll check it out on Ulysses. Fed Chair Jerome Powell held a call of Russian pranksters who were posing as Ukrainian president. Is that real? CXAI coming down to VWAP a little bit. That is holding up nicely. Overstock moving up above VWAP. I looked at those weekly calls in Overstock, they're tempting. FRC setting up a bull flag. Still above volume weighted average price. Boozy hasn't slowed up. Oh yeah, I was gonna look at neg. It's got me all distracted. Might get some options on neg. Whoa, big flush on CXAI. We'll see. Just a candle. Just a wick. Profit taken. Bed Bath & Beyond is pleased to announce we have a potential buyer lined up. Dude, this is fake. Can you guys see this? Wall Street Wizards. Potential buyer lined up. It's probably development we believe will benefit our shareholders, but we cannot yet reveal the details of the buyer or the terms of the deal. We can say that our team is confident in that potential outcome. We've been working tirelessly to explore all options of the future of the company. We believe that this potential buyer is the right fit for Bed Bath & Beyond. Just Bath & Beyond. What? It's fake. Alright, Linux is post. $2,900 options. Are they all weeklies too? Spice come down a little bit here. Maybe they're selling the bed. Just sticking with Bath & Beyond. Levels on FRC. I mean, the range yesterday is so huge that anywhere inside this range from yesterday, and this is actually just going to be it's just going to be premium farm, basically just crushing Ivy on options. So we got $5 basically for the low, 7, just over 7, around 7 for the high. Yeah, fill at 792, $8. It doesn't have upward momentum necessarily yet, though. It's just this morning volatility and day traders and stuff. So it basically just moved up to a level from yesterday's high. Yeah, if you want to go long, you could wait for maybe retest one of these supports. If it holds the 520 area, $5. And then yeah, it's got, you know, runway to go up to 12.5 or 12, is double where it's at right now. But this thing's very susceptible to day traders and any sort of news, of course. So it's a risky hold for sure. BY did bounce out of that all-time low. Well done. Watch from 1.5 hours in. I think more partners was interested. Yeah, they're probably way out of the money in weeklies. That's like all he knows how to do is way out of the money weeklies. MC sexy above 5.5. What the heck? All right, let me see this. The login. Okay. This trade has nothing to do with fundamentals, company transformation, NFT, BS, or that MOS stuff. This is me seeing a trend in the market and taking advantage of it. This is Lennox speaking. SoFi up 8%. Oh yeah, hold on. Let me look at my see if I can get some of these neg calls. You guys trying to front run me? What the heck? I paid that for that. Cool, bud. Okay. CXAI below VWAP. Not sure if that thing's gonna keep going or not. This kind of holding support, this resistance and this resistance. Maybe set up a bull flag.
I found a rock for your thing.
Oh, thank you.
So now we can fit it.
BY bounce back up to VWAP. You're an FRC? Alright. You gotta be. Don't be scared of sitting on your hands. Don't be scared of letting that cash sit. So some of you may know why I'm posting this here. For those who don't know, I've been trying to be some kind of profit idiot and I've failed a lot in the past. Stopped posting for 6 months until I could better nail the market down based on the certain data sets I've been analyzing for a very long time. I'm back here because I think I've managed to accomplish it. My track record has been extremely shoddy at best for the past 2 years, but as of recent breakthroughs and understanding the data sets I have, I think I've found what I wanted. I'm not going to mention dates or price targets. All I can say is that I figured it out in March and rode the March spike. That make things click for me. What March spike is he talking about? There was no spike. You talking about the earnings gap? take credit for that. That wasn't from a cycle. That was from earnings. It wasn't a spike. That was all after hour. Linux, come on. Not going to mention days, but I had full ported and made average 1300%. I'm in for 2900 2900 option contracts. I'll get more, but I'm restricted on how much exposure I can have. You're restricted on how much exposure you can have. That's all. You know how this trade has gone soon enough, I guess. What the heck? You know they're not long dated. He's expecting a huge move, like, real soon. CXAI 20% still. Did it bounce on that support level? That's looking good. Looking more like a bull flag. I don't like trying to trade it. AMC chart's so weird and so crazy. And they have this like upcoming event that might just cause it to crash. RC is at VWAP. See where that thing goes. You know RC2? Short SPY now? I don't know. I'm being patient with it. It's not a whole lot of signs of reversal yet. It did just break out of that resistance. Just Oppose shared some interesting TA on Discord you could look at. Looking at this. Your head's killing you? Water, man. Like a bunch of water. You guys all got an FRC? Yeah, it's fun. It's volatile. I mean, it's gonna be a good pickup. SPY looks like it's kind of bull flagging up here, but yeah, I'm not doing anything yet on it. Sarah from Florida. Yeah. Got some GME puts. It's not a bad play. It's moved so slow they haven't been paying very well, but I wanted more of a bounce to get him. Looks like it wants to break out here. Gonna have some more legs to go. Linux is getting. I mean, if SPY rips, see a move on GME, but I don't know. I don't think it would be that big. Maybe move back to 20. Got a meal. You can do it. Yeah, look at that. It bounced up above VWAP. That looks nice. Nice little bull flag. You can see it's just kind of consolidating though. See this kind of pendant or whatever it's building. Lower highs, higher lows. See those extended. SPY moving up. Through the dump. Are these all kind of moving in sympathy still with the Tesla though, right? Yeah, I'm all in 10% down again. A lot like BBY. 10% at a time, nice and easy. Hope for a squeeze. I don't think there'll be a squeeze without a catalyst before OTC. I think you could get a bounce before there. Yeah, definitely needs a catalyst to squeeze. I mean, but you could get a bounce. I mean, this move from here down here is insane. You know, where we all should have sold. The most recent time we all should have sold. The 80% move in like 2 days. So should have sold and shorted it. Head and shoulders, engulfing candles. What were we thinking, man? I'm moving up. Watch FRC a little more. It is looking nice. Full flag there. I do see think that this is probably just gonna burn the IV on the options. So just look for a breakout one way or the other. April, May? No, it's opposite. Sell in May and go away. So markets usually sell off in May. And then they're very slow, less volume until like October-ish. But Linux didn't share anything but his contracts. You show how far your contracts are, calls or puts. You got a bunch of puts. Yeah, I mean, I'm bullish on GME. I think. I mean, the momentum is definitely still down, and we have a gap. So logically, I would think that gap's getting filled. I've also flipped backwards. Don't know. Yep, there you go. Neo's coming up a little bit. Yeah, you want a little bounce to confirm RSI divergence here. If you get that, then it might be worth it to hold your contracts because you do have some gaps up here. SPY is about to break out. It's up 1%. But pretty nice trades here. You've got a bull flag, bull, consolidation, bull, consolidation. Like we're going for it again. Oh, you don't have to hang yourself. What's Pickle's fair valuation? $10. And I know that's the thing. I'm like trying to just scalp the very top bit of the move. Maybe better just to wait for the top and go short. BBY under VWAP. $409.12. Seems like we get to that though. 14. That ain't bad. Sold last year Bitcoin at 4K. What? Bitcoin wasn't at 4K last year. There's a new high on the SPY. Yeah, you're right. I mean, a lot of the moves done. There's a little more on the bone, maybe the upside, since we are doing another bull flag breakout. I'll go slow though. I'll wait for some sort of sign for top. You sold Bitcoin for 4K? Bitcoin has been at 4K for many, many years. Rocks? How could it be down? Speaking of a top, is this double topping right here? Yeah, I might go short here, especially if that engulfing sets up. Let's see. Like 3 years ago? But realistically, you probably didn't get it for 4K unless you got it 4 years ago. Because this was the very bottom. Thought you timed that perfectly. But yeah, it's crazy. You sold it at 4,000? That's too bad, Ricky. Ace had like 30 Bitcoins at one point, and he threw him away or traded him for a pizza. Just kidding about the pizza, but I think did sell them. What'd you do with your Bitcoin, Ace? Threw it in the trash? Threw the hard drives in the trash? No, you're looking for a move back down here on FRC. We got more. About time is, oh yeah, there's an engulfing candle. So I might wait for a little pullback and grab some shorts. Got 2 minutes left on this candle though. Kind of seeing the double top better there on the 1 minute. GME is up 2%. Hopefully Linux cashes out. Nothing wrong with shorting. Oh, the dark side. Trash. Alright, 1 minute before. 1 minute chart did kind of bounce that level. For an entry here. "37 seconds. I like it." What? What? One day I have margin for 8 of these contracts, next day I don't have margin for 3. What a mess. Did it sweep it all over to my brokerage? Oh, it's getting a little push just before that 5-minute candle. Let's see. Alright, it is going to be engulfing. I did get into some shorts up there. We'll see. Might just be consolidating before another rip, honestly, but seeing kind of a little double top up here. And then engulfing on the 5-minute. That long wick is bullish, but... if I can figure out my margin, I'll be able to scale into this thing if it keeps going up. Lucid? I was looking at cash cleared puts on Lucid. Yeah, look at that. Do you have a stop loss? Ace, look at you. Yeah. Not coming down. Oh, CXAI had a big move down from below VWAP. Tupperware up 10%. GME 2%. I don't even eat meat. Goes up 6%. Bouncing off that level pretty good. Didn't fight this right away. Oh, what? I did get shares of HILS? When did those come in? 10:30? Dude. Kitty's broken, man. I'm gonna hold these. Well, RSI divergence there on the 5-minute. If SPY's topping out here. Double top's still kind of there too. But this could just be in a bigger bull flag here. If it breaks to the downside of that bull flag. After school. Coming down. A big red candle and SPY there. If it makes it to VWAP. I don't know what happened with my margin. Pipe. Yeah, I don't know what a cost average is. Tesla calls. Tesla's more liquid. Yeah, CXAI did have a flush there. Still has inverted head and shoulders though on this hourly, a 4-hour, even. Volatile. BBBY ripping 4%. My gosh. Yes. I didn't get ES shorts. Got nat gas instead. That's very aggravating. If nat gas is gonna come down. So I missed that move. It's because I use this chart over here for watching nat gas. When I go to trade, it defaults nat gas, and I forgot to change it. A clip. I think I heard that guy come on. I don't know. I don't really want to watch that. I heard some guy come on and just scream. I didn't hear him cuss, I just heard scream and then he was off. Geez, that's 2 mess ups today. It's a day to watch. The Zip Trader has more stock picks, they're going to become less and less pumped. Saturate his own market. This thing filled at 10:31. I'll hold it. SPY making us move back down to VWAP. That gas is moving up now. Yeah, you can put a stop loss in for sure. That was a guy. Yeah, I didn't hear him talk at all. GME up 2.5%. Linux closing out his weeklies. Yeah, I mean, did the same thing. Just doing, you know, it's a pump and dump. This could have continuation though tomorrow. I don't know. We'll see. I'm gonna hold it. I think his thesis on it's probably right. Some of his plays have continued on later. I don't know. Yeah. show you how to do a stop loss? Oh, dude, I can't show you how to do a stop loss. YouTube it. Like a video. A stop loss for an option? Same way. It's, those, yeah, that's a little more sketch though. Because you have big spreads and just the way options pricing moves. I'm not trying to stop loss on an option on Weevil. Assuming it's on there though. Ugh. Let's get some Jenny hype. Does that work? Can't tell on my end. You have to underscore it? That's so annoying. How do I get rid of that? Any hype? RC holding up all right. Oh, it's not Jenny. It's her cousin.
Stock Exchange. You're seeing markets higher across the board. Meta really wowing traders today, leading the way on the major averages. We also got in our preliminary GDP growth. That's slowing, so we'll talk about that as well. So much to discuss in this hour. Take a look right now. The Dow is up 192 points, up more than 0.5% at 33,494. The S&P 4089 up 0.8%. The Nasdaq up 1.6%. Thank you, Meta. Up 207 points at 13,013, and the Russell is flat at this moment. As we look at the futures products, we see a mixed bag here as oil is higher and gold's pulling back. I'll start with Bitcoin, 28,990. That's up almost 4% today. US dollar, 101.40. And gold, 1992 a troy ounce, and oil, 74.38 the barrel. For a look at top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on the TV.
Jenny, you guys did it.
Of course, Meta leading the way.
Summoned her.
Wowing everybody. Double-digit gains in percentage terms. Start with Meta and the earnings report.
Right, Nicole, it's nice to see that this reaction has held, because after hours we saw a nice lift in reaction to their first quarter print, but we're seeing even more strength now on the session. Like you said, shares up over 14%, pacing for their best day in over a year, and now pretty much at their 52-week highs. So they did report earnings that beat consensus estimates just slightly. They did also report quarterly sales coming in around $28.6 billion, which did beat estimates by about
other
3%.
blonde girl.
And this figure did also represent a 2.6% increase from the sales they reported a year ago, better than what the street had been forecasting. Now, CEO Mark Zuckerberg said he has been busy exploring the potential of AI to enhance their user experience at WhatsApp, Facebook, Messenger, and Instagram, and he plans to continue being innovative in that respect going forward. During his first quarter earnings call, Zuckerberg did express interest in integrating AI agents into the company's flagship app, citing the potential for usefulness and meaning, saying he thinks AI is literally going to touch every single one of our products and services in multiple ways. He anticipates that these AI agents will be valuable to individuals, businesses, and creators alike, and envisions a lot of these potential applications in their business messaging as well as customer support and metaverse. Speaking about this current integration of AI, he said that now more than 20% of the content on Facebook and Instagram feeds are recommended by AI for people or groups that you don't see or follow. Across all of Instagram, that's about 40% of the overall content you see. According to Zuckerberg, Instagram experienced over 24% user growth and engagement since the introduction of its Reels feature, which is largely attributed, he said, to this implementation of AI-powered recommendations. So I think the fact that they're able to see Reels continuing to grow, I think the fear was that TikTok would steal away a lot of that market potential, but this earnings report showing us that Meta is still able to grow.
Bear flagging
efficiency boost we've seen in shares, Nicole, is able to hold, with shares up almost 100% now year to date.
Yeah, I mean, up at these new highs. Very exciting. Now, on the other side of the coin here, we are closely watching these airlines. Southwest Airlines is one of them. Why this one to the downside?
Yeah, this name, I think there was a lot of pessimism going into this report, just given the fact that they had a pretty massive scheduling mishap over the key holiday period, and then recently actually had to delay all of their flights one morning. So this company, it seems like, cannot seem to figure out this current market. Shares are down 6% in reaction to their quarterly update. They did post an adjusted loss that improved from a year ago, but did miss street expectations on sales that also came in around $5.7 billion. This did slightly miss the forecast ever so slightly. Their operating revenue for the quarter did rise from a year ago, however, but we did see their president and CEO say the company expects solid profits now in the second quarter. They expect operating revenue per available seat mile to decline 8 to 11% year over year, while their available seat miles are expected to rise about 14% year over year. For 2023, the company did lower its total available seat mile projections growth guidance to about 14 to 15% from their prior outlook of 15 to 16%. They do also now expect their full year capital spending to be about $3.5 billion, which was down from their prior forecast. So this name has just been in a difficult position for investors to really get behind. They're down about 13.5% on the year, down over 40% from their high, and pretty much right around 52-week lows now. In reaction to this report, the airlines have fallen somewhat out of favor over the last several weeks, really following that banking fallout we saw. So it's not just Southwest that is experiencing this weakness, although they're definitely underperforming some of their larger peers like United, American, and Delta.
Yeah, understood. I mean, that during the holidays, it's my understanding they've been upgrading their systems, but still, they just recently had a pause that just spooked folks. Jenny Horn, thank you so much, markets correspondent here on the TD Ameritrade Network. Let's get some insights in the news shaping the markets. For that, we welcome in Mark Hamrick, senior economic analyst at Bankrate.com. So let's just start with what we got this print here, 1.1%. So GDP comes off. The fourth quarter was 2.6% in the fourth quarter. I know this is a preliminary print here that we're getting today. What is it telling you? I mean, the economy's slowing. Is this good news, bad news? How do you interpret it?
It feels like old news, first of all, Nicole, to the extent that I think a good part of that first quarter GDP lift came very early in the first 3 months of the year. And as you know, we'll get an update on the level of consumer spending for the month of March tomorrow morning. Is the consumer running out of gas? I think that is one of the key questions here, but clearly they basically had a full tank if you look at this report. Let's think about the fact that the inflation part of this report came in hotter than expected. That isn't good news. That'll keep the Federal Reserve, continuing to raise interest rates at the meeting that we expect to hear from them next week. And obviously the good side of the day's data also being that jobless claims just remain remarkably dampened in the face of all these job cuts and moderation in hiring, and the expectation we get more of that in the coming months.
Yeah, I think you're right about the price index, right? So that comes in at 4%. And the estimates were for 3.7%, and that is a hotter print. And while we are seeing tamer inflation, it is sort of poking its head back out, right? And so what does this mean for the Fed on May 2nd, May 3rd? Most likely, are you expecting 25 basis points and done? Are you thinking May and June?
Right now, I think it's most likely that we'll just get one more interest rate increase, obviously, unless we get some sort of big inflation surprise. And if anything, inflation really does seem to be leveling out, as Chairman Powell said at the last news conference. As you remember, Nicole, some of the tightening that we're seeing with lending now is doing part of the Federal Reserve's job for it, in the sense of taking some resources out of the economy that is going to weigh both on the consumer and on business, and that will then probably be ultimately reflected on in employment and unemployment. I continue to think, though, Nicole, about the fact that, in the past two recessions, we had double-digit unemployment rates, 2009 and obviously 2020. And basically, the consensus right now is that we'll probably see something south of 6% in the next year. And I just think that's most remarkable, even when you have some forecasts for flat GDP in the current quarter and the third quarter of this year. So, we had the most recent economist survey, a quarterly survey at Bankrate, where the economists put the risk of recession this year at basically 2 in 3. The flip side of that is you still have a 1 in 3 chance that we don't have one. And that leaves aside the question of the severity of the recession or lack thereof.
Right, understood. As far as your expectations for more prints that are coming out, you've talked about some that we've already seen, personal income and outlays report, the jobs report next week. Are you expecting any surprises, or is there anything specific that you're looking for?
I think there is some risk of a downside surprise in the payrolls number that we get a week from tomorrow, if only because the snapshot we had of jobless claims that week was a little weaker as well. We know there's a lot going on beneath the surface of employment, some of which doesn't seem to have been well captured in the data. That includes the rising number of layoffs and job cut announcements. And one of the conundrums here, one of the mysteries in a sense, has been why haven't jobless claims really popped when we've seen so many job cut announcements? And the prevailing theory seems to be that those people have continued to receive severance or have been able to take advantage of that still high number of job openings that is out there. I think one of the main takeaways here, Nicole, is this economy has remained remarkably resilient, having had so many things thrown at it, including this mini banking crisis, which still is percolating beneath the surface here. And yet, jobless claims are low, and we had a positive print in the first quarter of GDP. Wasn't strong, but it was okay.
Tell me more about the consumer. I know you said there's the downside risk on what we might get for the labor report next week, but I mean, nobody knows better than you about them using their credit cards, digging into the savings. Where do we stand here in America? Are we in a tough spot, a scary spot? Should we be saving our money? What's going on?
First of all, thank you for the compliment. You're very charitable, as you always are, Nicole. I think, first of all, we have to think about the cost of credit. We're continuing to see credit card interest rates rise. Our most recent bank rate weekly snapshot of credit card interest rates for the best qualified consumers now at basically 20.25%, and that will rise next week when we get the Federal Reserve hiking rates. So the cost of credit going up. We know that many more Americans are taking out debt here, and think across the spectrum of the debt classes, whether it's auto loans, mortgage rates, personal loans, just across the board. All of those become more expensive and puts more of an anchor around the neck of the consumer. And as the job market slows,
Head and shoulders
that's
on
another
SPY.
negative. The positive side, savings rates are the best we've
Shoulder,
seen in
shoulder.
over a decade. So there is an opportunity here to get superior return on savings.
All right. Well, that is the positive, no doubt. And people are definitely trying to do that. Mark Hammer, great to see you. Thank you so much. We love having you on the show. Bankrate.com. Thank you.
Thank you, my friend.
Plenty more to come here on Trading 360. In our 360 Spotlight, we'll take a look at the AI revolution, how it's impacting tech, and more importantly, big tech stocks. In our
Yeah, so I accidentally opened a short on nat gas instead of ES. The contracts would have been in up here, been up on. I just got in down here. First Republic above VWAP. Look at that. We'll see though. This is on VWAP on SPY also. So, but you've got a bear flag, head and shoulders. Kind of interesting. Bed Bath & Beyond just got shut down today. Just a full-on shut down. One of these moves. Oh, that's full speed. Whoops. Half. That's wrong. If we break VWAP, I'm going to add to these contracts. Thank you guys for your support today. Got not many people in here today, actually. See, it's correlated with BBY's volume. Boozy. FRC up 9.5. Oh, I figured out my problem with margin. Yeah, I was trying to trade the wrong contracts. I'm making all sorts of mistakes today. To be careful. Hey, you see me? I see you. Be a miracle? That's what a miracle is, man. Yeah, there could be. There could be a huge move before Tuesday. But it's gonna have to be based on fundamental catalyst. Without that, I think we could see a bounce before Tuesday. But nothing crazy. I wouldn't see $1 or anything like that before Tuesday without something fundamental. But we might see, you know, move back up. I don't know. I mean, this definitely looks like a death spiral. like Barry was saying, no. So, maybe it happens after OTC. I think we could definitely get some volatility to the upside once it's on OTC also, but I don't know. I don't really know. I mean, nothing bullish on the chart yet. But it's not, there's not just TA to even look at, because this is so run by news and everything going on in the background. It's not like simple ebbs and flows of the market. We could really apply TA. Intraday you kind of can, and then once something starts happening, then we could. But there's nothing setting up. You know, last time we saw something happening was here when I started buying on that Monday, and Tuesday I started to see what was forming, and then we had bearish TA with this engulfing candle and then a head and shoulders. So I'm not seeing anything yet. If we get like a gap up tomorrow, then we could get, okay, we've got inverted head and shoulders, an island bottom. Need to see something other than just selling off. Basically, otherwise it's just still selling off. Too deep. Yeah, the position I bought back into, I'll probably, if we don't get a pump before OTC, I'll just hold that and trade it OTC for an exit, or even come out on the other side.
To me, I really like this setup, okay? You had a gap higher. It went up with volume. You pull back with dramatically lighter volume, even on the daily. I always like to see that because it's showing that, they come up with good news, they push it higher. There's no sellers in the way back down. Then on top of that, so that gap higher brings you to 73 and you're trading 68. But when you go back a little bit more, that high volume swing at 77 is also there. So you have two different areas that, you can get basically some good traction at, and you definitely had buyers up at those areas. So when you see something like that, to me, 73 is going to be a big one, meaning we had so much volume that you got to get over the 73, but I expect the 73 to at least get
1.6. Wow, we got it down a lot.
Understood. Okay, so as we look at these, are you looking for that same test?
I probably will if I don't get an exit before then.
I'll show you why when we look at the daily time frame.
But I've been kind of in and out of it quite a bit.
But this isn't a longer term trend to the downside. Now here we have an intermediate.
It's not like this big position I've been holding. I've realized losses
you can
and
see actually a trend to the upside,
found new ones.
Potentially Carmack stalling out here at a key.
Buys moving up here.
Let me show you what I've got my eye on. One of two scenarios playing out. First and foremost, you've got a bottom left corner to top right corner scenario where we see areas of value forming. 58, 63. 73 is the key area in this chart, right? Because we had this small area consolidation. But at that point, earlier last week when we were forming
we've got till Tuesday 8 o'clock to sell before it's OTC.
Breakout to the upside in the form of high conviction trade to the upside, and they were looking for a new area of value to form at a higher level. Look, we got the exact opposite. We had a breakdown and we get this sideways consolidation. So I went ahead and just drew this out as possibly another scenario, and I think this would be the bullish scenario. We're looking at a bearish one right now. We're actually starting to fall off that upper level. I think the bulls are kind of hoping for 70 to become the new pivot, potentially work our way back up to 73. Let's move away from the granular, more intermediate 1 hour time frame, because I mentioned the longer term trend to the downside. Here you can see what I'm talking about. You can see the areas of consolidation. You can see limited retracement amongst them. And even as I look at the top left,
it's not any different. I mean, the chart will look different, but
period where we broke down from 146 to 110, you can see
looks
this
like SPY wants to fail this
multiple times,
head and shoulders on me.
pattern, even within this very small cross section in the beginning of 2022. But Longer term, again, value forming at lower and lower levels. In this instance, the bears are looking for a breakout down below the lows that we saw back in the end of last year, around that 50, 53 level, and then a new area of value to form.
EU is closing in 7
Checking
minutes.
in on where things stand with the 50, the 200-day moving average. You can see we're kind of pinched. CarMax not really providing a lean one way or the other at this point. Kind of hanging out in the middle of this range. RSI somewhat limited as well. Look, we're up around 12% year to date, but still in this longer-term trend to the downside. Lower lows, lower highs. Keep an eye on 52. That's a key area. Oh, Tom was talking about the area here. I just wanted to point out we've got kind of a scenario we can see.
Mistakenly
a bit of
got that one. Otherwise, I would close out here.
So here would be your head, right?
I didn't think I was chasing here, though. That's definitely head and shoulders.
80. This is your right shoulder. This is your left shoulder. So let's keep an eye on this. Again, that more feeds into that bearish narrative.
All right, and so we'll watch those levels. I mean, I will say, you know, there was some concern over at Wedbush about headwinds going forward on this name, and while used cars prices have eased some, we're still 50% higher for used cars since COVID. Tom, thank you, Ben, for that. Tom, final on CarMax, and then get to Medtronic.
Yeah, so there's no doubt CarMax has been a dog.
That's crazy.
What I like about it is that, you know, we came down and we've tested the March COVID 2020 low, just about, okay? Then last month, we didn't even make it to that area. That normally says, and what happens when you see dogs like this, even if we get a 0.382 retracement and it's still in a bear,
Jerry Springer died.
Move. So I says, you know, technically, my take is that this thing wants to go higher because there's no more sellers down the bottom. That's
Not
how
seeing any
it
news.
basically looks to me.
No data came out. Just
and then what about Medtronic? I mean, there's so many folks who love medical devices for the next decade, thinking about baby boomers aging and that somewhat recession-proof. I mean, where are you coming from with the Medtronic story here?
You know, the Medtronic and healthcare in general, it's just nonstop. I mean, it's nonstop.
Make a new high here.
You know, there's technological advances. You know, this has been, you know,
is very squeezy.
Going all the way up. And normally, when you get a one-way up,
watching
you know,
GME to see if it gets some sympathy squeeze.
But this also has been a
new high there on SPY.
This thing came off highs and just went all the way down. That being said, 2 months ago, we had big volume come in at the level, and you know, this has been consolidating for almost a year and a half, 2 years. So I'm looking to get buy it here, you put a stop right underneath at 87. You don't give them much, and I'm looking for 100. You know, bottom line is that it's taken out the swing, and it's taken out the, you know, a good base, and it's taken it out with volume. Normally, when that happens, the last time that we had any big volume coming on the way down, okay, was at that 100 price point. That's what I'm kind of going for. You know, normally,
2 candles.
when you get
trash
like this, when you get a
bounce, coming up on 409.
Go to the last place that you had big volume. In this particular case, that was the $100 area.
All right. And then, so we're looking to trade in that $100 area. Ben, bring up the charts.
Well, I can understand why Don likes this one. A very similar scenario in terms of what we're seeing. I'm not buying into this mainly because of that longer-term trend to the downside, but similar in terms of more intermediate trend to the upside. Again, longer-term trend lower as far as what we've been talking about, taking a look at areas of value that have been forming to the upside, and we're just talking 60-minute candles here, so we don't want to get too down the rabbit hole on this one, but you can see areas of value forming with limited retracement, and 84 being the key area right now. Until we break down below that, we are starting to see a bit of a reversal of the trend that's been playing out here. You can see it on the daily time frame now. I mentioned in terms of why I can understand Don liking this one. We were just talking about possible head and shoulders pattern forming in terms of what's going on.
I think he said it was 72.
The last stock we were looking at here, you can see that we're actually breaking above into New Year's high print. So again, high conviction trade to the upside. It looks like it's higher today, 5 in a row, and well, here you can see these areas of consolidation, though. This is a longer-term trend to the downside. But look right where we are at the $90 level. This is a key area, so this could potentially invalidate the trend if we were to see further gains here. But again, trending higher on the intraday and now testing a key area in terms of that trend lower on the longer-term daily time frame. Checking in on the 50, the 200-day moving average. Look at this rip above, up 16% year-to-date. RSI very supportive of the move higher here. So again, longer-term to the downside, still some hurdles, some lifting for the bulls to do, but they're definitely getting some good energy as they head into that key area. Again, 90 being that key area of resistance to keep right now, an eye on. Make or break at this point. It's going to be important to watch over the next couple days.
Yeah. All right. Thank you both for the big three today. Tom O'Brien and Ben Lichtenstein, great to see you.
Lichtenstein.
Really appreciate
Thanks,
it.
Ben.
3 stocks, 3 charts, 3 trades every single weekday right here on 360. Thank you. Coming up next, we're going to spotlight the AI revolution and its impact on tech. Big tech earnings also in focus here.
Wow.
Breaking it
SPY's
all
lifting
down
up
next on
everything.
Trading 360.
Not everything, but some of these sleepers this morning. Dude, those candles are wild. Not necessarily, I don't think. I don't know, we haven't seen it ever chill. But yeah, with more shares, that is true. Hey, Mr. Lee. Yeah, FRC's, that's nice though, that's looking good. It hasn't confirmed a move to the uptrend. The upside is just bear flagging, so kind of hoping the bear flag fails. Got a little cup and handle here on the 5-minute. Oop. Dude, SPY is not a joke. This is actually still happening. How do you do it? Can I... How are you fast time? Fast time? Good to see you. Fast time, Mr. Lee. No, I didn't use stop losses for a long time. I still don't. For the most part. Up a little bit. Playing good. If you got to close here, that would be RSI divergence there. Vivian's moving up some too. Similar chart here to Neo. That gas is even ripping. Dude, look at SPY. Holy moon. Yeah, I wouldn't sell Neo calls right now. Wait. SPY's darn all. If I put in a stop on it, it feel below that? I don't know what you're talking about, Ricky. Every day I'm here, Mr. Lee. Expect profits? You mean Yeah, BBY just waiting for OTC. So I might be rejecting that resistance up there, 409.12. Kind of a soft level. That 410 area is definitely more legit. I put a stop loss for $6 before. Yeah, I put a stop loss for $6. And it hits $6. It's gonna trigger it. Don't necessarily get filled, but it'll trigger it. So wick down there on SPY. Probably gonna keep coming up though. BBY is moving up a little bit. CXAI. Domino. Yeah, looks like it has a nice little rally going. I'd look for resistance at this trend line here. So that's 76 cents or so. That gas is moving up. Glad I closed those shorts.
It's up over 80% this year, right? I mean, just to put it in so that we can tell you that he's absolutely
Cover call
right.
income
I mean,
offset
it's up
realized
over
BBY
80%.
losses.
I know because I looked at it recently. And then what about some of the others? I mean, we've had Google with Bard and Sundar Pichai, you know, sort of putting out the red flags and alarms and saying, hey, folks, get on it. And, you know, sort of trailing when they could have been ahead,
from my understanding, yeah,
well,
absolutely.
They've made a lot of investment. I think they were forced to come a little faster and reveal what they're doing, but with DeepMind and what they're doing with Google Brain, bringing them together, their investments are not trivial in AI, and I think that's going to show. And I think competition here is really important, is because for us as consumers and for enterprises, we want to see.
No, it's not unlimited
IBM,
because you're
I talked to
telling it to
yesterday at ServiceNow after their earnings.
trigger a trade at that price. So if it executes, it's going to trigger it there.
Amazon and
not
Meta
unlimited
and
anymore.
Google and Microsoft, but I think every company is going to see their business models change significantly in the next 2 or 3 years.
Zero tax?
Tell me more about
it should
the
be.
CEO mindset. I mean, we have
double check
someone like
on
Elon
some
Musk
Google
saying, slow
Google
it
research
down.
or
We're trying to work on it himself.
CPA, but
and
yeah.
I
You have
understand,
10 grand
you know,
realized
he
losses
could
and
saying
gains. It
all
should
this
be
in good faith. I'm not mocking him, but I'm saying
equaled
it's
out.
going, you know, it's on its way. CEO mindset, big picture mindset.
Well, I mean, you have to be looking at how these are going to change your business model. I think something around 60% of CEOs believe that their businesses are going to be, you know, using AI almost across the board over just the next couple of years by 2025. And 40% of CEOs say within 10 years their current business model will no longer be relevant.
Yep, BBY is above VWAP.
Think about the pressure we're under. We used to see digital transformation, you know, in
Volume's
10 and
probably
12
starting
year
to come in
phases.
a little bit.
We saw GPT enter the market in like November, December. I mean, to the public,
little volume starting to come in.
Companies are completely changing their entire strategy.
Not much yet.
I mean, I know there must be sort of the negative side of this, but I do want to talk about specific names. You mentioned a conversation you had with ServiceNow. You also have Juniper, Intel, Google, Amazon, Meta, Microsoft. Are these all winners?
Well, no, I mean,
if I buy stock for $1,
going to be
and I put a
in terms of
take
being
profit or a limit sell.
You look at a company like Intel
$2
that's been on a struggle, and they're, you know, this may be their bottom out quarter. We're going to find out today. But having said that,
profit of $1.
Vast majority of data center chips for servers. Being able to add accelerators,
unless if it doesn't fill, which you're not always guaranteed to fill
into
the
those
limit.
chips. It's not going to be just these big NVIDIA GPUs. We're going to need to put it on every workload,
you're capping it
including
at whatever
on
your
devices,
stop loss or stop profit is.
Part of the market for.
Right. What do you think? Can you give me a preview of Amazon and Apple? What do you think in there?
But it's not always.
I think Amazon's
doesn't guarantee if it'll fill
They've
though.
had a few really rough ones, although you got to weigh the Rivian numbers.
Keeps going, you're out of the position.
Heavily.
If it
AWS
fills.
will be the beacon though, because it's so large and significant in terms of its.
It goes to $5. You're gonna stop Stop profit at 2.
Now what's happened with Azure, what's happened
Most
with
likely
Google
fill it
Cloud.
too.
If AWS keeps
Unless
pace,
if it
business is running towards
gapped
$100 billion a year. I mean, Apple, they got crushed on devices. Their Mac numbers were really, really bad when we saw some of the recent data come
See
out
it,
from IDC.
Ricky Bobby.
You know, in terms of device sales. But you know
6.25%.
what?
It's on the
Apple's
up.
so resilient. They've made a great pivot to services.
That's the whole thing, right?
I mean,
the demand you think will be there.
Every single day we live on our devices, and so Apple's made that pivot to content to services. If it's a rougher quarter for Apple, it's still going to be really hard for investors to not want to be in their camp long term.
Automatic?
All right, Daniel Newman, thank you so much for being here in person.
Not sure what you're asking.
Thank you. All right,
Bye.
right here. We're going to watch all those names coming up. And coming up next, Seattle Seahawks
RSI divergence. I'm so
receiver,
confused.
DK Metcalf. He's coming in. He just went through security. He's going to discuss finances, the importance of financial education, setting himself up for a life. A young guy trying to
Like
get
that
it
inverted
right here.
hammer,
I'd
like this
to
engulfing
learn a few
candle,
things,
both
too.
the
Looking
downside.
forward to this
Does have an RSI
conversation. Trading
divergence.
360. We'll be right back.
MACD's even bearish, but jeez. Wide receiver for the Seahawks is coming on. Little what is it? Inverse beta time for BBY. 4 hops. Put a stop loss my option at $70. At $98. No, if you put a stop loss, no, there's no cap to the upside. That's just if it starts coming down, then it'll sell it at $77. No, a stop loss, if you're long, is below your cost basis. I mean, it doesn't have to be anywhere, but no, you still have unlimited upside. Whoa, rejection there on BBBY. Don't get too excited. Not quite engulfing. I don't know, that RSI divergence and that inverted hammer. A stop profit. I mean, a stop profit's just like a limit sell, basically. Who would do that? Someone that can't watch it. If you're playing BBBY, you're gonna buy it for $1. And then you put a limit sell for $2 because you're not going to be able to watch it and try and time an exit. If you didn't do that, come back and you see it went from $1 to $2 and now at 10 cents, you'd be pretty sad. I have a pimple on my ear. It's really annoying, it hurts. Maybe not. Be both flagging up here. Interesting. If the stock is 531 now, good stop sells. I don't know. No way to tell you what's a good one on there. Can't answer that one for you. I have chamomile oil, or like oil lotion. I don't know. Make sure you wash behind your ears in the shower. Oh, I've had one behind my ear. Those are so bad. This one's right on my earlobe. Yeah, I've had those ones behind my ear. They get all super swollen. Ugh.
Wide receiver for the Seattle Seahawks. Here, so much to talk about. First of all, you have 4 seasons, tons of.
I don't know if I like these shorts right now.
The yards and all your receptions, and it's an exciting life for you, right? You came from Ole Miss, you went on to be
Oil,
this
yeah, we
NFL
have
star,
oil.
even an NBA in the celeb game, right? You were MVP there. I guess you could do it all. But tell me about why.
Yeah,
it is
first
now
he
that you're
still
looking
has that
at
little cup and
financial
handle on the
literacy
5-minute.
and trying to diversify. What it is that
I'd
you
say
talk
that looks like
about?
one.
Yes, man. Well, we mainly talk about first off my life.
This holding up
after
good. It's
football,
above
career after
BBY.
football, but starting it now and building it now to where we won't
GME
be
is
a
holding up
hiccup
nice,
after I'm done or
2.5%.
when I retire. It'll be a smooth transition. And what better way to start than now while I'm playing and while I'm still young.
And BBY got cut down.
With Joe McClain, who's my financial advisor and business partner. He's been a great teacher of mine, a great mentor, in the business realm that I'm fairly new to, but he's helped me along the way, and it's just been a great journey thus far.
Yeah, Joe McClain, I mean, I think that this is such a great time to do this because I was saying when we were in school, they said we learned to play the recorder. 3 blind mice. Yeah. Well, that has really helped me in my big life. I mean, right, this is the time when people are so talented and gifted and making lots of money, but so many athletes end up spending it or not allocating it correctly. Why is this part of your mission?
I think, if athlete or no athlete, if you're a young person and you come into a lot of wealth, you may not know how to navigate that. And so just as you said, there's no classes in school that teach you how to do this. This is just like a lesson in life where we can come together and collectively
there should be,
be curious and learn more about
No
how
classes
we
to
can
teach you how to manage your money.
earn a lot of money through income, but also how to get the money to work for you without being on the field and playing.
Yeah, I mean, did you have, look, when you don't have the education, I won't even say mistakes, just you were going, right? You paid rent, you did what you thought, but what have you learned so far along the way to get this right?
Well, just to get this right is, I would say, just being so curious and asking as many questions as I can and putting myself in uncomfortable rooms or situations to where, you have to grow and expand. And, Joe has brought me here to New York, and it's the Financial Literacy Month, so just being immersed in this atmosphere and walking in, the stock exchange and just seeing it up close. And I'm just excited like a kid in a candy shop, just learning new things and just staying curious.
I'll tell you, this place never gets old. I've been working here for decades, and it's just the financial capital of the world. And it's just so exciting, and you can see how your money works for you, right? And Joe, you actually have a list of reasons, and maybe you can fire off a few
One shallow
tips
cup
for us, right?
Oh, FRC.
Yeah, we did come up with the 50 reasons why athletes stay wealthy, and a lot of that was because everybody wanted to know the bad stories about why people go broke.
Not this one.
Reality, there's a lot of good
This cup
stories as
and
to
this
why you
handle.
stay wealthy, and first. The number one on the list was pay yourself first, which I think everybody has heard before, and it's a timeless strategy. Not everybody executes
when
on
it breaks, if it is resistance or
they read things before they sign. Not
if it does break.
Just jump on the next
Actual
deal
probabilities of
and
cup and
sign
handles aren't as high as like head and shoulders.
The rims are 22 inches or less. That's a fun one. That was me personally. I bought a truck for the very first time, put rims that were way too big on it, and I hit the curb and cracked it and cost me $2,500. So you know a true pro if your rims are 21 inches or less.
What the heck?
Yeah, I like that one. That's fun. No,
Cap on your rim size?
I get what you're saying. And look, there's certain, you work hard and you feel entitled to get a few nice things, but at the same time, at what point do you start to say no to yourself? Because I think
this is tricky, man. This RSI divergence is here, but then we've got this bull flag setting up.
Right? Isn't it hard? Because when you're growing up and then you finally say, oh, I'm working hard. Got to say no to yourself sometimes.
No, I think they can both coexist, but as long as you have a goal, end goal in mind, to where
gets me excited for no reason.
First, but at the same time, at the end of your life or when you're retired, you have that entrepreneur money, or you have money to splurge with or have fun with, and right now I'm trying to save 80% of
did another one?
Net taxes.
Did you want
just
to pull?
To put away and then work 20% of my money, so
oh wow,
I can go sleep at night.
Second one
that,
today.
If I retire tomorrow, I'm still going to be good financially. And that was one of Joe's ideas that I've adopted to myself, and I try to live by it day by day. So
he's getting all political.
Another reason why he's a great mentor. And
I don't think it has anything to do with stock market.
I love having in my corner.
Yeah, I love this story. And the truth is, we all know a compounded dollar over time will build so much
Especially
wealth.
at such a young age.
Yeah, that's what I'm saying. I mean, in the end,
BBY getting shut down a little bit there.
Now your dad was also.
Ooh, FRC, is it starting to break that
What were
handle?
some of the lessons that he taught you? And I don't mean to be
a little
hokey,
bit.
but whether it's financial or just spirit involved, you know, work ethic. What were some of the takeaways from his career?
Right. Well, he surrounded me with great players. You know, he played in Chicago. So Devin Hester, Alex Brown, Thomas Harris, and Brian Urlacher.
I have one last push up to that
I
410.
learned the work ethic early is, you know, I want to get to where they are one day. So I had to keep my head
Holding
down
up pretty
and just
well. I
continue
might
to work hard
jump
and
out of these
put my
shorts.
best foot forward in everything that I do. Continue to put God first and treat people right. So those are the three things that I live by, and those were the three things that, you know, he taught me growing up. But I'm at a point to where right now I'm teaching my parents, you know, financial literacy, or you know, what not to do with their money or what to do with their money. And you know, it's kind of a blessing that I'm put in a position to where, you know, my parents raised me to a certain age, but now I get to pass knowledge down to them and my siblings.
And being obviously the star you are, I mean, where do you see your career? Because I love this financial literacy stuff, but truthfully, I mean, you have a great career.
Yeah, you need to be able to stretch it.
Where do you see the career going? I mean, you have 4 years with the Seahawks. You almost, I know the Jets were sort of.
You have your computer set up? You get software on there yet? Operating system?
So you left us hanging with that. But where do you see your career going?
I mean, wherever I take it. I think, you know, God has blessed me to be in a position and surrounded me with great people to where, you know, they see my heart first and not, you know, my pockets. So wherever I plan to take it, I want to get into acting, fashion, and be a wealthy business person one day, to where, you know, when I have kids and their kids, they don't have to worry about anything but the value of $1. And, you know, I can just pass along as much knowledge to the next generation as I can. And, you know, that's pretty much my only goal.
410, here we come.
Is to help the next generation of athletes and African Americans and anybody else out there seeking help.
Right, right. I mean, what would you say? And those are beautiful goals. I mean, it's so nice to be a good human, right? Christianity, leading your faith.
This is
and
the plays on the Seahawks.
The rest of the folks along the way.
He's a wide receiver.
Joe, what do you think about? What's your advice to young folks at this point? That probably, I mean, no matter what socioeconomic status they're in, they're still just on their TikTok. I mean, you know, what do you tell them?
Get off TikTok for a little bit, read a book, ask a lot of questions, put yourself in a room where you feel like you're not trying to be the smartest person. You could be there and absorb information. Don't be afraid to fail, and know that there's going to be mistakes along the way, but learn from them. And then just keep believing in yourself. And the more you can put away for a rainy day fund and pay yourself first, then that reserves the right to fight another day and keep persevering.
Yeah, yeah. I love all of this. And in the meantime, DK, I congratulate you and your career on with the Seahawks. And fastest NFL player. I would love to do a race. Imagine if we did a race around the whole, you know, I always wanted to kick a soccer ball from one side to the other. I mean, maybe I could do a race with all the traders. You could do a traders race
I
later.
got you by landslide there.
You blow them away. But the final question here, you know, do you want to say something to your Ole Miss friends?
Oh, howdy,
I mean, you know, you got to love that. That's your stomping ground, right?
Yes, ma'am. So, you know, just growing up in Mississippi and being a kid from Oxford, you know, in New York City or in Seattle or in LA, you know, a lot of people don't get to, you know, see that much of the world or that much of the United States. So, like I'll keep reiterating, God put me in this position to help other people, and that's just what I'm trying to do, is just help, you know, people from back home just, you know, achieve their dreams and, you know, be the best that they can be. So, hotty toddy and Mississippi, I love you.
Hey, that was
Hotty
great.
toddy, Mississippi.
All right, thank you both so very much. Joe McClain, MAI Capital Management.
PC's ready.
And
And
DK
for
Metcalf,
hard drives
wide
run hot.
receiver for the Seattle Seahawks on Financial Literacy Month. Good purpose.
Just be running solid
Love
state
this.
then.
Thanks so much. Coming up next,
60
we get a preview
Celsius,
of the
that's
oil
too much.
stocks. We'll be right back.
I don't know about those hard drives. That sounds pretty fast. 6,600 megabytes per second. I thought they were measured in, what is that in RPMs? That's the last hard drive I got. It was a 7,200 RPM. Yeah, BBY is set to go to the OTC Wednesday morning market. So unless something changes, that's where it's going. Yeah, stop losses take a lot of the emotion out of it. You just set it and forget it. There's some downsides though too. I mean, there's times when the market will do certain things to trigger stop losses, get you in or out of a position that maybe you didn't want to be in, or get out of, or whatever. But it's probably more helpful than it is harmful. Yeah, if for nothing else, yeah, taking out the emotion of the trade, the exit, like when to exit. Even if you're watching it, it's still... I do stop losses even though I'm watching stuff on the futures. You should really paper trade, Ricky. Just test all the stuff out with paper and see how it works. Much cheaper that way. For the NAND hard drive. Not Tuesday. Wednesday. The 3rd. You mean a Nano, not an NAND, right? Oh, it is a NAND. I don't know what a NAND hard drive is. Not and. Very fast. Oh, it is solid state. Why are you calling it HDD? It's flash memory. Wait, NAND hard drives. Interesting, I'm not familiar with these NAND hard drives. Still solid state. Oh. Crucial prefab plus 2 terabyte and bye, new hi there. Bull flag won the battle. FRC moving up. See what happens. EO's going too. Got 1.5. Good. is up 2.8%. About 7.5. It's a heatsink on the hard drive. So it's not it's solid state, but they call it a hard drive.
Upstream names. We do have some buys or strong buys. Pioneer is one of them. We have 4 stars or buy opinion on PXD. EOG Resources, we have a 5 stars opinion. I think these are names that have a little bit more leverage to the Permian Basin. That's where a lot of the growth is likely to occur. EOG is actually a bit diversified beyond just the Permian. They also have operations in the Eagle Ford and in the Powder River Basin too. So a lot of plays that could provide a lot of growth potential. And I think really our hold opinions on Exxon and Chevron are really valuation driven. If you look at where they're trading relative to expected 2024 results, it's pretty much smack in line with where they normally trade. It's not really a great value opportunity for Exxon, but they're not overpriced either.
Well, a water-cooled setup wouldn't help with your hard drive, though, so I guess it doesn't really matter. Need more fans, maybe.
Thank you so much. Great to see you both. That's going to do it for us here on Trading 360. Thanks for being with me every single weekday. I'm Nicole Petalides. I see you at 11
Nicole
a.m.
Petalides.
Right here on the TD Ameritrade Network. Keep it here. Fast Market is next.
SPY is still climbing, dude. 1.2%. Wow, I should have kept my longs. My futures. I considered it last night too. I was like, should I take profits? I had a stop profit on it or whatever, stop limit order. I had one for here, which would have actually triggered, I think. But then I should end up closing at that point anyways. Up, up, and away. Evlo? Evlo. Biosciences. They get a drug approval for a 50 non-microbiome therapy. Just open your SPY put? Really trying to grab that top, huh, John? I'm waiting. I'm waiting for 410, I think. I was about to go long on that break right there. Full flag break. Are you playing dailies or what are you doing there, John? SPY is squeezing. Look at that move, that's crazy. Looked at the wrong chart and opened up a SPY put? What? Did that really happen? Dude, that's almost as stupid as my mistakes today. Really quiet. No, I didn't sell BBY. If I don't get profit on these before OTC, I'll hold this position for whatever. I don't know. I mean, I'm thinking now, but maybe that's stupid. Yeah, you could average into it. I think you've got some more time though. I mean, you got probably another. Got a little bit, I think, till 410. Or with that little pullback there, depending on when you got it, maybe it's profitable. You can dump it real quick. Depends how much time you got. Is it in the money? Yeah, maybe turn to a long-term play. That ends up being anything. First Republic's starting to move up. Pretty slow, but cup and handle looks like it's playing out. Yeah, I just don't know if we'll be carried over to that that new business trays. I'm not going to be taking a loss on BY right now. Ace. He's actually flattening out finally. Wait for a pump at least. It puts on SPY. Any lawsuits against BBY, I would not cross your fingers for those to benefit you much, if at all. There you go, First Republic. RC is moving up, 14.5%. The cup and handle's turning into another cup. Actually got a little inverted head and shoulders here too. Head, shoulder, shoulder. Fun cheering you guys on, not having any position. Yeah, you have till the 3rd. So final time will be after hours on the 12th. You want to close before OTC. Loose it up 12%. Thing's been ripping.
Will be in the range of $86 to $90 billion. Does expect Reality Labs operating losses to increase year over year in 2023, though. So the year of efficiency rolls on. There was some speculation that maybe Meta would cut more jobs. They, of course, cut 11,000 in November, 10,000 in December. They're done with 2 of 3 waves, but no additional job cuts coming, but it seems like the year of efficiency is working out pretty well for this company, based on the fact that investors are cheering this report. Stock up 14%, now up 99% so far in 2023.
Caroline, digital ad spend looks like it appears to be firming up, because you're seeing it in Amazon's price activity, along with, it's interesting. The strength in Microsoft lifted some of these names because of cloud. The strength in Meta is lifting some of these names because of digital ad spend. Google Alphabet didn't rally on its own earnings, but it's rallying today on Meta's earnings. Amazon has gotten a nice lift out of both Microsoft and Meta's earnings, even before it comes out with earnings. Is this just the entire sector? Remember, there's so many names that can be connected to digital ad spend. Are we getting the early signs that this is starting to recover here? Because that's good for all these names, Caroline.
It certainly seems that way. When I was looking at the slides yesterday, it seemed like more ads, but at lower costs. So I think that's something to consider. I mean, obviously we'll have to wait and see, but based on the fact that analysts, despite the fact that Meta's up, almost 100% this year, continue to raise their price targets after this report. So obviously getting more bullish on this name. 75% of analysts at this point still have a buy rating, despite how far it's run already this year. Evercore lifted to 350, keeping its outperform rating. That's the highest that I've seen on the street. Citi is at 315, B of A now at 300. On the lower end, JMP, Piper Sandler at 270, Stifel's at 280. So, I mean, quite a few price target hikes. The median is now 275, which still represents about 15% upside from today's gains. So analysts definitely bullish on this name, and I guess that would be a call on the overall ad spend space as well, because with Meta, you can't necessarily have one without the other.
Yeah, and those opening remarks from Mark Zuckerberg spent 6 minutes talking about AI and about 90 seconds talking about the metaverse. So there you go. Investors like that kind of angle that they're seeing. All right,
more than 90, and the stock might have been lower today.
That's true. That's true. All right, thanks to Caroline Wood, senior markets correspondent here, breaking down the Meta story. But now let's bring in Nathan Peterson, director of derivatives at the Schwab Center for Financial Research. Nathan, Kevin mentioned the GDP report. Headline number, 1.1% growth rate. They expected around 2%. So a miss there. But if you look at some of the inflationary aspects of this number, they're going the wrong way. They're moving higher. And one of the things that stuck out, real consumption surged 3.7% from 1% previously, hottest since June of 2021. Those aren't the numbers the Fed wants to see.
Yeah, good morning, guys. And you're right. I mean, so we can't declare victory just yet on inflation. And, when you look at those Bloomberg probabilities, I mean, the markets are basically saying, all right, we got a 90% chance we're going to get a 25 basis point hike in May, but then they're done. And to your point, Tom, if inflation, is sticky and continues to kind of just hang around.
Maybe not, John. I don't know, man.
Signals rather than showing a gradual kind of deceleration is what the Fed would like to see, or Fed would like to see more than a gradual.
I mean, if you bought it right when you said, that would have been a great time, just because it was
then does that affect
right in the middle of a rip.
Outlook? Now, I don't think the Fed said they're going to do one and done. That's not what they conveyed, but that's what the market is conveying. So if we get PCE tomorrow, let's take a look at that and see how that comes in. But if the Fed conveys that they're going to
June for BY? Yeah, I don't know how that'll all be affected, though, on OTC.
In the coming meetings, maybe that catches the market off guard if the expectation is that basically they're one and done. So we'll keep an eye on what the PCE is, and then continue to monitor the data. We saw it, inflation expectations and the University of Michigan sentiment, that came in above as well. But then there's also been on the ISM prices paid and those types of things that came in below. So we're still kind of getting a little bit of this mixed bag. So we're going to have to wait to get more clarity, and then we're going to have to wait to see and hear from the Fed.
Yeah, definitely. Fed's going to be in focus next week, as we're in a quiet period right now for the governors at this point. Kevin, but if you look at, pending home sales dropped 5.2%. That wasn't a good number. In jobless claims, That reversed, went back down to 230,000 there, and continuing claims dropped. So the data is kind of mixed here compared to earnings, I think, at this point. But
I'm not thinking
does
the
that
cycles
matter
keep going
when
in
you-
OTC.
when you're looking at the overall market?
Well, there's two
Well,
stories
I-
coming
I
out
don't watch
here right now, right? It's the
really
earnings
OTC stocks that
stories,
much,
which is
so I
a
don't
pretty
know.
good story.
Right.
You can make a case
3.2% on
that digital ad
GME.
spend is driving a lot of high-profile names. Remember, these are
First
not
Republic's just been
secondary and third-level
climbing
names.
back up
These are,
slowly.
you know, Google Alphabet. This is Microsoft. This is Meta. These are high-profile names having pretty good earnings, but we're not going to get a Meta every day, right? We're not going to have one of these to bail us out every day. And this data, like Nathan said, half the amount of GDP and a big jump in personal consumption. So that's got to be a little bit. All I know is yields jumped on that data. The dollar went from negative to positive on that data,
Right.
and crude oil went from negative to positive on that data. Those three things this week have worked against the market. Now, it's not showing up so far in the numbers. The market has powered through the overall economic data, but you know the day isn't over yet, Tom. But you know 1.2% on the S&P. That's a strong day.
That is a strong day. And Nathan, if you look at some of the other earnings that are out, I mean,
What
you've
did
got
Cinemark do?
Hasbro, up today at post their earnings. Comcast, I mean, Comcast up over 6% after earnings.
You know, made a
I mean,
contract
we
with the
never
government?
actually see that in names like that. So I don't think this is basically what we thought it was going to be at the beginning of earnings season, where there's going to be winners and losers. I mean, Caterpillar's down a little bit, but it seems like across the board, the majority of these names are beating expectations, and they're not lowering guidance. They're not raising it too much, but they're not lowering it. And I think that's what a lot of people expected.
Yeah, absolutely. That's the story that's really keeping the buoyancy in stocks here. You know, if you start at the beginning of the quarter, expectations were -6% on the EPS. Now we're about halfway through, -1.1, so much better than expected. And the revenue growth was anticipated to be 1.9% growth, and it's coming at 5.3. So that kind of leads to the soft landing narrative. And hey, where's this earnings recession that a lot of pundits have been, you know, looking for, talking about, you know, the margins getting squeezed. So 82% beat rate on the EPS and 67% beat rate on the revenue side so far. So that's really the story that's keeping stocks, the hopium, basically alive here. And then if you couple that with, you know, we talked last week about that excessive bearish sentiment and positioning that we've seen. That's also could be a contrarian indicator that works in favor of the bulls. I'd say this week, though, if you look at, you know, the two red candles we had over the past couple of days, I think we
I'm not
still
saying it can't
have
run
to keep the regional banks
in
in
OTC.
mind.
I think
And
it definitely
hate to
can.
single out a company, but that First Republic,
I'm just saying, I'm
if you
not
look
sure
at
if
what they've done over the past couple of
the
days,
cycles
and the
continue
government basically saying they're not going to bail them out.
like they have
If you
been.
look at the
I
regional
think,
bank
I think since it's on a different market,
index,
it's just going to be
it's trading just below where the
totally different.
SVB bottom was back in March, and that's not what you want to see. And so what that price action tells me, the fact that we
Is
did a
Cinemark already-
crescendo low on SVB
Is
and
it
then
already
gradually recover, we're actually trading
on
below
OTC?
there, is that that's still a question mark.
Oh, it
So I
still
think we
trades.
have to keep that in mind. Lastly, I'll say
Still on Nasdaq.
technicals are important. 4,200, the bulls want to see
moving up
that
more.
cleared. Today's a nice green candle that we
New
have
high on the
today,
day for
but the
SPY.
previous 2 days were
Breaking
making
out.
it look like we were rolling
FRC
over, which
moving
reinforces
up out of this
resistance
handle.
at 4,200. So there's a little bit of both bullish and bearish kind of narratives going on here that we have to keep an eye on.
Yeah, and I think maybe that's part of the reason
That's
that
all
we're
right, John.
seeing this jump today is that
You
the
probably heard my mistakes
sentiment
earlier
out
there.
there,
If
and
you
the
didn't, let me know. I'll
majority,
tell
I
them to
think,
you so you
of
feel
what
better.
investors are looking at, you know, maybe 2, 3, 6 months down the road is really quite negative. So maybe getting that contrarian pop here today.
Somber,
on,
I mean-
some of these decent earnings reports. All right, guys, let's take a quick break.
I don't know.
When we come back,
Once it's
we're
an
gonna take a
OTC,
look at
I have no
another
idea.
name that has earnings, and that's ExxonMobil tomorrow morning. It's up only about 5% so far this year into the report. We'll be right back.
See it kind of testing that trend line. Maybe set up another cup and handle.
It's down over 7% this year and off 27% from a year ago levels. Now, we typically correlate Exxon, Chevron, and some of these big energy companies to the price of oils, but we've seen a nice divergence here.
I have it on my Thinkorswim platform now, the comparison between crude oil prices and the price of ExxonMobil stock. But Tom, here's the thing. It's still, crude oil is still high, historically high.
Right.
And so you're right. They do better at $120 and $130 in crude oil, but they do really well at $80. At $75. They do just fine. So it's just a matter of, you know, a lot of money or ridiculous amounts of money. And every month, every quarter that they continue at this pace, their balance sheet keeps getting more healthy and more healthy. They keep buying back stock, returning money to shareholders. So these companies now, because crude oil's been up here for as long as it has, Tom, this company is not only really healthy, but also ready for the next downturn, frankly. You can see that. I mean, the price of crude oil has come down, but it's only come down to $75 and $80, Tom. It's not like it's crashing to $40. So these companies are still remarkably healthy at these levels for crude oil.
Yeah, and, you know, I'll bring Nathan back in here. Nathan, you know, this isn't like a pure oil play either. They've got their, they've got their upstream business also, midstream. They're expanding.
Getting on top here, or maybe just consolidating
capacity at this point. What's your take here on Exxon? And you got an example trade for us also.
Yeah, absolutely. If you look at the past 2 years, you know, nice steady uptrend.
That FRC kind of rejecting that resistance there
multiple times over the past since December of 2020. Cash machine, you know, like Kevin suggested, 3.1% yield. Forward PE of about 12. But if you do look at some of the estimated revenue and EPS year over year changes, they're actually slightly negative. And that's probably baking in, to your point, Tom, the expectations of where oil prices are going to be. So looking at the chart recently here, it's for the month of April, it's basically been between 114 and 117. And when I look at the previous earnings announcements that Exxon has done over the past 4 or 5 quarters or so, there's a tendency for it to run up into the earnings report, but then the next week or so, you do see some of that selling pressure kind of kick in. So, you know, IV isn't that elevated. If you had an expectation that, hey, history is going to rhyme here and Exxon is going to likely be soft the week following earnings, I was looking at next Friday's 117, utilizing that potential resistance here that we've seen.
No, I don't see a cup and handle on Neo.
And then buying the 119
other
for
than
protection. Here doing a bear call spread, a credit spread.
Inverted cup and handle might be forming.
You can get about 70 cents for that going out to next Friday.
Yeah, let's
for a
break
bounce
this
to
down,
gap fill
out
and
the May 5th
resistance,
weekly series. So you're giving yourself 8
downside
days.
further.
So it's not a pure.
Well, you've got going for it. Bullish side is
the
inverted cup and handle, sure, but also this R side divergence.
Buying the 119 strike call, collecting roughly about a 70-cent credit on that. That means your risk is going to be $130.
You got to have patience. Could be a couple days, could be a week.
But you've got a cushion to the upside. 117.70 is a break even.
This is, you know, a spread that, let's say, you know, you are long ExxonMobil stock. This is a spread that you could put on and not affect your upside.
BBY
right?
stuck under VWAP today.
This is basically a move against. It's about 14 deltas short, so you are.
Yeah, at first he does like those cup and handle.
It can be an outright play. It doesn't. You don't have to have the stock because it's hedged and risk defined. But yeah, you're collecting about 70 cents. Your risk is about
thanks guys for your likes.
$2 minus whatever you collect on that trade, Tom. It's collecting theta.
27, well done.
Like you mentioned, it's currently higher than where the stock is trading. So any unchanged move or slightly down or even slightly up, and this is still profitable, Tom. It's a textbook short call vertical.
Yeah, and Nathan, the probability that 117 strike is going to be out of the money over the next 8 days is about 62%. When you look at these, and some people might say, oh, well, if you want to do an earnings play, do this week's Friday expiration, the April 28th cycle. Why do you look at going out maybe an extra week on a trade like this?
Yeah, so this is a good practice in terms of, how do we set up a trade like this? So when you guys send over Exxon and you look at the charts, you look at the technicals, you look at the price of oil, what's going on there, that's kind of range bound between low 70s and low 80s, not a lot going there. Technically, that's kind of what stuck out to me in terms of it hit a peak around
Hills made it back
119
up.
if you look back in February, and then this month, literally, it's just been, in a $3 range
climbing up that 50
there.
moving average perfectly.
It's partly because of that resistance level, but then the other reasoning here, Tom, is that, hey, how does this guy behave before and post earnings? And just look over the last 6 quarters. For you home viewers, just go pull up a chart and take a look and see how Exxon has performed.
Almost 3% on GME.
Following,
Look how close
the
got to that
last 5 or 6
1940
earnings
resistance
reports, and so that's
and
the
double topped
reason,
up there.
for pushing it out to next week. So let's say the stock does trade up a little bit tomorrow, 117,
still kind of
wherever
climbing here.
it may go. I think the implied move was about $3.50. Then if you're holding to that thesis that it has a tendency to kind of drift lower post earnings, well, that's kind of your thesis heading into next week.
Tom, remember, when you're looking at these, for our viewers out there,
Turka.
every stock
He's up
and
11.
its corresponding options have their own personality. And
No
the
sell, no smell.
expiration week implied volatility here is only 55.
Yeah.
This is not a big premium name.
Bounced off of that.
So you maybe either have to
didn't really make it
adjust
there.
your strategies or adjust your expectations on a name like this, because you just don't get the big premiums that you
ENS
get
down
in a
4.5.
higher priced, more
Gap almost
volatile
filled.
stock. You're just never going to get that here.
Yeah, and
Meta is going
and
again,
as,
15%.
Nathan mentioned, the expected market maker move based on option pricing
This
right
all-time
now
high?
is about 2% either.
Right.
Wow,
It's
look
not
at
a big move.
look at the monthly
up or
candles
down,
on
so
Meta.
Not a big move here, but a good look at an example trade here, taking maybe that outlook that we're not going to see any big gains in Exxon, and maybe it does slide, but you do have a cushion to the upside on that. All right, thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio.
Stop looking at me,
Discussion on
Swan.
Amazon, which has risen over 25% so far this year, into their earnings report after the close. Can this be another mega cap tech name that spikes after earnings? We'll find out.
Another little cup and handle maybe for me on FRC. The China Defense Ministry, U.S. continues to strengthen its military deployment in the South China Sea, deliberately pushing up regional tensions. Regional countries should remain high alert to it. About 113,000 adults and households with annual incomes of at least 200,000 reported receiving benefits in the last 7 days, up 500% from last year. $200,000 a year? By age 30, 42% of millennials own their homes compared to 48% of Gen X. More than half of baby boomers. With 44% of companies reported, S&P 500 Q1 GAAP earnings are down 1% year over year, the fourth consecutive quarter of negative year over year growth. The best we could hope for is that this market would bottom at about 3,000. Jeremy Grantham said. The worst we should fear is more like 2,000. Fake IDs repeatedly enabled Hyundai suppliers to employ child labor in Alabama. Oh. In 2022, 4.5% of households had no checking or savings account. Bull flag, same thing as doing down here. Bull flag, and it dipped. Another one, bull flag, SPY relentless today. 9 of the top 10 central banks buying gold in record amounts are in developing countries, including China, Russia, and India. Out there living the American dream. U.S. 30-year fixed-rate mortgages 6.43% April 27 week versus 6.39% prior week. Going up. Incoming data suggests housing market has stabilized from sales and house price perspective. Maybe a little pullback here. Not quite engulfing. Oh, wait. Biden says U.S. GDP report shows strong economy. It was 1.1%, estimated around 2%, with previous at 2.6%. Maybe he was reading China's GDP report. Peter Lynch has one of the best investing records under his belt, but he still regrets not buying into Apple.
If they start to lose ground to Microsoft, this is a company that could really disappoint on earnings, Andy.
Yeah, no, I completely agree. I think margins are a very fair question because the entire premise behind an Amazon investment for 20 years was, don't be profitable, reinvest in your business so that once you're the big player, you're the only player in the game, you can reap all of the profits and have huge margins. Well, here we are, Amazon kind of the only player in the game for many years, and they did reap huge rewards from that for a while, but now you start to see margins contract again. It starts to get a little bit concerning, and I do think that Microsoft, the whole AI movement, it's going to bring a bunch of new business to cloud computing. There's absolutely no doubt about that. But the way Microsoft is winning that business has to be concerning to Amazon because they were the default choice for so long.
Yeah, and Andy, when you guys look at this, as far as happiness goes, I know that's one of the key metrics that you guys look at here. It doesn't seem like the consumer spending on goods as much as, during the pandemic run-up here. Are you seeing any deterioration in any of those metrics for Amazon?
Yeah, a little bit. I think just overall, the big takeaway for us is Amazon, just from a technology, from a competitive landscape perspective, its dominance has waned considerably, and I'm not even sure that I would call it dominant in terms of its offerings anymore. It's certainly dominant in terms of its market cap and market share in a lot of cases, but that seems to be dwindling because the products, the technology, and the services they put out there simply aren't that much further ahead of the competition as they used to be.
And going into this report, I mean, we've seen these blowout numbers out of Microsoft, out of Meta Platforms last night. What kind of score do you guys have on Amazon?
Yeah, unfortunately, this is one that we're pretty much completely neutral on. I think the more the market rallies today, the higher the expectations get on the heels of that Microsoft blowout. I think the more likely that Amazon is to disappoint. So if you're looking for a directional bias, I'd have to say it's probably to the downside, especially if we can close strong today.
All right, great stuff as always. Great data. Appreciate it, Andy. Have a great day.
Thank you, too.
All right, that's Andy Swan, co-founder of Likefolio. You know, Kevin, the expectations, you know, Amazon's different from a lot of these other tech companies, right? And he mentioned the deterioration in their AWS. Right. Microsoft came out in their conference call and said, hey, we're taking market share, and it's most likely going to be from AWS.
They got to be taking it from someone, Tom.
Right, and then you forget about the other companies in that cloud space that are working on that too. You've got Google Alphabet in that mix. Oracle's making, they've got relationships with almost every Fortune 500 company. So how do you want to look at this from a trading aspect?
Well, from a trading perspective, Tom, I think it's going to move. It already has moved. So I wanted to do something where give myself a little time. So I went out to May 5th.
Maybe.
I wanted some move tight. I'm willing to pay some money for a tight move. So I went with a long iron condor, Tom, but based on Andy's data, based on my reading, I skewed it to the downside. And how did I do that? Well, I did a $3
Look at neg.
vertical. $3.
My options never
and
filled.
I did a $5 put vertical. I did the 113, 116 call vertical, right in line where that short strike is the expected move, right? 113, 116 call vertical. On the downside, 103.98 put vertical. So $3 on the call side, $5 on the put side. I'm paying about $2 for this, Tom. Now, if I'm wrong directionally and it goes up, not down, well, I max out, I make $1 on this trade because it's trading right around $2. But I have a chance to make $3 on the downside if I'm right. And I don't care which way it goes, Tom. I just want to move. And that 98 strike, that short strike on my put vertical, right at the 50-day moving average.
Yeah, and the option market's pricing in about a plus or minus $7.5 move in the shares, but we know that these big tech companies can move more than what's the option market's
we're
pricing.
seeing Meta, Microsoft, big moves. If this one has one in either direction, this is
Durka.
You know, if you get the move that you're
Continuing
looking for,
its rally, 16%.
Move, this is the right trade for an outside move. Does that mean we're going to get one? Of course it doesn't. We don't know until the numbers come out, Tom.
Right. So let's break
like
this
a thumbs
example trade down. May 5th, weekly cycle, so 8 days till expiration. You're buying the 113 call, selling the 116 call. So there's that call vertical that you're long. And then on the put side, you're buying the 103 strike put, selling the 98 strike put. You're paying roughly about a $2.05 debit on this long iron condor, right? So time decay or theta works against you in this trade. Your break even's just below 101 on the downside, so you want it to go below there or above, just above 115 on the upside. Kevin mentioned that you've got less profitability on the upside, about $1. Or 95 cents on that particular side of the trade if it goes above the 116 strike. And then on the downside, your profitability is almost $3, and that's below 98 on this one. The areas you don't want it to be is between those strikes, basically 113 and 103, because that's where your debit is, or the $200 in risk that you have on that particular spread is. So you need an outsized move on this one. Kevin, when you look at this, and typically we talk about taking advantage of higher implied volatility and theta on trades like iron condors where you want it to remain neutral, but at the same time, you're giving yourself an extra week on this one. So even if you don't get the move on the first day or two, you have time.
Right, you're giving yourself duration. Could you do it? you could save a little money if you do it with 1 day to go, but now you're based on 1 day. This, if the trend goes up, you're giving yourself 9 days, not 1, or 8 days, not 1, Tom.
Yeah, using those same strikes, if you were to use the April 28th weeklies that expire this Friday, it's only $1.80 debit.
Yeah,
so
you're basically paying 20 cents for a week.
Yep. Yeah, that's a great way to look at that. You're paying for a little extra for duration on that one. All right, Kev, good look at the long iron condor here, not the short one. All right, coming up after the break, we're going to take a look at Intel, which reports earnings after the close. The stock's been under pressure for the last year. We'll talk about that when Fast Markets come.
Interesting
right
how BBBY is just shut off. Back to VWAP for bed math.
Welcome back to Fast Market here on the TD Ameritrade Network. Before we take a look at Intel ahead of earnings, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network, to give us a market breakdown. Ben, stocks just off of session highs here. We're seeing a broad-based rally led by communication services and tech here.
Yeah, Tom, here in Chicago, in the newsroom, we're keeping a very close eye on the rally that we've seen in the indices, led by tech sector. NASDAQ up over 2% on the day, but we've seen the SPX up to 4108. I had the NASDAQ up to 13,085, and those two majors have taken out yesterday's highs, but the Dow and the Russell still have yet to take out the highs from yesterday. So follow through somewhat limited in two of the four majors, but look at this across the board here. All four of the majors in positive territory. Again, just a little bit of divergent in terms of follow through, but we've been kind of accustomed to those intraday divergences amongst the four major indices. But, you know, speaking of divergences, an interesting dynamic today. Rates are higher, yet the tech sector is enjoying bid activity. And again, even the Russell up over 0.5% here, Tom, with concerns related to some of the regional banks resurfacing again this week. I've been looking at tech. It seems to be almost a bit of a safety play, but saw some data this week, or I should say today, the jobless claims coming a little bit lower than expected. GDP ultimately kind of mixed. I guess the inflationary pressures ultimately were the focal point here. But, you know, another day where investors are focused on the positive, shrugging off the negative, earnings helping boost that sentiment, and a lot of focus here as we head into some of the names to come, specifically Amazon today on the close.
Yeah, we got big oil earnings tomorrow, Ben, with Chevron and Exxon reporting. crude oil down nearly 4% so far this week. What are you seeing on that front?
Well, I mean, a bit of a range-bound trade for the most part there, Tom, right? Recently off the 85
Well, I'm about to
spike
break
high
out of
we
this
saw in
bull
reaction to the
flag.
OPEC cuts. We saw lows a couple weeks ago down around 63, tied to some of those demand concerns. And, you know, while we heard from the IEA this week, there hasn't been a lot in terms of news. The draw yesterday in terms of inventories, but, you know, prices have come off. And I saw 7 of 10 days to the downside in terms of crude oil today amidst demand concerns. I mentioned the IEA. They really kind of warned of OPEC production cuts and how further prices would add to inflationary pressures and then accelerate that penetration of electrification, right? Vehicles, EV vehicles ultimately. But keep an eye on, again, crude oil right now. We've got the dollar slightly higher here today. I think that's bolstering some of what we've seen in terms of the recent downside momentum. But there you can see on the chart, Tom, for the most part, comfortable in the middle of the range. Again, 83 to the upside. We'll call it 63 to the downside, hanging out right around 75.
All right, great rundown here, Ben, of markets and oil. Appreciate it. That's Ben Lichtenstein, host of the Future Show here on the network. Now let's bring in George Tillis, senior markets correspondent here on the network. We're talking more earnings here, George, and we're talking Intel. The stock over the last year hasn't done great, down about 35% from year-ago levels. But when you look at this, it's up about 10% so far this year, but fallen 10% so far this month. It's rolled over pretty hard. You know, expectations on Intel going in earnings seems to get lower and lower every quarter. What are your thoughts here?
I was just going to say, Tom, if you look at the earnings profile for Intel, this is a low quarter expectation. They're expecting a loss of about 16 cents. Now, if you compare that to last quarter, they earned about 10 cents, and the previous year at 87 cents. But we also have to give them some credit because they did spin off Mobileye, which is effectively their autonomous vehicle technology-based business, which actually reported earnings today, and they missed and provided lower guidance. The stock was down last I looked about 22%. But nonetheless, if you look at the sales, excluding the Mobileye, they are expecting about $11 billion in sales, but that's quite a bit lower than the $18 billion from last year. So the expectations for sales are very, very low for the company. In fact, you know, the company did also bring out some expectations of new chipset designs, things like accelerated computing chips, artificial intelligence chips, but also they've actually lagged quite a bit alongside AMD and Xilinx, of course, which was purchased by AMD for their field programmable chips. Now, Intel has made some headways into that space as well. But unfortunately for the company, we know that CPU chips, which is about 80% of total market share from Intel, have been lagging. And I think that's one of the reasons why the stock has been underperforming. Now, the stock did break above a level of about $31, and this was a few weeks back, but it's been back below that level again. So typically speaking, when you see these false breakouts and then a retracement back below those levels, which was a 2-quarter resistance area, that speaks to potentially some challenges. So, you know, looking at this, I would say that the expectations for the next few quarters is still positive, but lower, because last time we talked about the stock, the expectations for 2023 around 53 cents a share. Now they're around 51, so they've lowered their expectations just slightly, and still trading right now at around 57 times forward earnings with revenue growth
strong
as
after
well as
the
EBITDA
40%
growth,
loss.
which is still going to expect to be negative.
Not looking like more loss after the 40% loss.
They have to change their game. I think at the end of the day, they have made some headways, like I said, in the field of programmable array chipsets.
23%.
But I think the industrial and the manufacturing space is still an area that they have lots of room to grow in.
Georgia, 15-cent loss. That's versus 87 cents profit a year ago.
Yeah.
$11 billion in revenue. That's down 37% from a year ago. This is a company that will benefit from a recovering PC market, George. But now a lot of people are talking that's not going to happen until 2024, not anywhere in 2023. And let's face it, besides all these problems, George, they also have an AMD problem and a company that continues to chip away at their market share. And so it's hard to look at a positive scenario. This stock hit a nice run from late February to early April, but like Tom said, it's rolled over harshly here.
It has, and the thing about it is it's so concentrated in the CPU market that's one of the reasons why the stock has been underperforming. There was some positive light. I think we talked about this right around the time it was about breaking out the 31 or so dollar range, but it's breaking back below that, and that speaks to some challenges I think the company's got going forward. And I agree with you when it comes to the CPU market and the PC computing market, we're probably not going to see resumption of growth until 2024.
Climbing more.
The stock is fallen below that area of support now, which was resistance back at around $31. So we'll see. I think the product suite they announced not too long ago looks very promising, especially in the data center, the server,
GME,
as well as the
top
CPU areas.
underneath that 1940.
But I think the chipsets, the manufacturers that are in the of chips that are in manufacturing and automotive areas of the economy right now are still quite resilient and still in demand. But unfortunately, Intel too much concentration in the CPU market, and that's one of the good things, especially when there's a cyclical uptrend. But now, as we know, there's a lower demand for CPU chips, and we can see it's in a downtrend.
Yeah, you wonder, during that March 29th Data Center and AI Investor Conference, they mentioned the AI chips that they're going to come out with, the partnerships they got with Microsoft and NVIDIA. So wonder if they actually hammer that home during the conference call after these results. All right. Thanks, George. Appreciate it. That's George Tillis, Senior Markets Correspondent here, breaking down the story on Intel. Kevin, and that's kind of one of the things I wanted to hit at. Down 118%, they said, year over year as far as EPS goes for their estimates. They made 87 cents last year in this quarter. They're expecting minus 15, minus 16 cents, and a revenue decrease of nearly 40%. Yeah. But, you know, look at the stock's down 35% from year ago levels. It hasn't participated like some of the other chip makers, but they're the one taking market share from Intel.
Yeah, listen, I think this company's got big problems, and not only is the PC market weakened, but they have other problems other than the PC market, Tom. And the demand there, they have this AMD problem. AMD is, remember, they had to delay chips when AMD is bringing out their chips. AMD's improving their chips, and Intel can't seem to get in the game yet. Now, that being said, they're an enormous chip maker, right? I mean,
world's largest.
Yeah, they're still the world's largest. Yeah. So if they get it right, the upside could be pretty incredible. But Tom, they haven't shown that they can get it right yet.
I know. Every time you think they're going to turn the corner,
you keep waiting for the good news, and it's just not showing up.
I mean, investors have taken it on the chin over the last several years in this company. But I wanted to look at a strategy because implied volatility, even though the stock's turned down 10%. This month, the implied volatility is still in the lower third quartile over the last 52 weeks. So implied volatility not that elevated. So I looked at a different strategy here, Kev. A lot of people want to buy the shares. Remember in February, they slashed their dividend down to 12.5 cents per quarter. You know, who knows if that's still a feasible thing at this point because they tried to shore up their balance sheet.
And hold on, Tom.
Yeah.
One thing to talk about, because we talk about dividends a lot in this show, and we don't like to really dip into them too much. Make sure you understand that when a firm has an outsized dividend, that you're careful about the overall health of that business, because what can happen to that dividend? What happened to Intel's dividend?
Right.
For Prez.
So the strategy I looked at was, maybe some people refer to this as a stock replacement. You're giving yourself duration, so it's not a pure earnings play, but you get upside exposure over the next 50 days. So looking out into June monthly cycle, buying the 27.5 strike call here, that's in the money by a couple bucks here. You're paying roughly, we've got 275 debit up there on the risk profile. It's probably closer to 285, but that debit that you pay is your risk on this trade. So $275 per call that you buy, as opposed to maybe buying the shares. Now, your break even if you pay $275 is going to be $30.25 to the upside. So you've got some cushion to the upside before you're profitable on this type of strategy. But Kev, when you look at this, it's a stock replacement. The delta on it is about 70, so it reacts more like the shares. So over the next almost 2 months, you get upside exposure without having to buy the shares after they cut the dividend.
And the problem with, well, why don't you sell a call against it? Not a lot of premium in some of the calls.
Exactly.
Right? That you're better off
There's
just
a wick there
letting
on
the
SPY.
risk be the risk. Sometimes, remember, if you're going to sell an option against another
that
option,
might be the
make sure
reversal.
you're getting paid
409.85
for what you're doing. Make sure you're
high
collecting
enough.
enough. Maybe if it rallies a little more, you can find something to sell. But right now, I understand the idea.
Yeah, the extrinsic value of that call is about 98 cents at that point. So that's
Inside
why you
bar.
got that cushion to get to that
Oh,
break-even
it's getting a little
point. But I
volatile
think
up
the
here.
key with this type of strategy is that you're not doing an earnings play
I might
where
start scaling
you hope
into
it
these.
jumps up to $35
Oh,
tomorrow. That would help
it's
out
early.
this type of strategy also, but you're giving yourself duration on something like this. But a good look at basically a stock replacement type strategy here if you think that
There's a
Intel
little room
is
to
going
go.
to go higher over the next 50 days. All right, that's going to do it for Kevin and I today here
Thanks
on
for
Fast
reminding me.
Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
If Bed Bath can hold of a view up there. It was the thought that counted, Ace. Surprised you've never had problems with this before. Oh, because you watch it later. I see. Makes sense. Alrighty then. What, 40 of them? Back to find that strength. That's good. Selling to the strength, I guess. May 5th. 1 week. $104. It's pretty risky. Pretty risky. Not a lot of time, and you're out of the money. With the pump it's had today, you should see at least. I don't know, man. Yeah, you might get something next week. I'd be quick to take profits on that. That's gnarly. You actually got a hold of YouTube tech support? Impressive. Credit numbers in the back. Alright, is this a top on SPY? A double doji candle? Not quite there.
Touching everything.
It is touching everything. I also agree with its
Get
importance.
some Jennies in the chat.
It's not only a cloud company like Microsoft, but it also gives a pretty good read into the consumer, how delivery and how retail is faring. But for this quarter, analysts are expecting earnings of about 21 cents per share, in line with what they reported a year ago on sales projected to come in around 125 billion, which would mark 7% growth on a year-over-year basis. Of particular interest every earnings period is its revenue numbers, specifically in AWS, as it has been a major driver of growth for Amazon, and its primary competitors in this space, those naturally being Alphabet, but more so even Microsoft, reported really strong cloud figures in their quarterly updates this week. So that does put us now into a very interesting position ahead of this earnings event. However, I think it's important that investors shouldn't forget how painful 2022 was for Amazon. The stock price did cut in more than half in the last year. So even though we are up over 31% on the year, we're still off highs by about 25%.
No, it doesn't work through there.
Whopping 35% from their 52-week low, but I do think it's important to look at the longer-term chart because we're still nowhere close to where we once were, Alex.
Yeah, there's a lot to look forward to with this one. Analysts are expecting sales to come in the upper range of the guidance that Amazon had provided of 4 to 8%. Analysts are looking for it to come around 7%. So you can see they're looking for a pretty strong quarter in terms of what Amazon was.
I wasn't even thinking of Amazon's earnings.
The story here is going to be the AWS.
Earnings
it's going to be potentially a story of margin compression. So you mentioned
that's totally different
story in terms of cloud. The big story there was they actually were profitable in cloud for the first time. And so Amazon's moving the other way, still a very profitable part of its business, still the key player in the business, but not as profitable on a relative basis as it has been in previous quarters. Of course, we know the cost push inflation story when it comes to the retail side and the e-commerce stuff. So we'll see if they're raced to continue to push the limits on how quickly you can get a relatively low-priced item in what seems like hours at this point, at least in urban areas.
Yeah, should play the long side.
Delivery costs, labor costs.
Hard entry though, like
all of that is
full
working
flag.
against Amazon. But it's Amazon.
We talked about it here. It's like 410, but it's like that's a long ways. Why not play the upside and then the downside?
This, of course, has become a formidable competitor and major player in the telecom space. The merger with Sprint has really vaulted this company, arguably to be as equal to Verizon and AT&T, which seem to be
BBBY moving up here a little bit.
Number one and number two
players.
And actually, arguably on a year-to-date performance,
1 o'clock margin calls.
The group with shares still up about 7% on the year. What we have seen now, losses on the year in both Verizon and AT&T, but they did already report their quarterly update, so that's also important to keep in mind. But T-Mobile has been churning out more free cash flow. Verizon and AT&T have really been struggling to maintain their dividends as well as increase their overall shareholder returns. T-Mobile, on the other hand, has been pretty opportunistic about its acquisitions throughout the quarter. In about mid-March, they did acquire Mint Mobile, which is the provider of prepaid wireless services, for about $1.3 billion in cash and stock. Now, Mint operates a direct-to-consumer online-only sales platform. This has proven to be really popular, actually, among Gen Z and millennials, per the analyst notes I was reading this morning. T-Mobile did also buy back about $3 billion of its own shares in 2022 and has about $11 billion remaining in purchases through September of this year. Management has a long-term goal now of about $60 billion in shares.
A little inverse beta. Look at that.
Typically
Could have got my SPY put based on BY rallying.
Like T-Mobile, which again has been an outperformer among the more steady moving telecom stocks.
Yeah, no doubt. It's seen as sort of the growth player in this space that you don't think about the word growth in. And so certainly want to watch. Definitely not the most interesting on the list, though, so we'll go ahead and say downvote. Next one is First Solar. So you can make an argument, especially on a show like Next Gen Investing, Jenny, that this name should be the upvote. We'll ultimately decide that in just a second, but talk to me about First Solar, because this is another pre-earnings look.
And this is another name that's outperforming its respective sector, with shares up a whopping 240% from their 52-week low, up 35% this year, and this strength is not seen at all across some of its solar-related peers. So it is the largest U.S. solar company. It's expected to post a quarterly profit of $1.08 per share, which would represent a year-over-year
some
change of 360%.
crazy hype on RC's
Revenues
tweet.
expected to come in around
$709
million, which would be up almost 94% from the period earlier.
I didn't show you guys the tweet you did earlier.
Estimates for the quarter have been revised about 16% higher over just the last 30 days to now
not necessarily hype, but just
so the fact that analysts are only getting more bullish into this report is typically seen as a sign of strength. Yesterday, we did see shares dip, though, in sympathy with Enphase Energy, which did post worse than expected first quarter results, as well as some weaker than expected second quarter guidance. So keep in mind that we could see spill over then into First Solar's report, although it's difficult to compare the two, Alex, just given the outperformance we've seen from First Solar for the last several months.
No doubt. I'm going to say downvote, though. The next one on the list is, to me, a very in-fashion stock.
I'll show you guys
right
when this
now,
segment's
given
over.
What's going on with Meta. That, of course, is Pinterest. But another thing to think about with First Solar, to me, is this space, of course, the fundamentals really matter, and you're seeing that with like an Enphase in the post-earnings reaction. You see it with the 6.5–7% implied move being priced in by options. But to me, it's always felt that this space, like, it moves more on the hype around it than it ever really does about the individual stock's performance. There's some nuances to that. The earnings can make a big deal, but it's like when we're reading about solar being like the hot sector to invest in, that's when these stocks take off. It's not, oh, First Solar posted a big earnings beat and it sends these stocks soaring. So going to say downvote more for that reason. This seems to be a story of last year at this time more so than a story right now at this time. Willing and hopefully I'll be surprised in the other way, and this will be like the biggest story tomorrow. I just don't see it. Next one, though, is Pinterest. This, to me, is an interesting one, particularly because we've talked about how different the Metas and the Snaps and the Twitters are from Pinterest. But you see the pile-on effect taking place here, and we haven't even heard from Pinterest yet.
I know, and I think it's wise. Typically, Pinterest reports like a week after we hear from Meta Platforms and Snap. So the fact that they're reporting today on the back of a nice almost 4% move does put it in an interesting position. We are expecting quarterly earnings to come in around just $0.01 per share, which would be down from the earnings they posted a year ago of about 10 cents per share, while revenue is pegged at just shy of $593 million. Now, Pinterest shares did close 4% lower just yesterday, and now they're pretty much unchanged on the week given the move we're seeing today higher. But most analysts do still see some upside in this stock. Reading the recent price changes from the analyst community, Credit Suisse boosted its price target to $29 a share from $26. UBS also raised its price target to the most bullish I could find at $35. JP Morgan did raise its price target to $28. MKM also has a $27 price target. The actually only downward revision I could see was from D.A. Davidson, which did cut its price target to $23 a share with a neutral rating. So while these price targets actually implied more optimism prior to today's move, still we are seeing most of the analysts lean more bullish in this name ahead of this earnings event, Alex.
Yeah, and a couple things that stick out to me that I think are interesting that are worth maybe calling out is we've talked about how Pinterest has been more successful, I guess, in monetizing the users that it has. Its issue has more been growing that user base, because it is a very niche product. It seems to target a very specific demographic, where something like Facebook or Instagram seems to be a much wider net cast. But with that, because they've maybe been a little bit more conservative, let's say, with some of their balance sheet situations, or being a little bit more successful in monetizing, they haven't been as aggressive in layoffs. They haven't been as aggressive in cost cutting. And so while that's really working for Meta and really has turned the ship around, we haven't seen that aggressive action from Pinterest. So I'm really interested to see, have they navigated this as well as they have basically expressed through their actions, or are we going to start seeing some margin compression over at Pinterest because they haven't had the tremendous layoffs that their peers have?
Yeah, that's a really good point. I also really want to hear about how AI is shaping their platform, because I have to imagine that they're exploring at least some AI capabilities after we heard tons of AI news from Mark Zuckerberg on the Meta earnings call, of course. So I'm focused on all things AI when Pinterest reports, but we'll be looking at the technicals as well as some example trades in both of our upvotes today, those being Amazon as well as, of course, Pinterest. Stick around. Next Gen Investing. We'll be right back.
Okay. Yeah, BBY did move up there a little bit past VWAP. For top on SPY. Still waiting. Yeah, so RC tweeted a couple times today, and you guys a speculation. So he tweeted, "Do you consider yourself a Republican, Democrat, or don't give a fig?" Don't give a fig. So a fig in the financing world, nearly all of the large investment banks have a FIG business integrated with their overall offerings. Some of the larger investment banks with a FIG business include Morgan Stanley, Wells Fargo, and Goldman Sachs. The services that FIGs provide for their clients can vary and range from initial public offerings to financings and buyouts, investment banking advice, mergers and acquisitions, raising capital, restructuring, debt financing. Big businesses can represent both public and private companies, or can serve to help a private company go public. Investment banking FIG businesses might also offer specific expertise in certain market segments, or have specialists that can work across many segments. Generally, large FIG businesses will serve a variety of needs for financial institutions. All right, Ryan Cohen's in BBY. I'm buying more. I'm just kidding, guys. I'm sorry. That is pretty interesting though that he did share that, and I don't know. It does definitely give into some hype. I'm not buying more. Why did he say fig? This didn't feel as strong with you. Yellow pages. RC tweeted today, and it was a poll. Do you consider yourself Republican, Democrat, or don't give a fig? And we just looked up the meaning of fig in like financial terms and what it actually means. So it's shared on our Discord. But yeah, that being said, BY is also moving up here. So here's the tweet. And here's the what I was just reading from. Not too far stretched. Holding 8,000 shares. That used to be like a whole ton. Now that's like $200. But yeah. I don't know, man. I don't know. New high on SPY. SPY was the play. There's 410. BY is up 8.3, but not a whole lot because we did sell off a whole ton yesterday. And that was after a huge 40% gap down. So it is 8% though. That's from my full port right there. I was looking up the TD Ameritrade noise. I was trying to find it. The bring. Couldn't find it though. I mean, he used Fig though. He could have used Fudge or just don't care. He's pretty specific with that. Like he likes to troll. I mean, he likes the attention to some extent, I'm sure. He likes that he's man of mystery and cryptic. So I don't think it's on accident. It's funny because when I first read the tweet, I was like, "Oh, it's political." But I even said it has nothing to do with finance. The Fig thing, I thought that's a little funny, but whatever. Because I've heard like fudge, don't give a fudge, but I've never heard don't give a fig. Like, oh, this man likes his fruit. BB crowd's not pumping this dude. Oh. The 741, stop it with the 741. That means nothing. You guys, Super Stunk literally made that what it was. Like half of the cryptic stuff. RC would tweet something and they just pulled something out of it and then he would just go along with it. They made up their own tinfoil. And then he just played into it. I have lots of BBY. It was bound to move up at some point today. There's nothing with that tweet. That was like hours ago. That tweet was 2 hours ago. This was gonna happen. We're way oversold. The thing has just been selling off. This is nothing. This is still inside of the range of just the day, really. 1345 is still within the range of the last 48 hours. Once we start seeing 50% plus, then okay, we're getting our pre-bankruptcy, pre-OTC rally. Oh, it's Fig and 741. SPY waking up here. This market cap's so tiny, guys. 10% is nothing. Going to 500 a share tonight. Not even sure it happens either. Let's get some Jenny hype back in the chat. You guys are crazy. I got you way too hyped saying I was buying more. He's in it 100%.
But most importantly, from how I see it is, if
that is a pretty straightforward tweet though, and I don't even know what exactly it would even mean.
If you do a bullish trade,
like, would that be good for shareholders? If he's tweeting cryptically about it, it seems like it would be.
They can go beyond expectations. Do you really want to be exposed to the upside?
Yeah.
Most
investors, I don't think, want to be right directionally and then lose money because they were too right.
Yeah, that's a really good point. That's exactly what we're seeing with Meta today. But now to shift gears here and look at Pinterest, which also reports today after the closing bell. There's two ways to look at this because shares are up over 70% from their 52.
You could. I mean, it's an average down.
They're also still down about 68%
that
from their
tweet,
February 2021 high of just shy of $90 a share. So when you put that in perspective, things do look
entered
less
and exited
positive,
positions based on tweets before.
Today on the back of some strong Meta results.
Might not be a bad idea. I feel pretty happy with my position, I guess.
On one hand, we've got this upward channel here, and we looked at this name about a little less than a month ago. Really not much has changed. We've still been having this upward trend line here going across the lows, this little bit of a downside excursion there. And then we just duplicated this trend line, put it along the highs, a little bit messy on the top there as well here, but largely contained within those two levels. Now, on the other hand, the other way we have of looking at this chart is actually it's looking kind of range bound between 23, this green dashed line here, and 29, this red dashed line.
Why shouldn't I own more BBBY?
So you can see that even though we are still within the boundaries of this upward channel, there's an argument to be made that it's transitioning to more of a
I mean, if you're going to buy more, I'm going to buy more.
Price environment here. So looking at some of the other technical indicators that we follow on these charts, we can see that our three moving averages, our yellow 21-day, orange 63-day, purple 252-day exponential moving averages, they're relatively close together. They're kind of clustering near each other. They're all trending sideways. The orange 63-day is still modestly up a little bit, but the other two are looking rather sideways here. So that kind of speaks to a lack of a clear trend environment right now, kind of a lack of directional conviction here. And yesterday was looking rather dangerous, actually. We had a 4% drop that found some footing near the 63-day EMA right here. We were able to close right around that level. And then today, once again, we had a very long lower wick on this candle that touched near the same indicator. And we rebounded since then. We're actually up on the day now a good bit here, though we haven't crossed above where we opened yesterday, so something to keep in mind there. So RSI, our measure of momentum, the speed of and direction of price movement here, we can see that it's in the bullish territory. We did cross below that mark yesterday, though, when we had that significant one-day decline there, but we are back into the bullish territory here, so momentum is more skewed toward the upside here. So where do we look for some support and resistance on this one? The 63-day EMA, the orange line, looked the most important to me because that's where we've found support the past couple days. And the other ones are worth noting too. We've got the 21-day coming in at about 27.50, the 252-day around 27, and the 63-day coming in around 26.70. But that would be the one that I said would be the most important to watch. So 26.70 or so to the downside. To the upside, it's simply the old high close that we had near that $29 mark. So 26.70 to 29 are some key levels to be watching.
Right, and Rick, I think it's important to know that with yesterday's move lower, like you said, we're not even back to yesterday's opening highs. So even though we're seeing some strength today, there is some room for this name to run, perhaps. We'll leave it there. Appreciate all of the technicals, as always, ahead of two pretty important earnings events. Rick Ducat, our chart master. So, Alex, now when trading this name, Rick did highlight the fact we've seen some range-bound activity.
You were, dude.
Directionless here, which I do think makes a good position into this earnings event.
I didn't want to tell you what to do, but I told you what I'm doing. I was like, I'm not selling here.
Yeah,
We're
first
finally
off, too, they have
starting
to
to
be
bottom.
the second act now to
It's
a
boring. You want to sell and it's
blowout
exciting.
order
Now
from
it's
its
boring.
biggest peer in the space, and so
But yeah, you should buy more
really,
instead.
really difficult. Even with a really strong
Heck yeah, I bought more.
from Pinterest,
RC
to
tweeting
live up to
figs.
These really, really lofty
It makes
expectations
sense.
that Meta has just put on the board. In regards to the range-bound aspect, obviously,
He's
Rick
in it.
did provide some tighter support and resistance levels there, but 23 to 29, we're talking about $6 on a stock that's less than 30 bucks. I mean, anything's range bound if you say it's between 0 and $100 million. So at some point, you got to have a little bit tighter expectations, I think, for it to be range bound, not 30% of the stock price or thereabouts. But with this in mind, we have a pretty nice move here today. We haven't heard from this company yet, but we've heard from some of its biggest peers, and its biggest peer in particular. Maybe you do have a quarter that is relatively strong, but just not strong enough to get much upside. And so I look at something that looks for a very limited reaction
on this, selling a iron butterfly, essentially selling a straddle, but in order to not have undefined risk, we want to buy those wings. We're buying $5 wide wings in this case. All of this expires tomorrow. So again, a true earnings trade, but because that expiration is so near term, keep that in mind. If you do trade something that short term, trade management may be required tomorrow in order to avoid any unexpected or undesired exercise or assignment on this one. But selling 27.5 at the time I was looking at this,
BCG technically a fig? I don't know.
27.45. It has since rallied about 30 cents or so. So this is now slightly below the current share price of 27.70. So bear that in mind. Maybe an adjustment would be made.
They might fall into that too, yeah.
Strike selected based off of, are you slightly bullish this one? Are you exactly neutral?
Large investment banks have a big business.
You would kind of make those adjustments based off of whatever that outlook may or may not be. But with this collecting around 230 in a credit, it's a $5 wide spread. So that would leave 270
I don't know if
in
they would
risk
be considered
to
a
make
fig.
a possible 230. You can only make
I don't
that
know enough about
230
BCG though.
perfectly pinned at 27.
BY is moving up here more though.
In this case now with the current share price, that would need an actual slight downwards tick in this particular stock, but it's risk defined. It is a wide net casted here. Jenny, the break even on this one is 25.20 to the downside. So I think Rick said 26.70 is a possible support level. So outside of that support level to the downside. And then he also had mentioned upwards near 29 being the resistance point. Well, this is a 29.80.
14% there on BBY.
So slightly above that resistance point. If you were structuring a trade and you were a technical trader, you would want that. You would want to break even below support and above resistance. That's exactly what this one delivers.
And a more tighter range, like you said, instead of just looking at the broad scope of its price activity we've seen really so far this year. But also important to keep in mind for both of our example trades today.
I think those 100 shares, 1,000 shares.
Transaction fees. Short options can be
it's
assigned
$5
at
a share.
time,
That's
and carrying
good
option
money.
positions into expiration can add risk, like unanticipated exercise or assignment. Now
It all
coming up
adds up.
next, it's time for FOMO. So we are finally looking at all things Meta platforms, which shares up over 14.5%, pacing for their best day in over a year. We'll discuss those numbers coming up next.
There's 15%, so got some levels in here. Again, the high from yesterday. See if we can make it there. Time for FOMO, she said. This is not the miracle. This is 14% after we're down like 80% in the last week. See your technicals. Such a great financial sexual joke. Copy was right. Well, I mean, the run can happen at any moment. It's where does it start from? That's the thing. You'd be right for 100% run up. If you're saying it just a week ago, we need over 100% even just to get back there. So, but yeah, not downplaying you, Copy. I appreciate that guy. I think he's awesome. He takes a lot of heat in there. None of those guys do TA at all. Right, every day. Buy more, you're pushing it. Okay. I mean, you shouldn't buy when it's exciting, but down this much. I'm moving up to the level here. long on SPY today would have been nice. Now we've got a kind of an inverted cup and handle here on SPY. You see this cup and this handle. A steep handle, but you know, momentum on the daily is still all there. Right under the 9, bearish MACD.
Trying to be able to prepare the street for maybe a bumpy road ahead. Now, if we're looking at American Airlines, a little bit of a different story, up about 2% at this point in time here. They did report revenue at about $12.19 billion versus the street's estimate of $12.23 billion. And they had the adjusted earnings per share.
Yeah, and that's the thing, trades for sure.
4 cents.
You need some upward momentum, and then you can start.
Expectations. Revenue per
that's all it needs. You can start looking at some TA on it.
The expectation, but
any bullish move will basically trigger a lot of different bullish TA.
5.6%.
What I've been seeing.
So that's really what you want to be able to see. If they can actually move that up to about 85%.
Without that, it's like, to me, it's just a downtrend.
Pretty decent.
But yeah, so now we're getting
see a little bit of
a hammer candle, which is bullish.
Cost, especially for jet fuel.
Inside bar.
An issue for all of these airliners
could be a sign of a turnaround.
We have seen
we get some kind of
when it comes to oil
gap up or rally, and then consolidate, but then we'll have that inverted head and shoulders.
Focusing on
new high there on SPY, 1.5% almost.
For our cars and things of that nature, not so much jet fuel, which is why the price is still elevated. And that obviously has an impact on the bottom line. So definitely two different
shorter time frame. It's starting to look nice.
Marketplace here today. Let's see how it's
little cup and handle even on the hour.
As we get through some of these earnings announcements.
Little inverted head and shoulder too. Head, shoulder, shoulder.
Yeah, and Kevin, it's interesting to see just the stark difference in performance on a yearly basis now at this point. I think it's not abnormal to see Southwest down on the year, but even comparing
something must be ripping because the SPY is just going crazy.
American up now 2% for the year, but United is up 12%. So you'd think that some of these trends that they've signaled, like really strong spring and summer months, could benefit all of these names.
I like the one-day candles. I use 1 day, hourly, and 5 minute the most.
Definitely. Well, the international travel is really what's boosting a lot of these companies that have that international exposure. We are starting to see an uptick in that type of travel. And you can even see that within Visa, MasterCard's earnings as well. Cross-border transactions are also picking up.
Really
so that's giving them a little bit of a boost. And when you have
3%.
International travel, the margins are a lot wider, a lot larger than we would see domestic
travel. Who's asking about Tesla this morning?
Southwest, more of a domestic carrier compared to United Airlines, which is more of a 60-40 split. If we did not have the pandemic,
maybe back to this level.
It's going to be post-pandemic, but as we see that,
I don't know how long the SPY bounce is going to last.
The revenue is
that said, Tesla can kind of go on its own.
Those margins are going to be a lot better. That's
SPY is getting real near that high.
Bottom line, and now it's just going to be an expense story for each and every company that we talk about in the airline space. Who can manage
BBBY is up 15%.
Jet fuel once again has been a hindrance, as well as staffing. Every single airline, for the most part, is dealing with a union issue or has resolved a union issue, and so we are also seeing that being reflected in a lot of the earnings as of late.
And we know that also as consumers, we're paying for it because flights right now are so expensive. So I just keep waiting for that to normalize, but it doesn't seem like that will be the case, at least in the near term. But we will leave it there. Appreciate all the insight on the airlines today. Kevin Green, Senior Markets Correspondent for the network. And I'd like to bring back in Alex for FOMO. And we finally get to discuss Meta, as this is the story of the day, no doubt about it. Shares are up almost 15% now.
Yeah, this is a monster move on top of what has already been a monster rally off the lows. I mean, there's nothing else to say about it other than
FRC's
that.
maybe build another cup and handle.
I'm sure you got some of the breakdown.
Bouncing off this 50 moving average, nice.
The things that stuck out
Thing
to
about
me,
VWAP now.
Ad growth.
It's still in this little wedge though.
Ad impression growth was
I rejected it earlier.
The expectation was for 14%. I mean, this is a blowout quarter.
Yeah, it really was a blowout quarter. We also saw they beat their sales estimates by almost 4%. Sales did rise over 2.5% on a year-over-year basis. And I think a lot of this can be attributed to some of the comments we got from CEO Mark Zuckerberg, who said they've been busy exploring the potential of AI to enhance their user experience across all of their platforms, those being WhatsApp, Facebook, Messenger, and Instagram. Now, during the earnings call late Wednesday, Zuckerberg did express interest in integrating AI agents into the company's flagship apps citing the potential for usefulness and meaning, saying, to quote, "I think this AI is literally going to touch every single one of our products and services in multiple ways." He anticipates that AI agents will be valuable for individuals as well as businesses and creators alike. And to point a picture of really the scale of that, he did say when envisioning the current integration of AI, although he did not lay out any specific plans, he said that more than 20% now of the content you see on Facebook or Instagram feeds is being curated by AI, and sometimes even posts that you don't see or don't follow, but that's perhaps why they're enhancing the user experience. I have to say, I feel a little bit mixed about that because I've noticed it myself that you'll see things that you don't follow, you wouldn't remotely follow, and they still do appear on your feed, but it seems to be paying off. He highlighted the fact that they've seen over 24% growth in their user engagement since the introduction of Reels, which is largely attributed to the implementation of AI-powered recommendations. He also says these efforts will continue to help them monetize their apps, with Reels monetization's efficiency actually rising 30%, and Instagram over 40% on a quarter-over-quarter comparison. So Reels are faring well for Meta platforms, and that's something that has been, I'd say, an area of scrutiny given the way they compete directly with
I knew high there, still
but
going.
it seems to be faring quite well. I mean, clearly the street likes what they saw, and I'd say when looking at Mark Zuckerberg, he's one of those figures that I feel like people love to give him so much flack, but all in all, he has had nearly perfect earnings calls the last 2 quarters where he's able to say exactly what the street wanted to hear.
Yeah, I think it's easier now too, Jenny, considering the fact, I mean, they're losing $4 billion still with this Reality Labs segment of the business. This has been their growth investment that they've made. But right now, the street's excited about something in artificial intelligence and looking for the actual applications of those technology and how ultimately, as a shareholder, say I'm a shareholder in XYZ company and XYZ company is investing in AI, I'm okay with that if I think that that AI is going to turn a meaningful return on my investment. It was a hard sell in this metaverse investment.
Retrace the entire move in one aftermarket, one pre-market, in one day.
That has gotten mass appeal. Digital real estate and these expensive, little JPEG art things, it wasn't mass appeal. It was very niche, and it, quite frankly, has already, gone up and come down tremendously.
What did he say?
The hype around that.
He said it's going to rip tomorrow.
But it hasn't. AI,
I don't really use the same team. I mean, I do some, but he's just kind of looking at a bunch of indicators saying this says it's going up, it's going up.
Show your company and say, this is how this is going to help us. It's not some pipe dream down the future. So
I guess I like to, it's not like stuff that I necessarily use.
We'll see where it goes from here. They still got a good $150 before they're at all-time highs, but it seems like that could happen again. When they were at $90, you were thinking, where does it go from here?
I know. It just
I mean, I bought in yesterday
now
expecting
almost 100%
something of this,
so far this year, up
bigger
over
than this,
172%,
or hoping for it at least, with the overreaction from the delisting. I mean, this is crazy.
We're not at all-time highs, so I think everyone should calm down a little bit.
From
but
the delisting notice?
You mentioned NFTs, the concept of NFTs.
It already filed for Chapter 11. Why does it have to sell off?
Because it's fallen so
it lost
far out of favor.
Half its market cap from that news, almost half.
Boosting street sentiment, a lot of the, Meta's results. So there is something to look forward to here, even going forward. So that added momentum, and I definitely think the FOMO feeling is to the upside today, no doubt about it.
Yeah, I think so, and I think that it can be misguided at times. I mean, you just watched a stock literally go from about $90 a share now to $240. Okay, it also went from about $385 down to $90. So I think when you put it in those perspectives, and even look back just over a year, it's basically gone flat now, year over year. I think that you can kind of rationalize to yourself that there could still be upside given this monster run. But you can't feel necessarily that you're buying the lows anymore. I think that conversation is gone. So it's no longer a buy low, sell high situation. It's a maybe buy relatively high and hope it goes a little bit higher situation, especially today with the stock up 15%. For context, Jenny, we're talking about a $600 billion company. 15% is a massive, massive number. In terms of market cap, you're talking creating Chipotle's in terms of just how much real value this has gone up today. So keep that in mind. But that considered, let's look at an upside move for this particular trade in this illustration. We're looking at buying a call condor, seeking to reduce the exposure while benefiting from an upside move.
Meta 15%.
This one goes out to May. We don't have an earnings event.
Meta's having a bigger move than
giving
BBBY.
a little bit of duration, possibly even for this just to kind of find its new price level,
17%.
and potentially retest
Ion
towards
just
some of those gaps
short
that we had
squeeze.
seen on the chart around earnings last year at this time. And so what we're looking at in particular is buying a $10 wide 240, 250 call vertical while simultaneously selling the 260, 265, $5 wide call vertical. The concept here is to create a strategy that does not have upside risk. Same thing that we just talked about at Amazon. You don't necessarily want to be bullish a stock. Do a bullish strategy, but have it go too far to the upside and then end up losing money. So this one does not have theoretical upside risk. If it went all the way through all of our strikes, it basically would level off at $150 profit. On this one, though, best case scenario would be a move
60
between
shares.
250 and 260. And the reason that is because, well, if that
Based on
happens,
the
Jenny, you have this
Ryan Cohen
$10
tweet.
wide call vertical that's being purchased work towards
I'd save the
$10,
queen.
while the $5 wide call vertical works towards 0. And so because this is done for $350, break even at $240, $350 can expand to as much as a $650 profit in that $10 wide window. A little bit over a few weeks till expiration. So plenty of time for this to unfold if it's going to.
And we, of course, do have some downside protection if we see today's move sort of crumble tomorrow when we snap.
I don't know, like $10? I don't know what it is.
Especially when we
This is
see
hard math.
a 15% move on the session. But that'll do it for our FOMO segment.
$6?
This is one of the best moves of the day. Now we'll move away into one of the
little more than
worst moves of the
$6.
day, in my opinion. That is Domino's. Shares down almost 5% as it did not deliver on its earnings. We'll discuss those numbers with Caroline Woods coming up next.
Fed to deliver 25 basis points, but then this might signal a pause, says Morgan Stanley. A San Francisco office tower worth $300 million in 2019 is for sale. Bids are coming at about $60 million, an 80% decline in value in just 4 years. Elizabeth Warren said members of Congress should not be trading bank stocks in the middle of a bank crisis. Powell said that an economic downturn is possible or even likely, but that is necessary to cool the economy and slow inflation. Did he actually say that, or is that a bot? He reportedly said this in a call with Russian pranksters who were posing as Ukrainian president, Vladimir Zelensky. EU preparing to approach index providers to include its debt in government bond indexes. EU currently analyzing how it fulfills indexes criteria. Blue Bay Asset Management, for EU inclusion. Lumber futures are at their lowest level since June 2020, down 80% from the peak in May 2021. The UI is holding out up here. It looks like it's consolidating. Sullivan says U.S. trying to limit China's ability to use U.S. technology against the U.S. We are not cutting off trade. U.S. not looking for a confrontation with China, working to cooperate where possible. Sullivan said that. Looks like BY might move up a little more. We'll see. Which tweet? That was his last tweet. That was Ryan Cohen's last tweet. $7.45 an hour. They can buy 1 GME share an hour, or BBY. He knows anyone purchasing BBY? No news yet. There's some speculation on some Ryan Cohen tweets. Oh, you averaged down heavy, huh? You heard my blink noises. How do you know it wasn't just one share each?
There, Jenny. As soon as I saw Domino's results hitting the wires, I immediately thought of you and wondered if all of your orders were going to help boost the bottom line. And actually, earnings did come in better than expected, but it's sales
the fig trade. This will forever go down in history as the fig trade.
But let's run through the numbers as to why Domino's is down.
We went full DJ on a stock.
EPS of $2.93.
Going for bankruptcy and delisting.
Of $2.66. So a beat there. Revenue rose 1%
About before you did, bud.
$1.02 billion. But as you can see, that was just shy of what analysts were looking for. They were looking for $1.03 billion. Now, U.S. same-store sales were up 3.6%.
Too rich for you, pal.
Same-store sales, excluding foreign currency impact, grew about 1.2%. Sticking with U.S., though, carryout business was strong. U.S. carryout same-store sales rose 13.4% compared to the same period a year ago. Domino's does expect that to moderate,
breaking out there,
though,
BBY.
as the year progresses. They
breaking
did
out that bull flag.
highlight this post-pandemic
1350s
shift from
level I'm looking for.
delivery to carryout or even dining in. That being said,
the fig trade.
Delivery business continues to be challenged. Q1 delivery same-store sales fell by 2.1% compared to the year prior. That's also because people are deciding to cook at home. A Domino's executive on the call talked about how constrained budgets for households, especially those with lower incomes, are opting because of the fact that it's not just the cost of the pizza, which I know, Jenny, from your experience, you've told me is pretty low, but there's the fees associated with the delivery. There's the tip. So instead of
insane.
Maybe carrying out or going and dining in, they're just cooking at home, and that's really weighed on the business. So definitely a sign, we're looking for signs from so many of these companies about how the consumer is faring in the lower income.
Nope, it's not broken out yet.
Definitely feeling the pinch here. Now,
I don't even know what you consider a breakout, but
1350
breaks out. That's pretty good.
6.2% in the U.S. during the quarter. Jenny, maybe you could have also told us that
I don't know what
too.
this level is.
But looking ahead, it said expects 2023 total retail sales globally to be at the lower end of the 4 to 8% range. So that could
1350 is a pretty good break, I would think, to get maybe fill that first gap.
Down now about 6.5%
it's still a ways off. That's
year to date, so underperforming the broader market.
It's up to 20
going
cents.
into this report, and then only adding to those losses today.
Gotta break that 1350 first. What's good is this is happening on a Thursday.
Chipotle this week, which I know are different companies, but saying that they're actually not seeing a lapse in demand. So
right, it's not. This isn't Monday, so expect a Tuesday, maybe Wednesday rally, and then it sells off Thursday, Friday. Happening on Thursday, this could, if it holds up, that is, and if this rally starts to get crazy, 30, 40, 50%.
You get a free pizza.
So that means it'll probably either consolidate or continue tomorrow.
So that's also
and if it does that, then looking good for Monday, Tuesday too.
But we will leave it there. Appreciate all of the insight on a down move today in Domino's. Caroline Wood, senior markets correspondent. Now coming up next, it's time for Under 30. We are looking at Snap with a nice 6% move higher today.
And if there's news on top of this after a couple-day rally. SPY, holy crap, man. 1.67% on it. It's filling that gap today? What? What is happening? I had long futures yesterday. Why did I close them? I had the bottom. I literally bought it right here. Another 30K. So Fong right now? So effing happy. So effing happy? So Fong happy? The gap for BY is it's basically 20 cents. It's when that news of Chapter 11 came out. Or no, this is delisting. This isn't even Chapter 11. This is the delisting news. Chapter 11's 30 cents. Or no. Yeah, 30 cents. So here's delisting gap to fill, 20 cents. Then here's Chapter 11 gap to fill, 30 cents. Nestle Toll House? I haven't even heard of that rumor. How in the world? Why? Start cruising on Twitter, you'll see all sorts of crazy stuff going around, I bet. There's a retest on that level. 1350, that's the high from yesterday. So, still down on the shares I picked up the other day. I'm gonna hold. Yeah, you do have a cup here, that's true. 5 people said it in Discord. Oh, you know it's real. Realistically, you mean before OTC or after? Yeah, I think it'll fill a 30-cent gap, sure. As far as when, that I don't know. Yeah, next gap's 20 cents, and then that was delisting news, and then the gap after that's 30 cents, which is Chapter 11 news. We actually had a bigger move on the delisting than Chapter 11. Which is also crazy. It's been under $1 for so long. They knew it was out of compliance anyways. And finally Chapter 11 also is gonna get you delisted, so I don't. Bye-bye baby and Bud Light.
Quarters where you see these gaps higher, continuations and continual gaps. Every earnings report, especially not just the one yesterday, but the last two as well, off the $88 low. So the questions are, is the same thing going to happen for Snap? Well, I think if you just consider the expectations, first off, the stock is trading when it comes to earnings per share near break even. Anytime that occurs, typically speaking, not always, but typically you do see a volatile event, and it can happen in either direction, higher or lower. The expectations for adjusted earnings is very low. They're expected to lose about a penny a share. Last quarter, they actually earned about 14 cents, but we have to consider a lot of that has to do with the cutting back on expenses, labor,
There's a red
R&D,
can on BBY.
cutbacks as well.
Yeah, it rejected the
compared to last
high
year,
from
the
yesterday.
company lost 2 cents a share, so the expectations are better by 50%.
I want to get green though before I close
this
these.
quarter, if you look at last quarter, sales were
I'll hold
relatively
it.
flat, but this quarter around, the expectations are down about 4.7% year over year to 1.01 billion versus 1.06 billion for the same quarter last year. Now, I think what will happen in this case is going to be what analysts are looking for is going to be the average revenue per active user, because the average revenue per active user based upon last quarter's
I think the long
results
today would have been
were
smart.
down about 15%, even though the daily active user numbers were higher by about 17%. So it's going to come down to conversion rates. In other words, how much ad spend is being converted into, of course, purchases either through services or e-commerce based goods.
I think it's consolidating above this level here though, on that last head and shoulders, which is good.
Is what's going on with
and
the
there, yeah, there
Snapchat
is this
Plus.
cup and
this
now
is
handle
basically a
forming.
subscription service that is sort of an ad-free
Form handle.
service that they have been
Cha-ching.
selling, which is gaining popularity, and that could effectively cause the situation where
come
the
down a little bit for that
guidance on a
handle.
forward basis moves higher than the already anticipated full year earnings of 24 cents. So just to summarize it, last quarter they earned 14
First
cents.
green
but
candle
that
on the
might have been
5-minute on
one-off
SPY
issue
and
associated with expense reductions and cut back on R&D.
35, 40
They're
minutes.
expected to lose a penny this quarter.
There's
but
a red
going
candle on
forward,
BBY.
They're expected to earn 24 cents for the full year. So something seems to be
Probably just
manifesting
wick here, though.
positively, at least from an earnings standpoint. I can't say if it's subscription
there's a wick.
services or whether it's going to be better
Just
than
a little
expected
stop
average
loss,
revenue
Hunter.
per active user numbers. But I think
Trigger,
it's gonna be
trigger.
really interesting to report because we probably are going to expect some clear volatility. It could be in either direction. I can't say which way.
George, throughout our years of covering this one, I think I've advocated plenty for the concerns I have with this company. So I'll do my best to do the other side here and advocate for why this could be a time that this stock's interesting. Well, first off, they launched their AI product. From what I could tell, it's been relatively successful. There's the concept, I believe it's in, kind of home purchasing of the bones being good, which, sometimes mean you're buying a junky house, but there's something to work with there and you can kind of renovate it and ultimately it could be worth something. So I don't think that perfectly applies here, but there's clearly a huge base of users in a critical kind of young demographic that is sharing a ton of data through the app in its pictures and of course the maps and stuff they have on there. There's something here. Snap hasn't really been able to unlock that value, but something is there. And the stock's down at $10 now, George, $16 billion. It's come back from $5 several times in the past. What's to say that it can't do it again?
That's the thing. I agree with you, Alex. I mean, there's something to be said here for what's going on with the business. If you look at the daily active users, it's about 375 million based upon last quarter's results, and that has been increasing. The challenge really has been advertisers. They've been really reluctant to spend, especially in this more challenging environment in the last year or so, on platforms that haven't proven themselves. So let's just say that Snapchat, perhaps, even though it's very popular, really hasn't proven itself. And
Red
so,
candle on SPY,
with
just
that
under
said,
that
the
line
other
we
thing is
drew.
the Apple iOS privacy issue really hurt Snapchat as well. But I think, going forward, just considering the earnings per share profile, which is positive and increasing, not essentially positive and decreasing. But the stock price, like I said, in the last 9 months or so has been relatively flat. So things are improving, and it may be, again, monetizing active users to a better degree. But I think, again, the subscription service might be another area where the company's generating some additional earnings per share that might manifest into adjusted earnings on a forward basis that's even higher than the expectations of 24 cents.
Yeah, George, we will leave it there. Appreciate all the insight on Snap today. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
And I. Does it make sense to have calls into OTC? I just can't imagine it being easy to sell. I guess for exercise. I don't know. Not getting calls, that's crazy. Bill's almost made it back to my price. This thing climbing back up. Al Schwab is facing dwindling deposits. That's me. Don't worry, you didn't just get in order. I just got some more BBY. Lyft layoffs to affect 26% of workforce. Power hour is too. Why is the market so green? Because it's been so red. And it's a bouncy ball. And when you have a big reaction this way, it's gonna bounce. And just so it'll fulfill this cup and handle, this inverted cup and handle we have. Or you could just look at like meta earnings and that kind of stuff. Central Standard Time's power hour. Mine's consolidating here. I think this thing will keep going. I went short. I think I'll add to it. It climbs. Hate being a contrarian. I wanted to go long, but yeah. Go ahead and shoulders AMC. Selling calls up 50%. It's never a bad thing. Oh, on the 5 minute? Yeah. Just talking intraday there. Could even say this is one too. SPY maybe one last blow off the top. The IV still super high on AMC. Never seems to come down though, huh?
$3.19 a gallon, and passenger revenue per available seat mile was
there you go. Yeah, NEO up 2 1/4.
That was just above the expectations by analysts. Southwest also saw a $325 million revenue hit due to the cancellations of the holiday return travel into the first quarter. Those things happened in December. But the company also saw slower bookings in January and February, and it said it started to see bookings turn around a little bit in March. Now, the company is expecting headwinds into the second quarter, but they still forecast a profit. They are looking for revenue per available seat mile
10?
to be down 8%.
That's pretty aggressive.
As much as 10% in the second quarter from last year, with capacity up 14%. They expect second quarter costs, excluding fuel, to be between 5 and 8% higher.
I wouldn't hang out for 10.
That'll include wage accruals that come from labor contracts that are currently under negotiation. Some of these are with pilots, some with flight attendants, and other people who are within unions.
All right, thank you for that. Yeah, I mean, they've had obviously over the holidays.
Oh, you're up your calls.
Tough PR
Selling when the momentum
issues,
slows.
they are working on updating those computers. In the meantime, American Airlines, a little better?
Yes, a lot better. In fact, this company was able to post an adjusted earnings preview for the second quarter at the high end of analyst expectations. And you see shares are rising today and managed to squeeze out that profit for the first quarter. Revenue grew 37% to $12.19 billion. But it did miss the Zacks estimate by a little bit. Adjusted earnings made it just in at 5 cents a share. and that amounted to about a $10 million profit. Now, operating income had ballooned to $438 million from a loss of $1.3 billion the year before, and passenger per available seat mile was above expectations at 17 cents. Now, both of these airlines had to deal with a number of headwinds. It's typically the weakest time of year for airlines. Corporate travel has yet to return to pre-pandemic levels, so that could not fill in any of the travel that was out during the holiday season that dropped off. And airlines also had to deal with higher costs of fuel and labor.
You're
but
going
both
the wrong
airlines say
way.
demand is returning, it's resilient, despite the inflation fears, despite recession fears and other macro concerns, I should say. Now, American Airlines did project the revenue per available seat mile to be at $1.20 up to $1.40 at the high end of analyst expectations, Nicole.
Yeah, and Delta stock turned red after it had reported on the 14th of April, missed the forecast. JetBlue, I saw, had record revenue, some robust demand. And what I think is interesting here is I look at the Jets ETF, which I love to follow because I want these airlines to do well, but it's up year to date now, up 3.5%. So from the last time I checked, so that's good news. All right, Renita Young, thank you. Good to see you. Thanks. Let's take a look at the bigger picture. Michael Green's with us, portfolio manager, chief strategist at Simplify Asset Management. Thanks for being here. So let's start off with First Republic. I mean, I think banking issues are front and center. First Republic is bouncing back today a little bit. Bouncing back. I mean, I'll put in perspective, right? When it's up 9% after having been down over 90%. But, is there some repair to happen here?
So I think it's very challenging to see a repair. I think you've obviously seen an exhaustion of sellers, at least in the initial. It's easy to forget that yesterday it was down, significantly, and the day before that it was down 50%. So to bounce 10% on a day or 9% on a day, I don't think is actually a meaningful piece of information. I think we're broadly seeing the banking crisis continue as the Federal Reserve has hiked interest rates to the point that very few people see a reason to put their money into the banking system. They'd prefer to take their deposits out, put it into money market funds. And the key difference between putting money into a bank and putting it into a money market fund is that a money market fund is simply lending money to the U.S. government in the form of U.S. bonds. We're seeing the crowding out dynamic. This is
you get your fares in order, man.
Impacting the credit availability.
Don't bring your credit card drama into my chat.
And, we are at, in my opinion,
I appreciate
the
dono.
start of
Thanks, buddy.
spreading credit crisis.
Let's get nuts.
Explain that. I mean, we're only at the start of a credit crisis. Explain what happens here. What do you foresee?
So I think what we're seeing very clearly in surveys of small businesses and surveys of broader businesses and surveys of CFOs is rising inability to access credit on terms that allow them to maintain their business on an ongoing basis. We're seeing it in commercial real estate, where the refinancing of commercial real estate with high degrees of vacancy and much higher interest rates is causing properties to devalue significantly and causing effectively the equivalent of the housing crisis as jingle mail.
Well, there's a big red can on
BBY.
BBY.
Real estate space.
Right down to BWAP.
We're seeing that in equipment financing. We're seeing it elsewhere, right? So this is a broad contraction that is accumulating over time. The key difference this time is, unlike prior cycles where most of the losses in labor or employment have occurred in the cyclical sectors, things like housing, et cetera, this time around, it's hitting the college grad in the technology space and the financial space. And we're beginning to see all of the indications that suggest that the employment cycle has shifted significantly. Importantly, things like the WARN notices, the Challenger layoffs, the continuing claims are all rising. The only thing that's not really responding is the initial claims. And what people are forgetting as they think about that dynamic is that they're ignoring how unimportant unemployment benefits are for most of those who are currently losing their jobs. I'll just give a very simple example. Imagine you're a Google employee who's been hit in this round of layoffs. The average total compensation for those workers, and I know nobody is going to cry for them when I say this, is somewhere in the neighborhood of $250,000 a year. If you apply for unemployment in California, the
Thanks, John.
maximum benefit that you
Appreciate
can
it, buddy.
receive is $13,000 over the course of the entire period of your unemployment. They have zero incentive to apply for this, to learn how to do it, etc.
Appreciate
in fact,
it, John.
It suggests that many of them are saying
40
this is
shares. That's
fantastic.
crazy.
I've
That buys
now
40
got
shares.
a period
So crazy.
of severance. This allow and where
Okay,
I don't have to work.
okay.
I'm going to go on vacation and
I'll match
hop
it.
on that
I'll
plane
match it.
that you were just highlighting JetBlue's record results.
Yeah, yeah,
I'll do 80.
absolutely.
I'm matching it.
Can I turn your attention to just some things that are right now and things like PCE data tomorrow, the earnings we've been getting in so far?
Oh, it's starting to bounce. Hold on. It'll fill. It'll
we
fill.
just got GDP, 1.1%.
I hear the chime.
So I think we're seeing a broad slowdown, right? Certainly, if you look at things in quantity terms,
Hey, shut up, man.
We're seeing everything slow
The kind
down.
gesture.
The key difference that's happening this time around is corporations have been able to push through price increases. You see this across
It'll
the
fill,
earnings
just wait.
reports. That organic growth in terms of unit volume
I'm
is
still mad. I was gonna just put another 1,000 in, but
you see this for
I
Pepsi
figured maybe
results,
it's smarter just to
McDonald's
match it.
results, etc. But they've been able to push through price increases that allow them to actually generate higher profits than they otherwise might have. Even within those data sets, we're actually seeing a remarkable difference between generally accepted accounting principle earnings, what's called GAAP earnings, and the quote-unquote pro forma earnings that are being reported. GAAP earnings peaked back in May
if it
of
doesn't drop, it's not gonna
2022.
fill.
They're currently down about 15%.
Why did I
That's
even put it?
far greater than we've seen in, prior to the start of other recessions. Whereas the pro forma
My bull
numbers are
flagging up
suggesting
here.
that everything is totally fine. Right? In other words, corporations
guess
are
we'll
saying,
break out more and
ignore
I'll
all the
add to
bad
the short.
stuff. We're only going to talk about how wonderful things are going forward.
Yeah, Neil's moving up. That's good.
Well, let's leave it
2.5%.
right there. Michael Green, thank you so much. Portfolio manager and
Well
chief
done.
strategist at Simplify.
Just save a little buying power for something else.
Later this hour,
Other opportunity.
we'll zoom out, find out what interesting trends exist overseas. Everything from emerging markets to ESG. Then we'll key in on areas of the market that might be
At
more
up 15% and just
recession-resistant,
holding.
including a look at the bond
You and me, look
market.
at that inverted head and
Our
shoulders on
panel
the
is ready
hourly.
to dive into that social media space for you. Find out why Meta's user growth was so important and preview Snap ahead of the report due out after the bell. Up next, we'll take a look at the biggest trends from the month of April and get ready for next week's Fed decision.
news?
Stay with us. The watch list will be right back.
The Neo news is real. Not having much reaction from that. Not seeing it. I've been cleansed. What happened? I didn't see the news on it. I've got I don't want 80. I'm gonna change it. I like even numbers, these for covered calls. Oh, new name! Oh, that is hype. It's not coming down. Or is it 1, 2? It's a 1, 2, 2 right here. It looks like it's gonna have one more blow off the top. Just way too strong to fill off from here. Two-week expiration Microsoft put. Yeah, there's the SPY move. I'm holding. There's the breakout on SPY. haven't had their earnings yet? So it's an earnings play. Gene, you're paying a premium for the earnings. There's new high on the SPY, daily high. Look at that thing rip. .7%. It's filling that gap. Is it doing that today? Oh my. Why doesn't it show earnings on here? Those earnings aren't until May 4th. Oh, we're talking about Microsoft. My bad. Oh, you guys both have the same color. That's weird. It's not showing up here. Sometimes you have earnings continuations. You kind of looking at the whole market because it's moving. I mean, it's pulling the whole market up. 2 weeks isn't a lot of time. Are you near the money? Look at SPY form this head and shoulders now. Well, that's pretty sweet.
I don't by any means think the bull market that began in October is over, but I'll say this, I'm a little disappointed that one by one we're losing key sectors, and then the small caps and the mid caps just look like death. So it's a concern not for today or this month or even this quarter, but the small and mid caps being on their backs.
There it filled.
Definitely hurts the long-term argument. I can't reconcile, my various views that we're going to have recession, but it's down the road, and perhaps the small and mid caps between the banking issues and the weakening economy. That's where all the weakness is manifesting itself.
Yeah, yeah. When we say pullbacks, option provides opportunities. Hindsight's 20/20. But on pullbacks, do you say, I want to get in on smaller mid caps, or I want to get in on semis, or whatever? Do you have certain groups that you like that you're saying, I really am eager to get in there on a pullback?
There's a crazy squeeze on SPY.
It's difficult
it's gonna fill
to
this gap, I think.
Buying small and mid caps on pullbacks until they show some kind of outperformance. And they've pulled back. In small and mid caps are down to some, I don't want to say critical points, because the market always proves it turns you into a fool when you say things like that. But I think you have to, in the index side, stick with more what's working, and that lately has been the mega caps and the larger stocks. On the sector side, for sure, I came in the year, I loved semis and I loved biotech, and I think both those, you buy into weakness. I mean, the semi weakness is in the here and now, so I think you
put
can
it on
buy
long
the
at like any point today. I would have been green the whole time.
There's a decent shot of some kind
only
of
pullback was the
trading low
BWAP,
or
and I caught that short.
low in semis.
Or no, I caught on natural gas, rather.
Biotechs have been in fits and starts. I've owned them for a while. They've caused me to be despondent and to celebrate sometimes in the same week and the same day. But those, I certainly like. My problem is that so many of the sectors that I keep focusing on one by one keep rolling over, and with consumer staples, breaking higher, that's not the sector that is a champion of a quality either bull run or bull market. But look, we've been over 6 months since you made the lows in October. That's a positive, but the rally since October started off well. It's losing a little bit of its vim and vigor.
I understand. I mean, I know you have a few names in the healthcare world as your picks today, another one which is more of a financial. But just before we get to your picks, just the Fed meets next week. What are you expecting there? And what are you watching for bond yields?
So listen, I've been with you many times since October. I am a pound the table, love bonds, exclamation point. Put it
I think
in
a lot of
bold.
them aren't.
I like high-grade corporate
It's a
bonds.
new
I like
generation
treasuries.
of
I think the
meme
economy is
stock
going to continue
losers.
to weaken. It's slowly but steadily weakening with
A new
jobs, with
generation of
inflation,
hype stock
with GDP. It's going to lead us
losers.
either to flatline, zero growth, or a mild recession in the next 9 months. That's a huge.
That's true. We did get the candle or the handle here on
regarding
the
the Fed.
And you said gold,
BBY.
right? Yeah. Oh, yeah. Go ahead.
Yeah, so gold is certainly good heading into either no growth
Okay,
or
I'll buy
recession.
more.
The Fed's going to raise by a quarter point. Everyone knows that it's absolutely the wrong decision. They're fighting the wrong battle. They've been doing so all year. The 75 basis point hikes from last year are just getting into the economy now. So what they're doing is literally taking their boot and stepping on the throat of the economy at precisely the wrong time. They have done damage. They're going to do even more damage.
It's hard to get by.
Right. I want to get to your picks here.
Cup and handle, hype.
Ensign, Insulet. Now, Sprott, this is more in the financial world, and the other two are more in the healthcare world, right?
So Sprott's been a long-term holding of ours. They essentially manage money in the precious metal space. New bull market in gold, new bull market in silver. This money manager is kind of flatlined, gone sideways for the last 9-ish months. I think their EPS explodes this year, and the stock moves into the 50s. The other two are both, kind of in the healthcare space. I didn't choose healthcare because they're defensive. I chose them because I think there's an opportunity in the here and now. Insulet is
You guys just know. Remember.
They could have an omnipod.
BBY
to inject,
goes crazy at some point. Before OTC, after OTC, new ticker, and it gets up to $5, $10, $20 a share.
In November,
we were all lucky.
I think, again, this one
and
could
it's
be
an exception and not a rule. And this,
maybe as high as
with that money, don't do it again. I'm saying.
Next year, so I love this one by itself. Not
put that money in another account, hide it from you. Buy the SPY, sell puts.
It's in a great area where they do skilled nursing.
Build big money slow.
They're buying up places like crazy. Over 200 acquisitions in the last 10 years. Small earnings and revenue beat today. Guidance is still pretty good, and this one could be in the 100.
I'm not doing it to hype you.
I think these are three.
I'm just saying, if this works, this is the exception. This is the rule. Don't go for it again.
I need to give them Airbnb and Apple and
that's what I'm telling myself,
and the ones that everyone plays. So
I've only seen the rule. Sorry, this would be the exception, not the rule. Sounded like hype. It's supposed to be a responsible.
Energy should have done. I've traded Energy a number of times this year. We do own Exxon for full disclosure, and I'm going to continue to own Exxon and buy it a little more into weakness. However, Energy,
you just can't help yourselves.
The backdrop for Energy is super positive. Oil hasn't reacted. The stocks are they're meh.
It's a casino, yeah. So you treat it like that. So if you're making money, take it out.
More Energy right now.
Preserve it.
If
Preserve capital.
See one more sell-off in Energy, I would be a two-fisted
Data
buyer,
farm.
and I'd probably sell into a run if there was one the next couple of weeks. But
get a separate account
and should have performed
put
better
money in it.
than
Don't
it
touch
has.
it.
And perhaps that's sniffing out more.
Don't shake that
weakness.
money. Just
we
leave
won't
it.
know yet.
Paul, love having you on the show. Thank you always.
So,
Paul Shaft,
Cameron.
President, Chief
No, you can't say that.
at Heritage Capital. Okay, coming up, we're looking for investing opportunities abroad in emerging markets, international.
I mean, if this work, it'll be a longer time frame work. I'm not saying the next couple days. Like, it's not going to go to $10, $15 a share in the next couple days. I'm saying like 6 months, a year from now. If it plays out like a Hertz does, basically. Dude, SPY wants to go again. Buy Tesla and sell cover calls. Yeah. For non-financial advice. Thanks, Jay from the Bay. Appreciate it, man. Yeah, where's our like counter at? Bad 35. Thank you guys for 35 likes. Well done. Well, you should be able to close. I think everyone will be able to close on OTC. As far as opening a new position on it, you might not be able to. Yeah, I think so, John. I mean, unless if we get a good move and I can make profits on my position, this last position I just opened yesterday, I'll hold through, sure. I mean, the value of it right now, if you know, if we do make it out the other side of some sort of restructure, a lot of ifs here, but then the market cap on this thing would, for me, could be 10x pretty easily. I mean, very easily. I mean, that's yeah, 10x, yeah. So, yeah. Over called the GME 2 years ago. GME was a great theta farm for up until what, like 6 months ago, or whenever that split happened. I mean, it was good after that, but it definitely started slowing down. When was that? Yeah. Like around here, we noticed the IV really started to just dwindle, and then it's just gotten bad ever since then. It's not bad to sell cover calls on, it's still good, but not like it was. But that's because what's happened since then, not big moves. It was good to sell back here because we were having big moves, warranting a high IV, right? So market maker knows what's up. They know the IV doesn't need to be high because it's not making big moves. Why is bull flagging again? Dude, literally going long any time on the SPY today would have been an easy trade. It's just, it's not a good way to trade. There's no, I mean, there's formations here, there's bull flag after bull flag. Break it down on the 1 minute, you could probably see, yeah. Easier to see there. New high of the day there on SPY. Kirk mocking me. $412 inbound. Yeah, Bungie's still doing it, that's right. Bungie's still farming that theta on GME. If you cover calls now though, if it does make a big move, you're stuck for a long time. Real positions may reopen. There is an OTC market, you may be able to continue managing them as you see fit. You only need to know if you can sell. If you're trying to buy more in OTC, you're not sure, just buy before OTC. The selling thing is what you need to know about. If it rips up to $5 a share in OTC, you want to be able to close it, most likely. DRS is gonna go nuts soon? What do you mean, like more DRS shares, or what do you mean nuts? I mean eToro spread. $1 won't get delisted. I think yeah, I mean that is one of the criteria. I think being in Chapter 11 though, it's gonna go to OTC regardless. Unless if they get out of Chapter 11. John, I know, man. Yeah, my futures would have been up like $3 grand today. I took my happy profits, but yeah, this is a big move. And then we saw it. I mean, every level would break, and then a bull flag, and then a break, and a bull flag, break, bull flag. Just done it all day. Great, great. Now the move back down is probably, I mean, it's not going to be, you know, we're not coming back down here. Not today. Might get a VWAP retrace, but even that would be huge. I don't think we'll even do that. That's so far down there now.
Where they get that inflation risk premium in their assets? Are their returns inflation proof?
So as you talked about China reopening, and obviously excitement there, luxury companies that are exposed to China, how could someone get into those? What kind of companies are you talking about?
We think the premium brands area is very interesting. These are companies that are very well run, vertically integrated, manage their costs well, but are able to access that Chinese consumer, that Asian consumer who has a lot of pent-up spending to do and a lot of travel to do.
Would this be retail, autos? I mean, what are we talking about?
We're talking about apparel, we're talking about luxury apparel, we're talking about cosmetics, what we see in the duty-free aisles around airports. You know, these are areas where more travel means more spend in some of these really luxury brands.
Just totally trapped in the shorts.
We've seen from their earnings so far that they are saying that their revenues are being supported by this.
Yeah, that's the gap fill.
That the US
just filled it, didn't it?
Is the reserve currency for
just
everyone,
about. It's almost filled.
To see it needing falter?
I think the US dollar as a reserve currency is hard to topple, but in terms of its weakness, we think
DJ, I wish I didn't listen to you again today.
Especially if inflation remains high and the Fed
I appreciate people's advice and insight, but not when it's so confident. It just
the financial stability comes into question. So that could mean that the dollar continues to weaken.
Yeah, are they having some of the same conversations?
I'm positive on my Hills share. That's hilarious.
That we are here at home.
In Europe, the deposit issues aren't as acute.
I mean, Meta's having a big pull on it. Tesla's ripping. We've had a big sell-off the last 3 days. So it's rebounding. I mean, this was a cup and handle, but I don't think. I think we're full on back in an uptrend. This uptrend right here.
It's great to see you, Shanil Ramji. Thank you very much.
Thank you.
Because the handle on a cup, it can't retrace that far.
Still ahead in the second half of our show.
This is wild.
What about a recession? What about recession-resistant strategies?
But that being said, looks like we're building another shoulder here.
We'll be right back.
You see that head and shoulders on the SPY? See this? Bling, bling. Head, shoulder, shoulder. So, consolidating around here, and then maybe it's back down. Huge move today, though. The data this morning was bearish for the economy, so maybe the market's also kind of liking back to the interest rate trade. Bad news is good news. Could play into it some, maybe. I think we're just in a short squeeze. Also seeing this kind of inverted head and shoulders along with the cup and handle. Cup and handle is more prominent. Meta's up 145% in the last 6 months. That's insane.
Points and the Russell up 1.1%. I mean, we are really getting some momentum here. Let's bring in Ben Lichtenstein, Senior Futures Trader, to take a look. 90 minutes left in the trading day. I mean, we have to rub our eyes. Look at how the market's sort of taken off here.
Absolutely, Nicole. Conviction to the extent that we haven't seen for a while on an intraday basis. For sure, see all four of the majors enjoying gains to the extent that
pretty nice rally today on 80, huh?
Up to 41.22 today. I saw the Dow to
move like this. I think this will probably have continuation. But that said, we are kind of at the resistance of that shoulder, so maybe just consolidate up here.
38, a trend day up in all four of the majors.
Consolidate for 2 weeks, and then you get your move in 2 days.
As when you look at the
one way, and then one day the other way, back to consolidating for a week.
2.5% here as we speak.
Last big move was here, consolidated basically. This was like a month.
Earlier this week.
Big candles though, these ranges are crazy.
70 points here now.
And then big moves here, and then big move back,
we
and
saw
now
recently up around 13,200.
probably just chill. We do have data, I think, next
there you can
week.
see again all four of the majors gaining up
Big
over
data.
1% on the day, but you know, this comes, you mentioned some of the earnings. We saw Microsoft, we saw Google earlier in the week. Meta, obviously, the focal point here today. I think on the close, it's going to be Amazon into the end of the week. Some of the other big names set to report, but investors have been shrugging off the negative, Nicole, and focusing on the positive, to say the least. I think that chart right there is a pretty good reflection of the move we've seen off the lows from last fall
BBY did
and the test
give up that rally.
Level that we saw earlier this year.
Could still make a move today.
Right,
a high close today, though, would be pretty awesome into Friday. If it just consolidates on Friday or even like rallies a little bit. Last few days before TC.
Up 1.1%, but the Dow and the S&P just fractionally lower. We just need a little more oomph today or tomorrow to get through that and have a winning week. How about rates? I know you're watching that.
Absolutely, and maybe that's why we're not seeing participation from the other majors along the lines of what we're seeing from the NASDAQ. I think NASDAQ's actually seeing this kind of safe haven play in many ways right now, and some of the names that have been accelerating, really leading the move. But getting into rates, Nicole, now point out why I see that divergence in a second, but let's just point out this week the 10-year yield's back above 3.5%, 30-year back above 3 3/4 again. This week to 3.83%. Now I'm surprised this hasn't really created a headwind for stocks to this point. The 2-year back above 4%. Now I went back to when the 2-year first took out that 4% level. We saw it last year in September up and through that key area, and it was on a tear, right, as we rallied up to 5%. The highs that we saw recently, we've come off significantly since. But Nicole, at the same time that the 2-year last September was getting up and through 4%, you had the S&Ps around 38, 37. So we're about 300 points above that right now. NASDAQ also, again, shrugging off some of the rate run-up that we've seen as of recent. So I think this really does speak to what we've seen in terms of strength in earnings. Again, a few of those tech names. The real question is how long can a handful of names, a very small representation, kind of carry the weight of the broader market here? But lots to keep an eye on here, not only in terms of rates, in terms of the indices as well. Don't forget, let's not lose sight of the busy week in terms of next week, the Fed. But before that, we'll have some inflation data, personal income and spending data due out tomorrow, Nicole.
Yeah, looking forward to that. Ben Lichtenstein, thank you. All right, joining me right now, Adam Hetz is here. Global Head of Portfolio Construction and Strategy, Janice Henderson Investors, right here in person. Thank you for being here.
Thanks, Nicole.
So a lot of talk about recession. How likely is a recession in your eyes, or how are you preparing portfolios?
A lot of talk about recession as we're out there talking with Janice Henderson's clients. It's probably the most anticipated recession ever, maybe the most anticipated bear market ever to go alongside with that. So to us, it's all about trying to find some visibility and trying to find some solid footing in all the murky waters that are out there. So it comes from thinking about what a recession could actually look like on historical basis, and then what this type of bear market could actually look like given all the valuation and earnings headwinds we're facing. So on the recession, if you just look historically, the 6 recessions that we've had since 1980, if you're expecting a milder, shallower recession, you're in good company, and 4 out of the 6 recessions were milder and shallower. So a lot of people might be surprised that recessions that are milder and shallower don't last longer than 8 or 9 months, and the market bottom can actually come in the first 2 to 4 months. So by the time that pain starts to accumulate and the red starts to pile up in portfolios, that might actually be the darkest before dawn moment before investors even realize it.
All right, so if we're going to go with mild and sort of somewhat short-lived, right, less than a year,
I suggest holding until it's already to sell before. There's no way I can answer that question for you.
Right up front. Do you buy on dips, or what do you do to prepare for portfolios that people might be calling you? And
the only way you can answer it too is
obviously you want to buy the dip, but it's about trying to figure out what the dip
situation.
might look like. So going back to the historical precedent,
educating yourself on what OTC is and what it means and how it's going to change things
so
would be a good way to help make you
2023
make a decision.
Slow down recession year. Then we also looked, if you have that first initial dip and limp into recession for those first few months, the next 12 months of recovery afterwards, so call that 2024, on average, historically, the S&P, including that initial drawdown, is up 15%, and then mid-cap and small-cap are up 24 and 29%. And that's if you're just flat-footed, kind of pinched your nose and stay invested to the end of next year. You're up 20-some%. That's not bad for 18 months of work, but we're not saying you should stay flat-footed. There's a need for offensive and defensive tilts in portfolios going forward.
Right. I mean, it sounds like, you know, somewhat like go
another
for
bull
it
flag up here.
versus sitting back on your heels or
not quite.
Or,
it's
know,
not quite filled.
Cash because you'll miss some big moves, right?
That's right. It's not just being rigid or being passive.
One more
So I
level
think
there.
defense can be going up in quality. If one of the legs down of the market is going to be the earnings weakness and earnings revisions supposedly going lower, what do? Is you look for stable earnings. That's almost literally quality investing in a nutshell. And on the offensive side, looking at small and mid-cap equities, which most investors are underweight right now, and for good reason, because that's the early cycle trade. So you don't want to be overweight small and mid-cap if we're going into a bear market, because early cycle into a downturn is not good compared to large caps. But going back to that darkest before dawn moment, or channeling Warren Buffett, being greedy where others are fearful, that's that small and mid-cap trade that investors should consider legging into as we start to get into the painful part of a potential drawdown.
All right, so we'll watch for small and mid-cap stocks. Fixed income investing, how do you actually recommend some of that, right?
Yeah, and maybe we're talking about this, making it sound too easy, talking about defense and offense and staying invested through the recession. It's going to be painful, and it could be scary if the predictions play out.
Stop saying with me a bear flag.
Bear market. So luckily, that really painful.
It's a bear flag too. That's
last
true.
Last year has kicked off this renaissance in core bonds. So that goes back to the 40 of the 60-40. It's easier than it's been in years to build an investment grade, mid-single-digit yielding core ballast bedrock part of the portfolio. And the stronger your 40 is, the more you can let the 60 stay exposed to weather the volatility and the inevitable rebound on the other side of this thing.
And then when you look at some of the names, the big names that have been reporting, do those sort of draw your attention? Do you say, oh, I'm sort of interested in some of these names?
So the bigger names, so objectively, that's just the bigger part of the index in the U.S. And just objectively, the facts were from rock bottom interest rates, and we had ZIRP and zero interest rate policy. That was helping fuel a lot of that long duration trade within equities. And now objectively, we're in a different rate environment.
Yeah, in 5 minutes, you got a little bear flag.
A lot of high quality exposure in those mega cap.
You have to consider it's on
names.
VWAP.
But when we're thinking about quality going forward, we're talking about that earnings stability. And you can get that earnings stability and high quality in a way that transcends different sectors, styles, or sizes. So in short, forget about a stock market driven by beta and those really big names, more to this market of stocks where you're kind of hand-picking out of that market the stocks that you think are going to have the more stable earnings as a way to build in that defense to potential broad-based earnings weakness back half of this year.
And the argument for international can be made. I mean, we have seen some highs there. We have seen some valuations that are more attractive than U.S.
Well, it's got the cup and the handle.
But do you stay away from international?
We're not staying away from international, and it's been cheap. It's been
not
cheap for
the
a long
best
time. So
looking anymore at this this much for retrace.
But
So
being cheap in a bull market, nobody cared. But being cheap in a bear market or potential slowdown, people care a little bit more. So when you compare it to U.S. valuations, which are slightly rich compared to historical averages, there's not a lot of room in the U.S. market to absorb earnings weakness without generating losses on the indices. That's why the market's so obsessed with earnings in the U.S. because the valuations are so rich. There's not a big margin of safety in the U.S. Internationally, it's the opposite. You look at Europe trading at a 15% discount to valuations compared to long-term averages. If we do go into a global slowdown, it can essentially absorb some of that earnings weakness in Europe, and the valuations could just get slightly richer, just to the tune of historical averages. And it's not just that in Europe. You're also getting dividends 2 to 4 times the level of U.S. dividend yields. So it's an additional kind of bird in hand margin of safety and potentially a slowdown environment.
And that's the thing.
Little liquidity push midday.
You mentioned quality, but look for yield. Overall, I mean, something like Goldman and Apple you were talking about in the notes.
Sure. Yeah, so looking for quality, it comes from a lot of different sectors and places, and quality is not just a U.S. large cap equity. There's a lot of quality in international developed.
The longer time frame though.
Income, kind of reprioritizing
Equity flip bullish, and it is still kind of an inverted head and shoulders.
The investment grade ballast. That being said, you mentioned reaching for yield.
Intraday cup and handle kind of breaking down here.
Tight given the potential recession outlook, but when you're talking 400 or 500 bip spreads on high yield over current treasury rates, you're getting high yields and high yield that you don't want to miss. We would just talk about being a little more flexible and dynamic, and again, not being passive and rigid in high yield and core or equity portfolios right now.
Well, just to circle back, I hope you were right about a more
HILS making a end-of-day move to VWAP.
Let's hope.
You know, based on those 6 recessions that you looked back from the 1980s. Adam Hetz, thank you.
Thanks,
Janice Henderson Investors, nice to see you. Thank you.
Thanks again, Nicole.
Still ahead, we'll bring in our panel to discuss Meta's big earnings move. Okay, so what does it mean for social media companies, not just Meta, the rest of them? Coming up.
BBBY below VWAP now. Getting back to that low, we're consolidating on the day. Well, that was fun. Bills is kind of moving up. FRC back up VWAP. Oh, a little bounce on that 50. What do you know? SPY's gonna break out here too. 412.63. Yep, there's new high of the day on SPY. And Hills rejected VWAP. Bye, new high there. Yep. Snap earnings after hours. There goes the spy.
Base data, so not just where people are saying nice things or bad things online about a company, but really where you're trying to measure the engagement
almost 2% on SPY.
with a brand or with a product. And so for us, that's why Facebook has still been a long position for us, but separately why Snap has been a short position. Some other names that we do like, I'd give you an example of something like a Microsoft, which obviously just reported and they had great numbers and they continue to make the right steps in a lot of different areas. But you should think about them from a social media perspective as well, right? Xbox is a gigantic social network, and the more they move that gaming platform,
FRC moving up,
platforms, just taking my own son as an example, I think he spends far more time engaging with his friends on that gaming platform, that if it starts to move out of the house a lot more, it's just a component of the competition in that social media marketplace. Obviously, they've got a far more robust business than other business lines, but it's little things like that that we look at that we think gives companies like Microsoft an edge, and that one's a long position, I believe, in our GK ETF that Ross Gerber manages.
I mean, what did you think about Activision? I mean, any final thoughts? I'm going to give the final thoughts to Anthony.
No, I think final thoughts is, the one holy grail here is engagement. You have so many mega platforms across social, across streaming, across gaming. They're all bleeding into one another right now.
All right,
And
3 minutes to
who
CNS
could do
close.
best and who could offer the most services to their
And
users. I think right now Meta's doing a terrific
power
job.
hour.
I think you're seeing companies like Netflix trying to get involved in
Almost
different
my due. I'm
streams
ready to average in
make the
with
Netflix
2 more
experience
final
more
contracts. That's
cohesive.
it. That's all I
And it's
got.
going to create pressure on sort of pure plays like Snapchat to have additional features that make it a landing spot for not just messaging, but more activities.
Noah Hammond, Anthony Bartolacci, thank you both. And thank you, friends, for being with me right here every single weekday, 11 a.m. and 2 p.m. This is the watch list. This show is finishing. I'm leaving you with 534 points. I'll see you tomorrow at 11, but keep it right here. Market on close with all of
I like this little inverted head and shoulders on BBY. I might pick up more. Today could be an RSI divergence too. Looks like we probably will get one. Not to say it means a whole lot, since the price action is pretty weak still, because we did get one back here, and then we get then we had that news. What more bearish news could we get? Delisting, going to bankruptcy. I guess they could change from chapter 11 to chapter 7. I guess that would be it. Just full on liquidation. No more restructuring. So you're saying there's a chance. I don't want to put my rest of my account in BBY. Not gonna lie here. Being able, I don't feel like I make smart investments. My portfolio would disagree. Not something I would plan to hold. It would be for a bounce tomorrow or next week, with all basically the bearish catalysts out of the way. The huge overreaction to the news we've had. It's not a whole lot more if you look at my account. This is just one of my accounts.
One that we had this morning was about the First Republic Bank situation and the financials as a whole. Morningstar's analyst who correctly called FRC was the closest to being on the chopping block says that banks as a whole are in overall good shape. The market has a similar degree of optimism right now. We have got a ripper on our hands. I mean, shorts just getting torn apart here. It's happening
over
as bonds
2% on
are
the
selling
SPY.
off, the market finding some optimism here and stability in the economy. Or maybe it's just a pure tech ramp up, because there are a lot of layoffs tied into the stocks that are up the biggest. That's Meta, namely overnight, carrying the torch from Microsoft yesterday and looking to hand it off to Amazon this afternoon. Look at the chart from Meta and you're going to see quite a turnaround story here. And
Dude,
we're
if
back
it breaks
to that
this,
big
we're already over
gap
2%.
down from the end of 2021.
This would be one of the
when things were really starting
bigger
to look
daily
concerning
candles we've
for
seen this year on the SPY.
Facebook's transition to the metaverse. Mark Zuckerberg says that is still the plan, but spent quite a bit of time talking
113.
AI because well, that's how you get your stock up right now.
Yeah, I think we're back in a bullish channel.
15%.
This move was way too big for a handle retracement, and we're breaking that head and shoulders.
Off the lows, not quite, but that's how much this thing has run. The broad market is responding in kind.
The size of that candle.
In cloud stocks, not so much in
I guess this was bigger.
But at least they're
got some bigger
positive
candles.
after
We haven't
being
seen it in a
early
bit.
this morning, but
Over
lagging a tad
2%.
here, even despite an okay number from KLA 10 core last night. Do want to
Why
watch
didn't I
this
go
group
long?
right now because it is a very, very important sector, and a lot of these charts, when you broaden out from some of the specific companies like Microsoft and Meta, still are within recent
I've got to quit
ranges.
this.
This is a powerful move today. It's happening on the back
didn't
of
follow my rules
earnings, which
today.
show a
Didn't
lot of
listen to
conviction.
myself.
But technically speaking, you still want to see some more here to talk about a real potential breakout. And for the NASDAQ, sitting at 13,000, trying to push above last week's highs and the past highs of the last month. It's pretty close. S&P right around 42. We've been here many times. Still's got a ways to go to get through the past month's highs. Look at the chip makers, for example. Thinking about a sector that sits right in the intersection between growth, value, economically dependent, and secular independence. For growth, SMH is right smack in a level that it has been at for the majority of this year now. So it does add just a little bit of nuance to the action today that is overall extremely positive and risk on. The chip makers need to hold this level after a bit of weakness yesterday following Microsoft, interestingly enough. And so we'll watch it very carefully. I'm also looking at Bitcoin because when it comes to risk on, nothing beats the coin. And it's taking part today, up about 7% right now, pushing towards the 30 again. This is the level. It's probably one of the most important levels you can watch right now out of all the charts. Stocks, bonds, commodities, you name it, Bitcoin is reliable in its tell as an indicator of risk-taking appetite. And it is showing that there is appetite here. Can we get above the recent highs and show continuation in this Bitcoin run that has been halted around 30,000 since it first got here? Took a little bit of a trip higher, but then came right back down. Yesterday, it literally sprinted up to precisely 30,000, gave it a smooch, emphasis on the mooch, and then dropped. Now we're coming back today for a round two. So, not much else to say other than have technical appreciation for what Bitcoin represents. Love it, hate it, believe it or not. What we know is that when there are major changes in the backdrop,
I don't know, John.
Bitcoin
Probably, maybe. I don't know.
Tells us which way it's going.
I have to look at it.
In the camp of growth and tech themes, or in the camp of inflationary assets concerned about central bank tightening rates. There's not a lot of concern about the latter right now. VIX is down, even as bonds are selling off pretty hard. TLT getting blasted here, down almost a full percent ahead of inflation tomorrow. It does look like if the number comes in light, you've got everything you could ask for here for a bullish breakout. Solid earnings that analysts weren't surprised by to the negative side, and if inflation's light, you'll get your macro peace and calm. Right now, though, we do want to watch bonds because they are set up once again with the 10-year at 3.5. If something does shock tomorrow, GDP's consumer price spending element was pretty elevated this morning. So let's get through tomorrow before we give the all clear. But it certainly is looking pretty good for bulls right now. Let's bring in Renita Young. Kevin Hanks talks more about what's behind this action. Meta, of course, is the highlight here, and it seems like the market's got a lot more broad-based confidence than it did yesterday when the excitement was basically limited to Microsoft and then faded throughout the day. Now, of course, the catch is that a lot of these companies are still talking about layoffs, but the market seems to be just fine with that idea.
I think we can see today the difference between a company like Meta talking about its layoffs and Dropbox talking about its layoffs.
I like that comparison, yeah.
Yeah, so we'll see it in the numbers. Right now, Meta is showing that the year of efficiency is working. Earnings came in above estimates. Revenue also outpaced estimates. Revenue actually grew about 3% during the last quarter. Research and development expenses, they exceeded last year's, and that makes perfect sense, especially since every company in the world is searching how to make AI work for them, right? And analysts at Deutsche Bank expect revenue to grow revenue growth, I should say, to accelerate into the next quarter and for the remainder of the year even, and for the company to have muted expense growth.
Depends on what market maker's pricing in for Snap.
Obviously, the fact that
they pricing
Meta
a big
has
move,
laid off so many people and
small
will
move.
continue to, that's being offset by the research and development expenses. So it might translate into muted
When I usually play earnings, I
growth
usually play
at some
directionally.
point. And for the company, they announced also the third phase in their plan to lay off people. Now, we know that they let go recruiters in March.
Strangles.
They let go tech workers last week. And this time, in May sometime, they're going to let go of business staffers. So we can look to see who they might cut, even from leadership. You know, no word on who they will cut, but we'll find out. But this is part of that whole restructuring plan that Meta announced back in March to lay off those 10,000 people on top of the November 11,000 number.
What do you think, Kevin? Does this make sense as something to be a pillar of optimism for as an investor when the company with the most public and broad-based layoffs is the one being rewarded the most? Is that a healthy environment? Does it make sense?
Well, it depends which company you're talking about. Are you talking
Meta
about platforms that seems to be finding that lean level of employees and finding out they can remain efficient with lower employees? If you're talking about Lyft, that's a whole different story, Oliver. That might be the start of what we like to call the long goodbye in business, where this stock and this company doesn't seem to be doing well. But Meta's numbers, you can't argue with the numbers, Oliver. They beat on earnings, they beat on revenue, they beat on daily active users. The average revenue per user was higher. This is a company with over 2 billion daily active users, almost 3 billion monthly active users, Oliver. This is a company that just needed to get the parts of the company that were dragging and a little bit of recovery in digital ad spend, and this company's off to the races. You know, it's interesting. Early in the week, we had good earnings and bad macro weighing on the markets. Bad macro, even though we had some questionable macro this morning, can't stop this market from going up. Meta platforms really leading this market higher, Oliver.
Lyft making layoffs too, and you know there's optimism when the market even gives Lyft another look here. It's unchanged after getting blasted on its earnings earlier this year, and then again just drifting to the downside. So I will say, when it comes to assessing the behavior of this market, at least there is some degree of separation of the good and the bad generally when you take a broader time horizon. Today you've got like everything rallying, but as you mentioned, the difference between a Dropbox and a Meta, and even a Lyft and an Uber, for example.
You're right. So with Lyft, by the way, they've been trying to make more competitive pricing, right, for their drivers or for customers, especially since Uber dropped a lot of its extra tax that it had over the past few months. Lyft wanted to be able to offer a better pricing as well. They said that they wanted to improve the experience for customers and for its drivers as well. And so that's what the cost savings from Lyft will be going
I'm
to.
on to some shorts
Lyft
here.
is letting go 26% of its workforce. That amounts to about 1,000 people. And it's expecting to have up to $47 million in costs related to that severance of employees, the employee benefits, in addition to other things too. And we also know that the company had struggled in the second quarter, or in the first quarter, I should say, in the February earnings. The company definitely saw a whole lot of points where it really needed to tighten up. Worry about it, but we'll really only see that out in May. We'll find out if the company did manage to maintain profitability through the quarter.
Okay. You know, these numbers are getting larger. I feel like 6 months ago it was kind of exploratory style layoffs almost. Now that you've got 16, 20, 30% levels being announced, is this perhaps informing also investors' opinion about the job market and what that means for the Fed? Kevin, is there an implicit cooling of the employment situation that perhaps is giving folks also reinsurance that they don't have to expect extreme rate hikes?
Well, I'll tell you, Oliver, I think a lot of it has to do, remember, we're in the Fed quiet period already. A lot of it has to do with what we see tomorrow in personal income and outlays. It looks like the year-over-year numbers and the headline's supposed to be 5% to 4.2 on the core, 4.6 to only 4.5. So a little stingy on the core year-over-year. Listen, I think we've seen this for a while, Oliver, right? High profile, large cap tech.
Okay, SPY's come down a little bit.
But leisure and hospitality, the smaller businesses actually hiring, those numbers have been much more stingy. That's where the stubbornness in the 3.5% unemployment and the job data have remained. But, Oliver, you are starting to see the jobless claims tick up. You are starting to see some of it drift into the other markets, but we're only about a week or so away from a new payroll number, Oliver. I think tomorrow's number will be pretty interesting as it pertains to a Fed that claims to be close to the end. Remember, Jerome Powell talked about a 5.125 Fed funds rate. That implies one more rate hike. If we get a pause there, this could get really interesting, Oliver. And like I said, the relationship with the U.S. dollar, that'll be important too as we look to UK and Europe and their rate hikes. So there's a lot going on here, Oliver, but you can't hide from what this market did today. It went up early and then it kept going, Oliver, unlike earlier days this week.
Okay,
Takes time.
there it is. Yeah,
It's a slow mover now.
Important, and a lot of it here because they tried to
nice little
knock
bounce
them down
today.
earlier this morning.
I think the bounce might continue. I think SPY's probably in a little uptrend, back in the uptrend actually. We'll see how far the pullback is today and end of week. Got a little inverted head and shoulders on the hourly. You might see a bounce back up to $20 before it keeps coming down. We'll see though. 1940s resistance. We've got data next week, so
isn't it amazing what a difference a couple days?
Yeah, just patience on your calls.
Worried about First Republic, and here we are today. Much more excited. I think it's a little bit of both, Oliver.
You can get puts in the meantime.
I think these mega caps.
Actually, today is not a bad day to start scaling into puts.
Meta's doing is
it just doesn't move
never a bad
fast.
season on the FANG stocks, I believe, and today is really a great example of that. I think it's a little bit of that. And I think, frankly,
we just had our Linux update too. Nice little inverse on Linux would be.
I think First Republic is a one-off, and maybe there's
trade,
a couple more out there, but fundamentally,
I just consolidated up here.
System is sound, and
it's going to be the last 10 minutes, maybe even after hours before I get back to green on these futures, I bet.
For the markets, I think they're responding well.
This is insane.
And excited about it, obviously.
What do you think this could potentially lead to? Should investors be feeling comfortable if they are passively parked in indexes?
18 strike.
Is last year firmly put behind us?
I think you're right. Last year was the first year we saw, since 1990, I think it was the only year both the bonds and the equities were down, and I think it is behind us in some ways. I think ultimately, Kevin was right. There's some big numbers coming out. I think give me till next week till I give you the final answer, Oliver. But I think the personal income number and outlay is a big one coming out tomorrow, and of course the payroll numbers next week.
Ripping
but
more.
Fundamentally, yes.
We stuck again.
And indexes are going to be rewarded because as the FANG stocks goes, ultimately I think the market goes that way as well.
Should we have all-time highs on our radar?
I think we're going to be testing. Yes, sir. I think we're going to be testing some all-time highs. I think you're right
What's
on.
he
I think
talking
there's
about
reasons for
all-time
optimism. Even if the Fed, I don't think the Fed
on
will.
what, the market?
I think the Fed will continue on its course to describe this earlier. Certainly, if it takes a pause, it could get very, very interesting. But even without a pause, I think we could be testing all-time highs at the end of the year. And again, isn't it? It's such a lesson for us to know what the difference a couple of days makes, right? And certainly a couple of weeks, right?
Chris, when you think about getting back to where we were pre-COVID, levels,
Yes.
extreme valuations, only comparable, and in many cases beyond .com. So if we're going to get back there,
Is he talking about the market? All-time highs?
Bottom line, or do you see valuations
BBY,
reflating
right?
to those extremes?
BY's coming down.
I think
It's
they're a
getting flushed.
reflate. I do. I don't think we need. I think there's the
Just
market's
another little
recovering,
liquidity
and I
pump
think
midday.
people have short memories, and I think
What do you
the
know?
talk of all this right sizing, as we say in the tech sector, it creates optimism. It goes beyond the tech sector, I think, in terms of the optimism, and I think we're going to end up in the same place where we're going to be talking about valuations being a little out of whack as early as the third quarter of this year, end of the third quarter of this year.
Why would people pay those same prices if these companies are telling us that they're growing at a slower rate, such that they have to fire 10 to 20 to 30% of their workforce?
I think unfortunately the market isn't as thoughtful as your last question. And at the end of the day, I think the idea that these stocks are worth less, there's still tremendous optimism around these stocks, and I think at the end of the day, these layoffs trigger in people's minds more efficiency and ultimately better stock prices, which people are going to pursue.
As far as the Fed goes and the inflation conversation, it seems like that moves pretty far down our list when we're watching stocks pump. But as they do, what impact does that have on consumer spending, the optimism, and what eventually makes its way to those same inflationary metrics? Are we going to get stuck in a tug of war? Stocks go up, people start spending, inflation stays elevated, Fed has to stamp it out?
I think you're right. I think the GDP numbers weren't great, of course, but consumer spending still looks strong, and I think we're going to be caught in that trap a little bit more. Yeah. So yes, I think it's an interesting paradox, but it takes people a long time. When we see days like today, you can see the resiliency of the market. We're seeing up over 500 points as we speak. You see that it shows the kind of the yearning for equities to take off and people's comfort level with driving these values back up to really overly inflated numbers, in my opinion.
Chris, so what's the best way to play this then from here when you talk with clients? Is it just that passive approach, park your money, don't worry about it, or do you have to be in specific companies, sectors, themes? Anything stand out to you as giving the best bang for your buck right now?
Yeah, I think you're certainly, I wouldn't be taking a big risk by saying tech in any way, right? A couple of things we're talking about is really make sure that asset allocation is on track. So we're asking our clients and investors in general to reappraise their risk level. We're finding people have waited 24, 36, 48 months to look at the risk tolerance level again and get an appropriate asset allocation. So that'd be number one. And number two, don't be afraid to leave a little money in cash. As you know, these folks are getting 4 or 5% in these cash.
I could wait until
accounts.
OTC without news.
There isn't maybe some of the same penalty that they perceived before.
Looks like it.
To be fully invested. And lastly, I think just ultimately
maybe it'll be after hours news.
But the broad market works. It's an efficient. It's the most efficient thing we've ever had. And I think ultimately, if we keep it,
does seem like Ryan Cohen's hinting at something
in line with our risk tolerance, we're in good shape.
Fig.
And certainly for the end of this year, should be fabulous.
Okay, all right. Great guest for a big update, Chris. We'll certainly follow up. Appreciate it.
Great to be with you, Oliver. Thank you.
Thank you for your thoughts, Chris McMahon, President of Aquinas and CEO as well of MFA Wealth. All right, since we're at it, let's talk about future tech and companies that are taking products to market for the first time. Ideal Power, IPWR, the ticker, is a stock that has been going sideways here for several months. Better than some of its peers in the energy space that have had extreme volatility. And we're going to talk about their plans going forward. The CEO joins us next.
Earning after hours? No, they filed the extension. They're not going to have earnings probably this month. Not happy. Yeah, I averaged down some today. Not a whole lot. But overall, I would need, yeah. I would probably need $2. Make it out. From all my BBY losses. Good SPY, new high on the day. Wow. Wow, wow, wow. Ah, we stuck again. Sweet dreams are made of these. Who am I to disappear? Travel the world in the 7 seas. Everybody looking for something. Some of them want to use you. Some of them want to get used by you. Maybe a double top on SPY? Maybe it's doing it. An epic, just vertical move today. Even more vertical than the move it made down. BBBY, flushing back to the lows. It's more volatile this low. It can go either way easier, just with such a low market cap. I've been had. Hey, you called yourself with a dopamine move. Got up to yesterday's high and it basically nailed it, almost right on the head, so. Little liquidity pump midday to get us shorted back down. Flirting with the all-time lows now. Looky, looky, looky. Probably 10 cents by end of day. Yeah, look, those liquidity pumps during the day, those are probably going to keep happening. That's why it's a great trade. You just have to time it right. You just have to day trade it right. Let's see, is that inverted head and shoulders broken now? Yeah, a little bit. If it wicks, we get a close above that 1164. Still kind of on the table. Look at that wick! Holy smokes! Yeah, we want to close above this level. Even if we do, that wick down there still sucks. Kind of messes up that head and shoulders. That inverted head and shoulders. We might break the all-time low though. Still.
That bring power control devices to utilities.
Just like yesterday, we had that dump into close.
Some of the world's largest
we might get that to 10 cents into close.
Large providers to the solar space.
That are really no green days on BBY.
Starting to explore technology as we bring out our first commercial products.
We're stock pickers here, so we like to track names. Are you allowed to talk specifics about autos or solar businesses?
Not yet. We hope to a little bit later this year be able to name some of them. For example, we're doing a custom module for one of the world's top 10 automakers that will be used in their drivetrain. We are getting close to entering the second phase of that program, and we hope as part of that we'll be able to start naming some of those companies. And we certainly have a lot of news flow coming this year for a lot of the customer engagements, and our focus is really getting to the point where we can really start to identify who some of those customers are, because it's reinforcing in our ability to capture new customers.
What do those contracts look like? Are they dependent on anything? Is it, I mean, it's a new product, so do they want to test it, see how it works? Or do they pay up front, or what does that period look like as they try this out, and how will that impact the financials?
Well, for us, it's really all about providing them samples of the product so they can evaluate it in their own labs, have their engineers take a look at it. And then as part of that, then we can put supply arrangements in place with them. It varies a lot by the particular market segment. For example, the automotive segment takes a little bit longer because they have separate qualifications you need to go through. On the industrial side, it's a much shorter time cycle where they can move right into buying products.
What do you think this market looks like? I know you've got earnings coming up when you'll report. From what I see so far, this is a pre-revenue business. Can you give us some idea what that trajectory you think might look like if everything goes smoothly? I'm sure you've modeled something out.
Yeah, we have modest revenue right now, really, for a program that we're doing with the U.S. Navy. But our first commercial products are going to be available for sale later this year. So you'll see the commercial revenue start late this year, really ramping into 2024. And as we continue to bring out new products that are really tailored for each of the large applications that we're working on.
There is a market right now that has been really focused on companies showing up the bottom line, and your stock has done quite well, especially kind of compared to its peer group, even without that revenue stream present. So I guess there's confidence here that the market's expressed in the timeline and the trajectory. What about from your own finances? Do you need to raise any money? Do you have sufficient cash to get to where you need to be until that revenue starts coming in?
We're in good shape. We've got plenty of cash to get us well through next year. We have no debt. We have a team that really is leveraging this huge investment that's already been made in the semiconductor industry to make silicon devices. So we don't have to put out any capital to make that happen. It's really get through the customer engagements and turn that into revenue producing arrangements.
Okay, we'll definitely follow along. Sounds exciting, Dan. Thanks for the heads up.
Thanks for letting me be on your show.
Absolutely, appreciate it. Dan Brdar, CEO at Ideal Power, IPWR. All right, we'll be following along this year as the commercial business kicks off. Tom's got some options when we get back. A few bearish trades in a big bullish market. Guess where those bear trades are? In the travel industry. Southwest still down. LVS also taking a breather at records. Of course, when it comes to tech, a little bit more optimism.
Imagine is all we got. I got filled on my GME put. Oh, partial. Well, Tesla calls about Snap and Intel calls. Home for earnings, huh? Snap and make big moves. FRC kind of came back down. Back to the support. We need like 0.5% move back down on SPY. Seems like a pretty big ask. Where VWAP is, that's ridiculous. Yeah, low volume today too. It's like, I'm not really buying this rally. I guess there's 30 minutes left.
You saw a bear trade here, someone thinking that the party's over?
I think so, because we saw bearish flows in not only Las Vegas Sands, but Wynn.
And
the run that these stocks have had, I mean, Las Vegas Sands...
They did nothing to deserve that.
Yeah, up over
yeah, that's a good point.
73% over the last 52
weeks. I mean,
weeks.
Meta had a strict plan on efficiency quarter or whatever.
The CEO stated
I don't know what Snap's plan was.
And tourism spending is underway. He didn't even say it was over. He said it's continuing, and that's based on what the trends that they're seeing in their Macau properties. And the one that's been holding them together is Las Vegas Sands has been their Singapore operation.
I think we're going to get another flush end today on BBY again, like yesterday.
A lot of the whales were going
all-time
there
lows.
in gambling as travel opened up over the last couple quarters. But yeah, but this stock's been a stalwart. Was down over 2% earlier in the session. Up 25% so far this year, so it's had a nice run. But somebody betting that run's going to end, and as I mentioned, Wynn Resorts also had some put buyers in here. But one that stuck out to me short term on this pullback today, the April 28th
at least
weekly,
to move to 411, I think
strike
would be
puts. Trader bought over 4,000 of those earlier this morning for an average debit of only 40 cents. So that break even at 59.60 over the next day is only about 4%, 4.5% below the current share price in Las Vegas Sands. So yeah, somebody thinking maybe some profit taking might be warranted, but they've only got a day in this trade. Really short-term positioning.
Okay, all right. Overnight short for LVS. All right, interesting. I guess we'll see what happens tomorrow.
Watch that PCE data tomorrow.
All right, let's talk your bull trade.
Yep.
Yeah, that's true.
Tech. That means
PCE
Apple,
tomorrow.
Of course.
Yeah.
Personal spending also. Both those are 8:30.
2.8% up for Apple.
Yep.
A little shy of $5.
Yeah.
Still got time to the earnings.
Yeah, 30% gains
Farewell win.
So far.
We've got 3 more days.
There was some data that did come out today that
1,
suggested
2, 3.
that handsets were down 14%.
We'll see some more liquidity pumps midday,
over the last,
if nothing else.
quarter here. And they expect these
We're
to
still-
kind of
we're still
continue. Will that
respecting the
affect
support,
Apple's
actually.
results? They report next Thursday after the close, so that's going to be a big one. Susquehanna came out with a report also that forecast their forecast.
Finally
they're
coming
cutting
down.
them a little bit as far as iPhone sales
Just a little bit,
goes.
not flushy
but,
at all though.
Yeah, reviewing of estimates, they're starting to lower the expectations. So what does that mean? If expectations start getting lowered before earnings, Oliver, what does that mean? Well, it equates to 80% EPS beats that we've seen so far in the S&P 500 at this point. But that being said, somebody did take an earnings play positioning to the upside in here because they did next week's May 5th weekly 170 strike calls. They bought over 10,000 of those for $1.80 debit earlier on in the session. So that break even of 171.80 over the next 8 days is only about 2% above the current share price in Apple. And this stock's up almost 30% this year. And, you know, if it tags on the back of what we've seen out of the other major tech companies.
Dude, SPY's consolidating now?
Whether it was Microsoft. Even Google Alphabet's making some inroads today. But then Netflix
Literally
also.
holding that
So
level.
if we see some more gains in some of these names, this could easily get up there. But remember, we're really at a point of resistance in the chart here for Apple. But this trader thinks that we're going to break out from that near-term resistance point that we got just about 169, 170.
All right. If that happens, party on.
Watch out for that all-time high of 184.
168. We're pretty darn close to the summer high, around 176. Wow. All right.
Might be holding these contracts after hours.
$10. So bulls start buying the party gifts and the memorabilia and the S&P, 4,000 hats. But I wouldn't put them on just your S&P 5,000 hats. But I wouldn't put them on just yet.
You got to get through.
Back to the previous
you got to get through 4,200 before you start putting on any hats.
Yeah,
and that's going to be a big point of resistance.
So I guess that means what? What's the next down hat here that we're going to be at? Numbers are getting big.
Yeah.
All right. Good day here for bulls.
Yep.
Up almost 3% in the NASDAQ. Coming up, we'll talk a few more outliers. It's actually the very successful.
No, I can go to fractions of a penny.
Putting holes in your shoes.
Look at Box D.
A hole in its chart. It's Crocs.
At 0.009. You can always lose money in the stock market. If that was the case, everyone would just buy 1-cent stocks no matter what. It is a low volume today still, isn't it? Yeah, look at that. Interesting. Yeah, not holding that level. 10 cents. I'm ready. What's up with Box D? Recently got delisted. BK. So I think this was when it got delisted. Can you get relisted? Yeah. Yeah, they're just under Chapter 11 right now. Yeah, see, this one got suspended immediately. That's what I was saying. I don't think you always get a heads up in like a week advance. The Box D filed for bankruptcy on 4/3, and then New York Stock Exchange suspended trading immediately. I guess didn't delist it immediately. And commence delisting proceedings. Yeah, I think it got delisted like almost right away. So that's why that news of BY getting delisted and they put a date, to me was kind of good. Gave some securance. That being said, it sold off since then, but at least we have a date now.
Improved margins, which were up to just shy of 54%, higher than the 49% they reported a year ago. But they now expect their fiscal 2023 revenue to be at the low end of analyst forecasts, with adjusted earnings also expected to come in really at the bottom of what the street had been expecting. They are expecting to see their adjusted second quarter operating margin will be lower than the first quarter, coming in around 26% versus the near 28% they saw in the first quarter. Some of the company's problems, though, are also being attributed attributed to their recently acquired brand, which is
They're
Hey
malicious
Dude. They did buy that for
and doing it
about
on
2.5
purpose
billion last
to
February, and it's been really
suck money
seen
out of retail
as a way
and
for them
make
to
a
see some hyper
big money on
growth.
our
So
backs, which would
seen as
end up in
also
lawsuits,
a
which
more
will probably happen
defensive way
anyways.
to offset some
Or
of
there's
these
some
blows
bullish
we've
playing going on in the
seen
background.
with its Crocs namesake brand in North America. We did see
I think the ignorance part and just
this did
crappy and
analysts and
misinformed
really the street did
leadership
acknowledge this,
is
saying
higher
that this
on that list
has
than
been
people think.
really their focus for their growth going forward. So if this is not growing
I think that
anymore,
might be
what does
higher
that mean
than
for the
them
overall brand?
maliciously doing
Hey
it,
Dude,
trying to make a lot of
we've
money
seen
in
constraints in their
bankruptcy.
distribution centers as well as their logistics systems, which Crocs
And
management did acknowledge, and they do expect
you
this
can't
to
buy it
now
on Cash App?
moderate into the rest of the year. But I
That would
think
start to
that
explain, I
concern
guess,
that their
maybe some of
highest
this
growth element is now
like
weakening
barcoding
is
and
what
low
we're
volume we're
focused
starting
on
to see.
today. Although I was reading a Wedbush
They're starting to shut
note
off
that did
buying and
say
stuff.
They think this selling was completely overblown and
That's
perhaps
interesting.
a buying opportunity. Crocs, even
I mean,
with this massive
I don't know
move
if this
to
was
the downside
necessarily
today,
from-
is still up 172%
I don't really believe that that's from
off their 52-week
retail,
low.
but
So while today's
maybe.
move is sizable, they're still outperforming on the year, up 16% since the start of 2023.
Yeah, they got a little breathing room here.
Yeah, that's the thing. Once it's
they remain
OTC,
such a
it's
good
basically
run.
like the
high
5
from
button being shut
183,
off
we're not too
from
far
retail.
off that, considering that,
But as you
know,
see
the
with
stock
Boxed,
was,
Sears,
down
Aldi's,
in the
Revlon, it seems up
50s
50% yesterday. Like,
41
still
points. So,
pumps.
Hey Dude, I guess slowing down a little bit. Hey Dude, I just like saying the name. Hey Dude.
I don't even know what it is. I don't know what those shoes look like.
Oh, I've seen him. Yeah, they're you
Look
probably
at
will
Spy
recognize them,
holding up
actually.
in this
Ever strolled down the
consolidation.
aisle of a underground DSW, which is where they always seem to be.
I
You're gonna see some
gotta
Hey
just
Dudes.
Oh, DSW
channel
doesn't
out
look too
sometimes.
promising either on a chart perspective.
Doesn't, but that
Not
might be part of the problem
be
here.
swayed
All right.
by
Thanks,
chat.
Jenny. Hey Dude. Let's bring in Bob
Or
Jenny,
anyone,
founder,
really.
chief strategist at Path Trading Partners. More of an Allbirds guy.
Hills
I
back
think,
up to VWAP.
Bob, or maybe a Cole Haan guy. I'm putting you at, Bob.
I'm more of a Jordan's Converse kind of
Okay,
guy.
right.
I was going to ask you if Jenny was saying, hey, dude, and then you repeated it
Hey,
19
dude.
times, so I didn't have to ask the question. I've seen those shoes as well, so I think Crocs ought to stop dealing in ugly shoes.
This guy looks different, doesn't he?
I'm just going to start introing your segment with that, Bob. Hey, dude.
This is very bullish. Look at this
Literally,
buy.
Did they look for the next ugly
Might get a new
shoe
high
and
before
hey,
close.
dudes, and that's what they decided to go with.
Fair enough. Hey, one man's ugly shoe is another man's comfort
Fine.
walk.
Goes the 10-year average down to
But,
40?
I hear you. Okay. All right. So let's talk some market action here.
Sounds
Bob.
pretty good.
Are the Bulls?
That's your overall
we're
position?
talking
That's
shoes
dope.
Here. Are they wearing the pants?
All right, dude, look. One of the things I've noticed lately, this feels a little to me, and this may be...
You guys hear that
you may
squall
laugh
coming
at this
through?
call next week, but this feels like a last gasp on the way up today. I think the response by the market is good. I think what the NASDAQ is doing is correct, but I can't quit staring at volume figures. I mean, today's volume is 20% lower than yesterday on a down day. It's 13% lower than Tuesday's big down move. Volume has not confirmed very many up moves in the last 10 days to 2 weeks at all. The volume has all been to the downside. Now that may turn around after today's move. Today doesn't feel like quite a breakout. I'm in the same camp that we need to get quite a bit higher before you view this as a breakout, as opposed to just a normal sort of back and fill. The economy, the GDP figures to me were much more concerning when you put them in the context of that quarter-over-quarter price surprise that we got than the earnings.
3 standard deviations on the
which kind of
profit.
still pulls us
Well
into
done.
this sort
Well
of
done.
poor depth.
Still buying
overall,
Daisy
where the
trade.
market cap weighted
That's weird they would
indexes
shut
like
off so
the
early.
NASDAQ
Those are just those.
and the S&P, of course,
Those
are
are
going to be dragged
like not real
higher
brokerages.
when the biggest stocks in those indices do well on the earnings front.
They're not.
Okay,
They're
so you're up,
most likely not buying anything
full
on the
believer
market.
just yet. What role does
They're just
the
giving you
economic
numbers on a
data,
screen.
Play, Bob, tomorrow
Cash App.
morning with inflation?
Robinhood's like
I mean,
the
if
nicest
that's
version
not
of that.
hot, then what could stop
what's the other
this
one?
rally?
Well, I think you have to look at
All those
it as
sketchy
to what
ones
was priced in. The Fed, I think, is almost
that are
becoming
an
a
app that
background story now to
look
whether
like
it's
it's a
going to be a
game.
recession or not. I think it is, and how deep that recession is going to be. And I don't think
If it's not
equity
really
investors
confusing
should
and
be
super
scared of
cumbersome
recession
and
at
terrible
all.
UI,
Stocks tend to
it's
go
probably not a real
up
stock you're buying.
1/3 to halfway through a recession anyway. So I don't think we're in one. We might be going into one, which means the stocks may
The
not
storms
have completed their
of
bottom
a short squeeze are coming for BBY. I
But
can
in
hear
the
it.
past, when you go into a recession, stocks tend to bottom after the recession's already started. Stocks also tend to bottom after the
Push what bid to
inversion
their mailing list?
has gone away, and we've gone back to a
Who
normal
pushed
steep
what
curve.
to
There's
what
nothing
mailing
very
list?
steep. We just have to get the
Oh,
threes,
sorry, I didn't
tens,
see
and
that
the twos,
message.
tens back to
Go back to the
positive,
turn, I
so
can't
that
square it with the
stocks
tag
can
control is
bottom.
not
Those
trade.
are historically, those hit at a 100% rate.
Oh, they knew it'd get
historically.
clicks,
Doesn't mean it's
man.
going to
All the
happen
hype on
again.
BBY.
Now, from that perspective,
You know, it's a promotion for
a soft
eToro.
landing, which I personally think is the least possible. I mean, the Fed's never engineered one. They did this time. That would be the question. So PCE becomes important in the context of how does it relate to the GDP we saw today with
this
the price
consolidation
index
up here.
rise? The GDP combination with the quarter-over-quarter price index rise shows stagflation, not recession. Now, again, we don't have a negative GDP, 1.1% still positive growth, but a rising price index on both the headline and the core, quarter over quarter, not a very good sign.
I hear you. It's sluggish, and inflation seems to still be lingering around intolerable levels, but the market doesn't seem like the market doesn't seem like it thinks the Fed has the
we're probably going to get a new high here.
about it at this point beyond one more quarter.
We'll blow off the
basis
top.
Point.
10 minutes.
However, when we balance that next to
Dude, look at that candle.
conversation,
If it really doesn't
where
wick
do
it
the
bigger than
earnings
that
fit
in a
in,
day.
Bob? I mean, these companies are being rewarded, and there's a lot of cuts happening.
I guess this day we didn't.
Does that add to a recession possibility, or does the stock market rallying in a way kind of affect that potential outcome by the wealth effect?
So they're not